fundamental stock talk. Stay tuned. Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good Monday morning. Well, Dharmesh Kant, Head of Research at Chola Securities, joins us on the show. Hi, Dharmesh. Good morning. Hope you had a good weekend. Well, Mr. Trump has been doing the flip-flop, but we've got earnings to look at out here. So I wanted to ask you about the top two earnings. ICICI Bank and HDFC Bank, both of them delivered their numbers. HDFC Bank, well, a little bit mixed. While ICICI Bank, the numbers look quite good, right? What's your view first on these two large names?
Yeah, good morning, Nigel. Thanks for having me for the show and for the show. And Mr. Trump is keeping the weekend very excited, so we all happy for that. Yeah, the earnings reported by both the banks were pretty much in line. I mean, ICICI Bank was a beat definitely, and first on HDFC Bank, it was a more of a neutral kind of earning. The problem out there has been the retail deposit, retail loan growth. It's been 6.5%, and they have been, failing to get that at least near the double-digit mark, but that's the problem out there. 53% of the book is through the retail loan growth. So unless that picks up, the ROEs are not going to improve above 2% mark, and that would be a overhang on HDFC Bank. So it will continue to see selling pressure on upsides. ICICI Bank has been consistent in reporting a very good set of numbers. Last quarter, because of provisioning, there was a hit on the profitability. Otherwise, the loan growth were very much in place. And this time around, their retail book grew by around 9.5%, far better than, HDFC Bank if you compare directly out there. Overall advances growth was very good, and the highlight. A surprise package was lower provisioning across all the three banks, which is HDFC, ICICI, or Yes Bank, and that tells you about the positive momentum in the economy, which was there before this Iran war fiasco took place. So that provisioning, we thought that most of the banks will resort to pre-loading of that, but that. They have not done. They have not. They have waited. They are waiting for Q1 to pan out. And as of now, the commentary suggests that there's not pain being there in the system for them to advance the provisioning. So that's a good point. ICICI Bank, I think, should merit attention out there. The stock prices has not done anything meaningful in the last 5-6 months, and here it should be the top pick in the banking space. Valuation wise, is comfortably placed. It's around 1.7 times price to book as per our estimates, and it can re-rate itself to 2.1% going forward. Management did said that the gap between the loan growth and deposit growth going forward is likely to narrow down, and the cost to income ratio and credit cost all are in place. So a thumbs up on ICICI Bank, and definitely I think 10, 15% kind of a move from here in next 2, 3 months, if the market remains stable, is likely to be on the cards.
Dharmesh, Jio Financials, what is the read on that? The NII growth looks good at 29%, but because the company has been making so many investments, it's still in an expansion phase. The pre-provision operating profit has seen a decline of 13%. Profits are down 14%. I'm sure at some point, once the company gains scale, the operating leverage kicks in. But for now, at least, the profits are down. I mean, what's the overall read on this?
Yeah, Rima, good morning. I mean, overall, it's a long haul kind of a call as an investment bet if one is willing to take out there, because a lot of competition is there into the system. And almost every financial company, when they came out with the business update, one thing was very clear, that the credit growth was on the higher side of the curve and it's inching higher. And Jio Financial also benefited from there. So as of now, valuation wise, it's very difficult to give a valuation multiple to that, because it's in the expansionary and scalable scale. So if somebody is willing to wait for say 2, 3 years, given the reliance part and the pedigree behind it, we do think they would be able to scale up into a very dominant business model. So from that perspective, it's a buy. But you have to be patient and wait for 3 years before the size comes into play, and the matrices can be evaluated for the valuation multiples.
Got it. Okay, all right. Dharmesh, I had spoken to Mr. K.M. Birla on Friday. He had a press conference. And, he sounded very gung-ho with regard to the tragedy of the cement industry from here on, particularly for UltraTech Cement. To be fair, in the last many years, sometimes we've questioned the group's actions. We've also seen a new entrant coming in, then everyone said it's game over for UltraTech Cement. But they command very premium multiples. And going by what you're seeing on ground, they continue to move from strength to strength. But the stock isn't very cheap. What's your view at current reckoning? Will you continue to remain optimistic on the stock?
Yeah, Nigel, I just heard you a few minutes back about the trajectory of UltraTech Cement. 36 years, 100 million ton, 7 years, again, 100 million ton, and next 3 years, they would be adding 40 million ton to the capacity. On the ground, the things are pretty much very different. With the UltraTech remains the number one player in spite of all the noise about the other player, coming into in a big way. But they are the ones who determine the price across pan India. Whichever market dealership you speak to, the only one answer comes through is the price determination is done by UltraTech Cement. They are the ones who are dictating the price and the volumes, and others recalibrate themselves based on what the pricing is being offered by UltraTech Cement. They are in the premium segment, and they continue to have the nice market share out there. Valuations, I have been tracking this company for say last 10 years. It has never been cheap, and because of its high growth trajectory, the kind of organic and inorganic growth they are adding to the capacity, it's likely to be there. Again, it's a call. If you are willing to be a patient investor for 3, 4 years, it's a very good value buy. And one has to be, very much bullish on the cement space, which we think is 10%, 7 to 10% kind of a volume growth is doable for next 2, 3 years, given the way the entire macroeconomic tailwind is shaping up. So to that extent, definitely the stock price is corrected. 10-15% by Diwali itself can be there in the offing, but for next 2, 3 years, 15% kind of a price CAGR is expected on UltraTech Cement. So in the cement basket, earlier also I have said UltraTech and Ambuja, the other second big player, remains the topic out there, and for a portfolio by UltraTech should be there in your portfolio.
All right. We'll just come back in just a bit, Dharmesh. We'll take a break. We also have the management of Zen Technologies speaking to us on business outlook and, of course, all the developments we've seen. So Ashok Atluri will be with us on the other side. Stay tuned.
Welcome back. Zen Tech is the first management on our radar now. The company received a license from the government for manufacturing key air defense cannons. We're now joined by Ashok Atluri, Chairman Managing Director of the company, and the three focus points that we'd like to discuss with him: the opportunity from this, the export outlook, and the targets for FY27. Thank you very much, sir, for joining in. This is Rima here. Now, you secured the Arms Act license for rapid-fire cannons, a government license basically to manufacture 12.7 mm, 23 mm, 30 mm, and 40 mm cannons. Now, this seems to be a pretty big thing for the company, right? You were into simulators, training business, and now you will be manufacturing these cannons. What's the production timeline? When does the production begin? When will you be able to start participating in tenders? And what's the investment that you've lined up?
So, good morning, everyone. And we will be, the production we expect to start in FY27 and 28. That is our expectation. And the capex in this, the R&D has come to a certain stage, and we expect when we actually manufacture, we will not be setting up the manufacturing facility majorly, except for the process that we have followed earlier, do the critical components within the company, and manufacture the mass of the production outside. So we are having tie-ups in place. We will be having tie-ups in place wherever there are gaps. But the point will be that it will not be very capex heavy. But these again, one of the questions you ask is, why did we get into this? We have been in anti-drone systems forever, and these actually fill in a very, very important gap. Post-Iran war, now we know that it is going to be the kind of drones that are going to come into the country where war happens, the Shahid kind of drones. How do you neutralize him at multiple levels, whether it is not only at the, land, but even in sea, even at air defense bases. These are the exact kind of weapon that will be required. 12.7, and 20 mm, 23 mm is a legacy weapon, but it's being used and needs upgradation, and of course, 30 mm and 40 mm. So these are the things that we are focusing on. And I think these are, even though they come up as a very, very good synergy item for the existing product, what we now know is that they're independently platformed by themselves. For example, a petrol naval craft, they will have a weapon system that is, independently operates, just because we have the remote control weapon station. They can be completely automated with AI, and they can be kept there, and they can operate without any human intervention. I think overall, all these weapon systems, in addition to being synergistic with our existing portfolio, they're also independently going to create a strong revenue lines in the future.
All right. Hi, Mr. Atluri. Over the last 7-8 years, we have seen you move from a simulator business to the anti-drone business and now into hardware manufacturing. So you have come a long way. I remember, explaining this company at a 15th of what the current market capitalization is. That said, do you think now you're pivoting from a more software-focused company into hardcore hardware manufacturing? Will that be the way you're looking at it? Will that be a balance you're looking to maintain between the two?
So I think the hardware will be an integral part of our future growth. As you can see from the licenses, anti-drone system itself is a very hardware-intensive product. And at the same time, while the software is also becoming very, very important for a simple reason that, with AI, it can really go to the next level. It can really improve itself, learn, and become much more effective versus just being a human in the loop. I think, yeah. So your insight is right that we have started moving to a bit to the hardware, and they will form an integral part of our future strategy.
Will move beyond cannons?
I mean, as of now, this is what the plan is. But definitely, let us see how future outlook is. But we again, the thing is, as a company, our strategy has been, how do we make India and its allies unbeatable in war? That is the thing.
Mr. Atluri, hi.
Yeah,
no, absolutely. Morning, sir. Sorry, just a basic question. These cannons are all they're all aimed at, they're all anti-drone?
No. They are anti-drone. They have been there for much time, but the armed forces have come to a conclusion that these kind of weapons will be very effective against drones, and they have been used against drones in the recent Israel-Iran war. and they have been, especially in UAE, and they have found this to be useful. And so I think there is a demand not only in India but even in export market about.
Would you say this is a direct consequence of what we've seen happen in the Middle East now?
So, this, of course, the weapon was applied long time back, but there are a lot of improvement, the thinking changed post Israel-Iran war, where everybody is thinking about, that the drones will determine most of the outcome.
So
Especially for a country, I think drones are going to, and you need a very, very strong drone defense system. And Zen has been leading in anti-drone solutions, and this is definitely integral.
You're saying these weapon systems have been used in the GCC to shoot off drones. I mean, basically take
Absolutely.
drones off.
Some of them have been used. Yes.
Some of them have been. And who was making them, sir? I mean, here. These systems?
In GC, you have in the GCC?
Yeah, I don't know. In India, was there anybody else making it? Or
in India, I'm not so sure who's making it, but some of the weapons like 30 mm, nobody is making. We know that for sure, and 23 mm is an imported system. So we will be indigenizing this in a very significant manner, and we will be, we'll be I think, to my knowledge, we will be the first company to do these some of the categories in this.
what is the size of the order, sir? And the size of the opportunity?
There is no size of the order. We don't have any order in place. These are the things that will be integrated with along and supplied along with the anti-drone systems, and later as independent platforms. So opportunity size, I would say it is at least a couple of $1 billion.
Sir, and the recent tenders in this particular space, what would be the size?
In this, again, the anti-drone systems we have, anti-drone and simulator, the total order book is about 1,400 plus crores. So that order book continues to be there, and we expect some more orders to come, as indicated to you earlier, that, or some order books are in the anvil and they may come through.
Okay. So generally one would assume hardware manufacturing has typically lower gross margins than software and, simulators. And plus, in this case, you're saying that there will be partnerships. What are the kind of margins you could enjoy on this?
The thing is, we have a, aspiration that it should be EBITDA of 35%. And we are reasonably sure that if you add value and we are able to supply at a price cheaper than what the foreign suppliers give, we should be able to sustain the 35% EBITDA margin. And, again, these are not made in India. We have to compete with foreign players. So we think the margins, even if it is hardware, will continue to be reasonably well.
Okay, and what's the split that you anticipate going ahead, say by the end of FY28 or FY29, between your simulators, anti-drone and hardware systems?
So I think, I would say that it could be 50-50 between simulators and, anti-drone and hardware systems. But again, I may be wrong in this. Anti-drone systems and hardware may be may become much bigger. Given the, Israel-Iran war, two things have happened. One thing is, all the countries now know that the war may come to them at any point of time, so they need to be prepared. So training and simulators have become very important. Second is the main mode of attack are the drones. So they need the anti-drone systems to defend themselves along with the hardware platform.
Got it.
I think we are at the sweet spot at this point.
All right. Very quickly, with regard to the cumulative revenue number, you had scaled that back a little bit, I think from around 6,000 crores to around 4,000 crores. Could you tell us what is the updated number? And when you talk about cumulative revenue, you're referring till which year?
So, we have been saying only one thing, that, next 2 years cumulatively, we will do 4,000 crores, and we still feel confident about that.
Next 2 years?
Yeah, that's right. Next.
Got it. All right, Mr. Atluri, we can't, push you a little bit too much on numbers because you're in silent period. But congratulations on this development. And we look forward to chatting up with you when you disclose your Q4 numbers and give us an outlook for FY27. Have a good day.
Thank you.
Well, let's hop across to Hormuz. He's joining to tell us all the big movers on Friday and some of them that were backed by delivery-based volumes. Hormuz, take it away.
Morning, Nigel. So delivery-based buying result reactions. There was a lot moving in the broader markets on Friday. Angel One is one such name. The stock was up 10% on Friday. The biggest single-day gain and volumes that the stock saw since October of 2024. Over 8 crore shares were traded on Friday. The 20-day average is just over 1 crore shares. And 17.5% of those were marked for delivery. So which means that around 1.5 crore shares were marked for delivery. The 20-day average being just around about 35 lakh shares. It was the third most traded stock on the Nifty 500 on Friday, and ever since the stock has turned ex-stock split, which is on the 26th of February, just before the US-Iran war broke out, the stock is up 30% since then. Shipping Corporation of India was one more name that did well on Friday. In fact, it has done well all month long. It was the 9th straight day of gains for the stock, and the volumes on Friday were more than double that of Thursday. The stock was up 14% on Thursday, gained another 5.5 on Friday. 10 crore shares were traded, 20-day average of 52.5 lakh shares, 75 lakh shares marked for delivery. The 20-day average here close to around 14 lakh shares, and the stock is up 40% so far in the month of April. And in fact, it was the most traded stock on the Nifty 500 on Friday, even higher than HDFC Bank. And lastly, Balkrishna Industries did not see any significant price action on Friday, but the delivery percentage was significantly higher. The volumes were the highest in 2 months. 7.5 lakh shares traded, 20-day average of just around 1.5 lakh. The stock had the highest delivery volumes among all Nifty 500 stocks on Friday. 89% of those total shares traded were marked for delivery. So 6.5 lakh shares for delivery, 20-day average of just around 95,000. The stock has gained 10% over the last 1 month and has reversed all the losses for 2026.
All right. Thanks very much, Ormus, for that. Well, list of stocks, interesting ones, which were buzzing on Friday. We'll take a break. We are back with the pre-opening rates. We'll also, of course, have a quick word on the rupee and put the spotlight on the paint space. We've seen some price increases. Amit Purohit will join in on paint stocks on the other side. Okay, welcome back. This 3 minutes to go for the pre-open session to kick off. Let's welcome in our technical experts with what they'd want you to do with regards to trades. Midesh Thakkar of Bonanza Portfolio and Sudarshan Sukhani are with us. Gentlemen, good morning. Good to have both of you here. You know, I was just joking. What if oil and markets were trading over the weekend? What somersaults they'd had to do? Thankfully, none of that. We are basically back where we left off on Friday in some sense because oil prices are about $2-3 away. Sudarshan, you go first. What's the trade and how is it set up?
Yeah, good morning. See, the markets are now very volatile. It's not just a weekend. We are seeing how the gaps are behaving. We've had a very decent rally from 22,200 to the current levels. At this point, we should be taking profits on any long positions in the Nifty and waits for significant corrections of at least 400, 500 points. If that comes, we re-enter as a buyer. If that doesn't come, we do nothing. The markets are no longer tradable for the next few days.
Okay, take some money off the table. That's the call that's coming in from Sudarshan. Unlike what he told us earlier, need to be brave when the markets are going down and you need to ride it. That's what you've done. Then you can take some money going by Sudarshan's advice. Mitesh, what about you? The gift Nifty is actually suggesting a bit of a positive start. And I think the pre-open as well is initiating some positive take. What would you do?
So, good morning, Nigel. I think in the last few days, you maintained a positive bias, saying the first target is around 24,400 and then possibly 24,800 to about 900 zone. In a good case scenario, 25,150. I think that hypothesis still remains. But of course, this will be a market which will be a lot under the influence of news flow, and therefore the rally will not be a smooth or a clean run on the upside. Even last week, I think, we had a very negative gap down opening on Monday and then recovered because the structure was positive on the short-term charts. So, yes, I think, I would agree with that trading should be slightly done in a nimble form. Profit booking should be done. But anything close to about 24,000, if you get it because of any news flow or a gap down opening, I think that would be a buying opportunity. Getting close to 24,800, 900, I would be more in a profit booking zone. And I'm not very sure we'll be able to get past this 24,900, 25,150 zone. So I think around those levels, I would want to exit the majority of the long positions and then even look at possibly emerging shorting scenarios.
Got it. All right, Mitesh, you continue then. Tell us what are the trading picks you have for today?
Stock side, Nigel, I have a buy on, in fact, I have all buy calls today. The first one is a buy on APL Apollo. Now, that's a stock which, doesn't feature very frequently, but on Friday, we had a very positive candlestick breakout with volume. So buy here with the stop at about 2065. Look for a target of around 2190. From the defense names, Cochin Shipyard is something which has caught my attention. That's a buy with a stop below levels of 1530 for targets of 1620 to about 1625. Federal Bank as a banking name has done extremely well, and Federal Bank is a buy with a stop at about 287 for targets of 305. And the final buy call is Indian Hotels. That's a buy with a stop at about 646 for targets of 685.
Sudarshan, what about you?
Well, I have three buys and one sell. Amber is a buy, AMBER, with a stop under 7,700. Infosys is a buy with a stop under 1290. CanBank is a buy with a stop under 142. And ICICI Bank, which essentially you should be looking to short if you are buying other stocks, is a sell with a stop above 1380.
Okay. All right. We'll leave it there. Thanks very much, Sudarshan and Mitesh, for that. Well, I think we can talk about the pain stocks now. Amit Purohit, the Senior Vice President, Elara Securities, is with us. Amit, good morning. Good to have you with us here. Thanks for joining in. Prashant this side. I think the price of oil, I guess, important input for all these companies. Some price increases. Are they with these price increases? Are they mark to market, or you think there is more coming?
Yeah, hi, thanks, Prashant, for having me on the show. Broadly, if you look at from a price increases there, they have been announced as more on a staggered way manner. If you look at how companies are thinking, is basically looking at a stability in the outlook for with respect to the crude price or input material. And accordingly, the price increase is being taken. So first it started off with enamels, then to water-based paints, and now back to enamels, considering that the sustained elevated levels of crude that we are seeing, plus the rupee depreciation that is also have an important point.
Okay. Okay. So for now, this should be enough to absorb the hit.
So that's a difficult one, but I mean, because the volatility is pretty high, If you look at an aggregate level, I think a double-digit price increase is what we think that would be required. At this point of time, considering the entire price increase that the companies have taken, it is, if I look at the leader like Asian Paints, that is closer to double-digit, plus or minus 1-2%. So broadly, to that extent, we are not aware on the chemical components and the derivatives how the inflation is playing out in that. We're just looking at crude as a base to make an assumption on this. But a low double-digit price increase is what is warranted, and I think we are closer to that.
On the demand side, how are things? How at least just feedback over the last actually since late February, because decorative paints is one thing. On commercial side, we've been hearing that because of the LPG issue, lots of paint shops have been shut down, and LPG is a requirement. So just, I mean, have you seen that show up in a meaningful way from your channel checks?
So, I mean, if you look at smaller players per se, who are manufacturers of paint, LPG usage may not be, is not what we have kind of gathered, but more importantly, it is the availability of the input material, because smaller players typically buy it from.
Sorry, I don't mean paint companies using LPG to make paint. I'm saying, say, auto shops, right? Where.
Okay.
Yeah. So has demand? Have you looked at that? Has demand gone down there? No, not at all.
No, I don't think so. That's significantly material in that sense. You're talking about the industrial part, and within that, the auto segment, which is largely on the LPG, and some bit of gas usage would be there. But I don't think so that's material to have an impact on the overall aggregate demand. On the demand side, I think, I mean, it will be more to know over the next quarter or two to see how this entire thing has an impact on economy and generally on the consumption trend. That would be a bigger story which may play out. Difficult to point out as of now. As of now, things are looking normal if you look at from a general consumption basket for India as well.
And on account of this low double-digit price hike cumulatively, do you expect an impact on the volume growth? What kind of volume growth do you anticipate for the individual companies?
Yeah, so broadly, we are going with actually a double-digit volume growth. And our assumption is this, that if you look at FY27 versus FY26, there are something which are structural, which are working in favor of the paint companies. One is that this time the summer is normal, unlike last year. The Diwali is a bit delayed at around 8th of November versus 20th of October. Plus wedding days are also higher. So if you look at from a overall tailwinds which are in place, and hence double-digit growth may continue. On the point that the price increase having an impact on consumption, our assessment with paints is that, broadly, the quantity required remains the same for painting. Generally, if there is a significant slowdown in the economy, and hence there could be 1 or 2% impact because of that on the overall volumes. But broadly, I would say that since 60% of it is labor cost and 40% is material cost, whatever price increase that happens broadly doesn't have a significant impact on the consumption, because I mean the consumer is looking for painting her house from a need-based thing, rather than there could be some bit of luxury-based spending on the paints, which may have some effect. But those customers are also on the premium side, unlikely to get impacted because of inflation.
Okay. All right. Amit, I wanted to ask you, in an elevated input cost spike environment, do you think the largest player, that's Asian Paints, actually has the edge, because of their size, their scale as well? Would that be a fair assumption?
Yeah, that's a fair assumption, I would say, because I mean, when we check with local manufacturers, which was I was pointing out to earlier, they are finding it difficult to source their raw material as they buy through traders, versus a large player like Asian Paints, who have seen these cycles. They buy it right from the manufacturing of those, or they make some of the materials in-house. and they may buy some chemicals too, which are smaller players might be buying it at a end product level and then mix it for making paints.
Okay.
So Asian Paints would, I would go with that assumption.
All right, Amit, so in terms of preference, Asian Paints would be top of the pops. If you could run us through the order of preference.
So actually, we have recently upgraded Asian Paints. Our point is that now market share has broadly stabilized. Industry growth trends, hopefully, if this Middle East crisis gets sorted out and the economy remains resilient, the demand environment, at least for FY27, looks slightly better than FY26. Plus, price growth does have a benefit of operating leverage as we see a double-digit revenue growth. Anywhere when there is a double-digit top-line price increase, there is some bit of operating leverage as well. So while we are cognizant of the fact that FY27 would have some pressure on the margin side, FY28, I don't think so. We have any change in our estimates, and hence, if an investor is looking for 1.5 to 2 year perspective, Asian Paints, the stock has corrected for two reasons. One was market share loss, and second was industry growth. I think both are in favor now.
All right, we'll leave it there. Thank you very much for joining us. Good speaking with you. And, see you soon again. 6 minutes to go for market open. Sudarshan is back with us, and so is Mitesh for 9-10 calls. Sudarshan, what do you have?
Can Bank, buy Can Bank with a stop under 142.
Mitesh, what about you?
Along on Federal Bank for targets of 305, 306.
Okay, Can Bank from Sudarshan and Federal from Mitesh coming through as far as 9-10 calls are concerned. IEX should be in focus today, and Vivek is here to tell us why. Vivek, take it away.
Well, that's right. So CERC has released a draft notification on power market regulations, which includes a formal framework as far as market coupling is concerned. CERC has invited stakeholders as well as public feedback by 16th of May 2026. And from the date of the draft notification, within 6 months, you can expect formal notification coming in as far as market coupling is concerned. Now, the key salient point as far as market coupling is concerned is that the price discovery process as well as the market clearing price, which currently is being done on the power exchanges, will now move towards a market coupling operator, and Grid India or Grid Controller of India will now act as the market coupling operator. So the price discovery process shifts over there, which is the key overhang as far as IEX is concerned. Now, the other important point is that market coupling will now not only apply as expected to the day-ahead market, but also real-time market and other market segments will also now face market coupling. So expect a negative reaction on IEX today.
Thank you very much for that,
Right.
Vineet. Sorry.
Rima, just one thing. Vivek, isn't this still in the... I'm sorry, I lost track. This is still in courts, right?
IEX actually approached APTEL. APTEL dismissed the case, saying that they are not the right jurisdiction. But even post-implementation and even post the current process that is being followed by CERC, IEX still has recourse to any form of legal, any form of legal action that they want to take. They can continue to approach APTEL as well as any other higher court that they want to go ahead and stall market coupling.
So they may go, but there's nothing. Nothing is happening right now.
Right now, nothing is happening.
Nothing is happening. Okay, got that. Thanks very much, Vivek, for that. That's IEX in focus. Motilal Oswal has initiated, or actually is out with a note on the T&D, transmission and distribution plays. Power, of course, is the theme. Stocks are, of course, at least one stock is hit an all-time high. That is Adani Power. That is last week. Vinny's here with details. Vinny, morning.
Hi, good morning. So yes, this is a coverage that's coming on the transmission and distribution side. Motilal Oswal is saying that they're maintaining that positive stance here. Capex cycle for T&D players is on. They've continued to make the investments there. They're expecting these transformer players to continue to deliver the strong growth as well that we've seen. In FY26 also, T&D players in the capital goods space have managed to see better growth versus other players. So T&D is a story that they think will continue to see strong growth going forward as well. Apart from that, other key highlights are that they believe transformer manufacturers will also start benefiting from the HVDC projects. So they are higher in terms of value as well. Longer execution period, so visibility comes in on that front. Global demand, that remains strong. So export potential over there is improving. Supply gap for transformers, that is something that will drive the capacity expansion for domestic players. Valuations, yes, they are not cheap any longer. We're seeing an increase that has come in all these stock prices as well. It's not cheap, but they're still positive on some of these names. They've initiated coverage on CG Power, buy rating, target price of 900 rupees. Atlanta Electricals, buy rating, target price of 1,650 rupees. GE were now at T&D, buy rating, target price of 4,750 rupees. They're reiterating their buy rating on Siemens Energy. Target price is 3,700 rupees. And they've upgraded Hitachi Energy to a neutral rating. Target price is 27,000 rupees per share.
That valuations, Vinny, as you said, not cheap. I mean,
Not cheap.
do they have? Do you have a table with the valuations now for these names?
Not as of now, I do not have the valuations, but all of them have seen a very sharp run up in the recent time. All these stocks, whether you look at ABB, Siemens, GE, Nova, so they are on the higher end of the valuation as of now.
Okay, all right. And that's the thing with many of these. But Moti, of course, acknowledging that valuations are high. But I mean, earnings growth, perhaps pickup can happen still. Thanks, Vinny, for that. We've got market open coming up in about a couple of seconds, and we'll have that up for you. 40 points on the Nifty, 140 on the Sensex. And, it's going to be a regular start, nothing dramatic. After all the dramatic and theatrics that we've seen for the last 48 hours, this is a pretty standard 30-40 points higher start. Well, ICICI Bank, Ultratech, just some names that we've put out since the morning. These are stocks with news flow one way or the other. Yes Bank is up there, up on your screen. Jio Financial Services, you'll hear from the management a little later. Bharat Wire Ropes, stock was limit up on Friday. Was it Bharat Wire? It was Thursday. HDFC Bank is the other one. HPCL, IEX. Bharat Wire, beg your pardon, was up 20%. It's up 3.5% this morning. Mastek, Sham Metallics are some of the other names which are coming up with regards to the news flow related reactions. What do we have? First rates come up and then we'll pick it up from there. It's 0.1 on the Sensex. It's kind of red, flat, absolutely flat. 24,327. The Nifty Bank is up about 0.14, so 56,650 or so on the Nifty Bank. Small cap index is down, but down very, very small. And the small cap index will come up on your screen. And there as well, I think, down a little bit. Not very much. So, directionless start. But we'll look at individual stocks. Maybe it's more forceful with regards to news-related stuff. And that'll come up. Heat map on the Nifty. Where are stocks opening up? And that'll give you a quick sense. It's more down than up. ICICI Bank, Trent and Nestle are the top three gainers. The downside, Tata Motors Passenger Vehicle, Jio Finance and Hindalco are stocks which are starting lower on the other end. So 60 points down, 24,300. So it's a flattish sideways open after all the excitement over the last 48 hours. Rima.
Well, the advanced decline ratio has now flipped. We've got more stocks, at least on my screen, I can see more stocks declining compared to the stocks advancing. We're opened up now. It's even on BSE, as you can see, we've got about 1,100 stocks gaining for 1,500 stocks in the red. On the Nifty as well, we've got nearly, I think we've got only 4 stocks which have opened up in the green. 4 or 5 stocks. So basically 45 stocks out of the Nifty 50 have opened up in the red. The cut is now getting deeper. The Nifty is 100 points lower, Sensex down to 60 points. Stocks which are dragging and putting pressure include HDFC Bank. HDFC Bank is under pressure. Reliance Industries is weak, but you can see cuts across the board. So Hindalco is under pressure. Jio Financial Services, where the growth has been very, very impressive, but the company is making so many investments that the profits have been under pressure. Profits for the company in Q4 were down 14%. Eternal is lower by 1.5%. Tata Motors Passenger Vehicles, Eicher Motors, a weakened trade. Interglobe Aviation is getting impacted with Brent crude prices now back above $95 per barrel. Even Asian Paints, although they've taken a tariff price increase, Asian Paints has opened mildly lower. Reliance Industries is also putting pressure on the benchmark today. On the way up, you've got an ICICI Bank holding fort. That's the top gainer on the back of very strong set of numbers. Trent will be considering its maiden bonus on the 22nd of this month. So the street is excited. Bharti Airtel, they've done a very minor price hike in their 3-month plan for 1.5 GB and 2 GB of data. So the overall ARPU impact is not going to be too much. According to analysts, it could be less than 1% because the popular plans are the 1-month plan, the 28-day plan. But these tweaks have happened in the 3-month plan, the 84-day plan. But I guess the direction of a tariff increase in some way is read positively. So Bharti Airtel is holding up in the green. Now Axis Bank, State Bank of India also back in the green. Ultratech Cement, where they've hit that milestone of achieving 200 million tons per annum in terms of commission capacity. That's the stock. Now Trent is the top gainer. The Nifty is now moderating its losses. In the red, but not a whole lot.
Well, that's right, Rima. Lloyd Group has bought 5% stake in Bharat Wire Ropes. So in a couple of trading sessions, the stock has done more than 20. It's done around 35%, in fact, in terms of a move. So big move, 200 to around 240 rupees. Bharat Wire Ropes should come up for you on the screen. A stock that has been a big underperformer from the recent peak. Bajaj Consumer, the stock has been a big outperformer the last year or so. They came out with a set of numbers. The street liked it on Friday. Today, it's seeing some follow-through buying. So big move out there. And while we're fixated on ICICI Bank as well as HDFC Bank, Yes Bank, actually, the reaction out there is quite favorable. That stock, in fact, is up and about, it's up closer to 1.5%, cooled off a little bit. Mastek, the earnings reaction is actually negative out there. But if we're looking at the top volume stocks, well, SCI, that's up close to around 4%. The stock has moved 45% in this month. Cupid as well, that's up close to around 30% in this month. Volume's very, very large on that name as well. I think Vascon should come up for you. Promoter entity putting in some money at around 40 rupees odd. And I'm not sure whether or not that's reacting, but that's some news flow over the weekend. A big dilution out there. For the time being, more or less flattish. 1 crore warrants is what they've issued. So that one as well comes up for you on the screen. Net, we were down 100 points. We have recovered close to around 60 points from the day's low. And the Nifty Bank is the one that's fighting back now. That's up close to around 40 points. 600 points away from the 200 EMA. You'll want to get closer to that.
Okay, well, what do we have? It's a flat start, right? Absolutely flat start with everything which has happened over the last couple of sessions now. Well, Sandeep Tandon is with us. He's founder and CIO at Quant Mutual Fund. Sandeep, good morning. Great to have you back in the program. Thanks for joining in. So, I know you have a keen eye on sort of global news flow developments, etc. as well. And just incredible, right? All of this back and forth with regards to oil and whether the strait is open, not open. As someone joked online, I think that went viral, that it should be called the Schrodinger's Strait. It's open and closed at the same time. What do you think? Do you believe, Sandeep, that this is... what matters is the direction of travel. Is the direction of travel firmly towards resolution? So the idea is to stay constructive. Sandeep, what's your sense?
See, my sense is that the geopolitical volatility or the narrative which was getting built, I think that has peaked out. And this is what I said in the beginning of the channel. I think in the beginning of the April, we talked about the employed vols of crude has corrected from 190 now closer to 60 mark or 70 marks, okay? Which means market smart people are not factoring that crude has potential to rally from the current level. That is the positioning of the market. That's what behavior analytics is endorsing. With that background, I will say whatever we have seen in crude, maybe it has potential to spike a bit in a very near term. And when I say near term, it could be this month itself. So I think after that, I think it should settle down because none of the countries are in the position to take the world to the next level, irrespective of the statement which they keep on making. And the fact remains that there have been some amount of calm in that area for last many days now. So I think I'm more constructive on equities. We talked about scenario where January to March for India and maybe till April end for global markets it's slightly bad. I think my macro understanding is showing that the worst is behind us. Best is yet to begin. That's the way I describe this phase. And so we'll remain constructive on Indian equity. We think it's a time to deploy, though obviously market has rallied 10-11% in last few days. So which means market has potential to correct and consolidate for maybe another 7 to 10 trading session. Then you see leg up again. So I think the background is more constructive than what was there in the beginning of the year or the beginning of this crisis.
Very near term, you're saying 7 to 10 days, maybe slight sideways to slight correction, possible?
Yeah, possible, because we have rallied a lot, so it has to consolidate.
But so where we are now in that sense, Sandeep, is kind of the upper end now of the range. So since we are here now, you're going to go off a little bit and then come back up again. So broadly, the view is we kind of remain in this trading kind of range?
For time being, yes. But what is more important to understand, earlier biases were negative, now bias is positive, okay? So it will become a less of a nifty game, more on the stock specific game. So we have to focus more on the stock specific opportunity rather than just looking at the broader indices.
Sandeep, hi, morning. This is Reema here. I believe you've made a big, bold call that India is at a turning point and India will start outperforming both on an absolute and on a relative basis. Is that correct? And if you could just take us through the thesis behind this.
Yes. So at the beginning of this 1st April number fact sheet, we talked about the time to capitalize the opportunity, don't capitulate. So we have been seeing India underperforming for last many quarters, okay? And what was the last thing which could have disturbed us was obviously the oil prices or the gas prices, which we are slightly more dependent as compared to other countries. So that was the the worst negative news, which is largely priced in. So maybe from economic perspective, next 1 quarter could be challenging for the corporate world, but we have to understand market is ahead. So we believe a lot of things has already been priced in. So if somebody expect that next quarter will be slightly bad for few companies and then market will react, I think market has already reacted. Rather, we have seen overreaction. That's the reason we are seeing signs of recovery. We have also seen signs of exhaustion in the FII selling, and something similar we have seen in the USD INR as a pair. And see, the biggest worry which I had in the beginning of the year, and your channel also a couple of times have highlighted, the risk of dollar rally, which happened marginally but is unable to sustain beyond 100 levels or so, which means the risk which we were expecting played out partially. It didn't play out up to that extent. And that's the best news for emerging market in India, which means emerging market has currencies have potential to appreciate from the current levels, and dollar, if not collapse completely, but dollar is showing signs of weakness, is a constructive background for global equity, is a constructive background for emerging market and India. And I think the way data points is endorsing, the emerging market has more potential to outperform DM, and within EM space, India has more potential because we have corrected a lot. So it's a money flow analytics and gives me that thesis that money will come back to India. And obviously today, if you make this statement, people are not willing to accept it because we have only seen outflow on month only rising. So obviously people are slightly scared, but data points are endorsing that these are the signs of reversal, these are the signs of exhaustion. We are in the extreme inflection point, and that's the reason we are happy to take a bold call.
All right. Hi, Sandeep. Good morning. Good to see you, Ben. You know, this 2026 so far when you've spoken, you have been bang on, right? Earlier this year, you said global appetite for equities, that's peaking out. We saw a bit of a pullback. Then in March, I think you said the cash that you're sitting on, you'll be looking to deploy. And that's worked out quite well as well. As of now, what are the cash levels you're sitting on? Because I think the number had swelled up a little bit. You'll have liquidated some positions, and then you'll have deployed money. So if you could give us an updated number on that front. And just to clarify, you believe India will outperform, right? Even if the global market's a little bit skittish.
Correct. So by end of March, we were largely deployed, or beginning April, we have deployed. We just left with 3-4% of cash in our whole portfolio. But in last 2 trading sessions, we have increased our cash levels to 7-8% type sort of thing, because we believe there could be small correction and consolidation, and we like to rebuild our exposure again at lower level. That does not mean we are negative from the current level, but sometimes you have to take advantage of the situation and you have to play this volatility theme, which is playing out reasonably well for us. So we like to capitalize that opportunity, but I am largely constructive.
And India outperforms, right?
Yeah.
Yeah, Sandeep, you know, you're a large holder in LIC, have been, right? And insurance has been a big, I think you've been positive broadly. Many, at the start of the year, many believed that this is going to be the year for insurance. And we've been hearing that we perhaps will see, those commissions, and Bima Sugam is back on the table, etc. I mean, the government is very, very keen. We've heard it directly from the finance minister. Mr. Nagaraju has said it, and others have said it, that insurance penetration must go up, which basically means more policies need to get sold in that sense. Just your thoughts, Sandeep, on this area, the sector.
See, prima facie, if I look at not from a very short term or near term perspective as a mutual fund, if I'm looking for long term and medium term, I think we are very constructive. See, three space, whether it's banking, insurance, and I'm saying within the financial space, the asset management company, wealth management, and insurance are a better candidate as compared to the banks itself. Okay, why I'm saying that? Because these are like sunrise industry, and we have seen they're reasonably underowned also, but obviously for the insurance space, the noise level was not good, and we have seen massive correction also in some of these names. I think I'm looking at some opportunity from a longer term perspective, because even you look at in today's context, we are slightly overweight on these sector as compared to manufacturing, given the issues which we are facing on the crude related, raw material, trade related challenges. So it makes a lot of sense to be part of a non-manufacturing company as much as possible. It's not completely possible to do that. And hence we are more skewed. And obviously they have not performed up to our own expectation also. But I think worst is largely priced in. And it's not like they don't have potential. Ultimately the business is very good. We are seeing that insurance penetration is actually rising, and so is the case with asset management. So both asset management and insurance business are very good, meaningful business from a longer term perspective, cash flow driven business, and which is growing. There is no question of any degrowth. Some challenges can be there, some headwinds we have seen. I think we have to live with that and look for this as a buying opportunity rather than getting capitulated.
Sandeep, do you think more money will be made if someone invests in a Nifty ETF right now, or if they invest, say, in a small cap mutual fund or a mid cap mutual fund?
So our big call is also that we have seen worse for small cap. Small cap and nano cap will outperform the broader market. So it makes sense to put in small cap in mutual fund schemes over large cap from the current levels.
And I saw energy on that fact sheet. Do you own ONGC, Sandeep, in the portfolio?
We used to own, but we have exited. Now we don't own anything.
This is recent,
because
or
when we build our position keeping in mind crude. Yeah. But when crude rallied, but both ONGC and Oil India actually didn't participate much. So one of the reason the participation level was low, and we have some challenges because HPCL is a subsidiary. So we thought it's not working that well, and given the view, we were slightly more negative on the crude also, because we believe the cycle is peaking out, so it does not make sense to own these names.
Okay, all right. Sandeep, give us that one big contra call for the remainder of this year.
So I think it's a time to increase your small cap exposure in your portfolio decisively. We have been very bearish right from July 2024. And we were early to talk about India underperformance and risk appetite peaking out. I think that cycle beginning April is bottoming out. Risk appetite cycle is bottoming out. And we have seen capitulative move in the small cap. So select small cap. I'm not saying that you go out and buy everything aggressively. But this is a time to rebuild your exposure small cap in your portfolio rather than getting capitulated.
Okay, final question before we let you go, leading into the next discussion. What about the stock market players? You've seen the exchanges rally, both BSE as well as MCX. The unlisted NSE has actually been left behind. Brokerage firms have rallied. You have wealth management companies as well. How are you playing the stock market play?
So our focus, as I said, is more through asset management company, wealth management company, and up to certain insurance company. We are not playing through broking or exchanges as now, because given the whatever taxation changes and some of the laws which has been changed in last few months, I think it will affect the market volumes. Okay, and which is the case right now. So any change happen, it takes some time, maybe a quarter or two before they stabilize. So we are not negative from a longer term perspective, but we are not very constructive from a very near term perspective, and hence we'll prefer asset management and wealth with a better place over these names.
Okay, all right. Appreciate you joining in, Sandeep. Thanks a lot for giving us that take. Sounding quite positive about the broader markets in particular, and that's something that actually will make a lot of portfolios feel good. Thanks for joining in. Wishing you a good day ahead. We catch up soon. Well, let's focus on Angel One. That company saw good sequential and Y-on-Y growth with EBITDA margin expansion of close to around 400 basis points in quarter four. We're now joined by Mr. Amrish, the group CEO at Angel One, who joins us on the show, and we'll focus on a lot of those talking points. Well, quarter four FY26 numbers, the outlook for 27, the changing macro as well as the regulatory environment and the growth opportunities ahead as well. Well, Amrish, thanks a lot for joining in. It's good to speak to you. Well, you mentioned on the call, that the broking business EBITDA can actually scale maybe to the mid-40s as well, 45% or thereabouts. But the new business burn rate could be approximately 200 to around 200, 300 basis points. By when do you believe that this new business will break even? At what scale? And if you have a time frame?
Yeah, hi, good morning. Thanks again for having me on the show. You mentioned broking and distribution OPMs as we have been guiding. Actually, this year, in fact, we have said that in the beginning of the year, we said it will be between 40 to 45%. And this quarter, the OPM was 44.6, almost 45%. So I think that's already played out. In terms of new businesses, we don't tell you a timeline on it because these are businesses that we want to grow. We don't want to grow them in a rush. We want to grow them responsibly, grow them to a point where they become formidable. But I think in the next few years, you're looking at them, starting to contribute significant portion of our revenue and PAT, and think of like maybe 8 to 10% as the right number there, because the broking business has a very large headroom. Because even as these businesses are growing, remember that India is very, very early in equities. So you're going to see a ton of action there as well. So both businesses will continue.
All right. Amrish, in quarter four FY26, the order run rate, I think, was close to around 7.2 million per day. And that was the highest I think we saw all the way since quarter two FY25. What are you averaging in quarter one? And where's this number settling at, according to you?
Yeah, no, you're right. In fact, so quarter four was about 7.2. March, interestingly, was 7.4 per day run rate in terms of orders. And if you see that from where we were in February back in, I think I talked to some of you back in April last year. And in February, we were sitting at about 5 million orders. And we are going from there to 7.4. So this is like a 48% increase during that time. Quarter four, it's, again, there is lots of things happening. Quarter one next year, again, lots of things are happening right now. So I don't want to predict it, but, I think things generally from a macro perspective, I hope they improve. They're generally looking good. People are making the right set of noises. Every day something goes up and down, but I'm seeing FIIs come back. Last few days they've come back. So I think if macro supports, you can expect things to look brighter from here.
Rish, hi, morning. The jump in Q4, because it includes March, right? And the Middle East thing blew up in late February. Would you imagine bulk of that increase is concentrated on the back of that?
What do you mean? You mean bulk of the increase is March or?
Yeah, I mean, in Jan to March, the big jump happened in March?
No, not really. If you see, right, I mean, March was about 7.4. So March is not totally out of line from the Q4 average, which is about 7.2. So overall, I think what you've seen, I mean, which is why I mentioned the February number, is that what you've seen over the year, that we've acquired the right set of clients, we've had good execution. So you're continuously seeing a good trend in terms of execution and strategy from us.
Yeah. So, this STT hike came into effect on the 1st of April, right? Now, because there has been, as you said, so much is going up and down, there is elevated volatility. Volatility is always good for trading and for, brokers, etc. as well, right? When this situation starts to settle down, I'm not sure, because it's a meaningful increase. On futures, for example, the break-even on futures is now pretty high. Will this impact volumes in a significant way?
From our customers, at least from what I'm seeing, I don't see it impacting in a significant way. And again, especially with Angel One, we have fewer of the futures customers. We do have them, but not as much. We have more cash, F&O, mutual funds, all of that. So I don't see a significant impact on it. Also, what you've seen over the year, and we had said this when the regulations for F&O had come in, is that whenever there is a change like this, the industry and the ecosystem adjusts and says, look, what is the right instrument? What is the right way to invest and trade? So even if there is a blip, it would be a short-lived blip, and again, it sort of starts picking up from there, because the overall India story, as you know, is quite intact. So long term, we are poised to have a tremendous amount of growth, and therefore, I think we see the future being very bright.
In terms of the share, right? Options will be 90. I mean, for industry, options will be 90. Futures will be 10% as a premium turnover.
Look, I think it keeps changing. I think in terms of the challenge is that the way turnover is defined is that for futures it is seen as notional, and for options it is premium. So futures end up contributing more from that perspective. So it's hard to sort of break it out because of how it is measured.
So for you, futures is. I mean, give us a metric. How you said futures is small for you.
Just in terms of revenues and in terms of just orders, futures is small for us. It doesn't impact us as much.
Sorry, futures is small for you.
Well, I don't want to give you a specific. We don't break out specifics.
But futures is small for you, Amrish, is what you're saying.
It is small for us.
Smaller for you. Okay.
Smaller compared to the industry. Yeah. Okay. Because I think what happens is that institutionals and some of the other sort of larger clients, we are retail. So by definition, futures end up being smaller.
Okay. Your cash brokerages also, cash brokerage revenues also decline in Q4. I think it was down about 4% on a quarter-on-quarter basis. You spoke about an expected recovery in April. Has that played out?
Look, April is still, I don't want to predict the future. April is still...
the first 20 days?
Yeah, look, I don't want to sort of talk about the first 20 days, but you should expect a bounce back. Look, what happens in March is a few things happen, right? In general, if you see over the years, in March, our market share in cash goes down because of how the segment that we have, trades and invests. On top of it, I think when you had the kind of March there was from a macro perspective, many investors stay away. So I fully expect, we will, of course, release, as always, monthly, we release our shares. We'll release it in the beginning of May, and you'll see that. I fully expect it to bounce back meaningfully.
About that. You all have also invested about 150 crore rupees in the NBFC business, after which loans against security will be introduced. When does the product go live, and what is the target book size for FY27?
We're not talking about the specific target book size here. The product should go live fairly soon. We're working on it. It's
soon is Q1, soon is Q2 of FY27?
Look, Q1.
Q1, okay. And RBI has also potentially tightened the intraday credit availability. Will this increase your cost of funds, and will you think of passing it on to your customers?
So, look, as far as MTF is concerned, we were not taking funding meaningfully from banks anyway for MTF. So that doesn't impact us at all in terms of cost of funds. In terms of working capital, because there is borrowing that we have from the banks, it'll impact a little bit. But what ends up happening is that, we've got a fantastic CFO and the team there. What ends up happening is that we end up changing where we borrow from, how we borrow, that mix changes. So I don't see, it'll go up maybe a little bit, but I don't see it going up meaningfully to challenge our business or for us to pass on any cost to the customers as far as that is concerned.
Okay, all right. Tell us a little bit, Amrish, about the AI implementation techniques at Angel One. I believe you have initiatives like Ask Angel that's supported by AI-based tools. So a little bit more about this. How much of it is dependent now on AI? How have you all pivoted towards AI?
Look, I'm not the only one saying it, but this is like a wave that is tremendous. And again, I think in short term, the hype is more than what the impact will be in the long term. Ask Angel is phenomenal because I think contextually, depending on where you are in the app, you get a contextual information. For example, if you're looking at the stock details page and you go in there, it starts giving you pills that say, hey, do you want fundamentals, technicals? And then you can dig in and ask any question. If you come from customer support, we are giving you that. And what we are doing is that we are using a mixture of models and we orchestrate it. So that orchestration layer is what is proprietary, and that makes sure that we give people the right, we are giving them the right information, but also we are able to keep the costs minimal in that sense. You can expect this to grow further because I think the big, when customers come in, they're not fully educated on this industry, and us being able to answer their questions really well is important. Now, we are, of course, using AI for building these products. So for building the product itself, we use the AI. Okay. in our code generation, where people are using AI, they're using more than 50% of the code is going through AI. So there's a bunch of initiatives, and we could go on and on, but I know you've got paucity of time, so I'm not giving you a detailed answer.
Got it. All right. Very quickly before we let you go, 3 simple numbers. What's the revenue growth, the margin outlook on a consolidated basis, and profit number, if you could guide us for FY27?
Look, we don't guide on the revenue and PAT numbers, but from a margin perspective, on the broking and distribution side, you should expect the margins to be, beyond 45% range, or that range that we are in. Except I would say, I'll give you the caveat is that wherever we've got an opportunity for growth, we will take that growth, because there's no point long-term short-changing ourselves. But you should think of the current margins as the normalized margins, and from here you should see it growing further.
All right, we'll leave it there. Thank you very much, Ambrish, for that. We'll take a break. We're back. We have the management of Jio Financial Services joining us to talk about their fourth quarter numbers. Stay tuned. Coming up. Welcome back. Jio Financial Services reported strong operating growth with net interest income rising 29% on a year-on-year basis. Profit after tax came in lower due to geopolitical treasury volatility and higher costs. We have Hitesh Sethia, MD and CEO at Jio Financial Services, joining in to take some questions. Hitesh, good morning. Good to have you with us here. Appreciate your time. Let me just start by asking you, and we'll get down to the numbers, etc., in just a bit. But just give us an overview of what all Jio Financial Services is doing, just in terms of the business outlay, and then we will sort of pick up on individual things and maybe go down into financials, etc. Go on.
Sure. Thank you for having me. It's a pleasure to be here. So at Jio Financials, like we've always said, there are 4 areas that consumer needs, and we intend to meet all the 4 needs of consumers, which is need to borrow, need to invest, need to transact, and need to protect. So the need to borrow is clearly the lending business. Need to invest is our asset management, wealth management, and soon to come stockbroking business. Need to protect is our insurance, which is today insurance broking and reinsurance, and soon to come life and general insurance. And need to protect is our payment bank and payment solution. So that's really the landscape of the business. Overlaying all this is a marketplace, which is our agentic neural marketplace, which we had launched in just about a few weeks ago.
Okay. So there's lending, there's insurance,
asset management,
and payments as well, right?
Payment solutions, yeah, payment bank, payment solutions.
Okay. Now give us a sense of what is happening in each of the segments. What happened in each of the segments, and the growth that you've seen, and how each of these is being built out.
Absolutely. So NBFC has been our growth engine for this year, and that, as we have reported, has got a 25,700 crores plus of assets under management, primarily focused on secured lending. That growth has been from about 10,000 crores a year ago and practically zero about 2 years ago, because we got demerged around that time. So that growth has been fantastic. It's been primarily across mortgages, loan against securities, and a bunch of corporate lending solutions that we offer for our customers. So that's on the lending bit. And as far as our payment service company is concerned, so we have about 50,000 crores plus of transaction processing volume. In fact, one of the key areas of focus there for us has been unit level economics and making sure that while we add value to customers, we also add value to shareholders. Therefore, we've been very focused on bottom line. Our take rates or margins in that business has been about 12 basis points. The payment bank has been a fantastic growth story. We have about 3.7 million customers and about 540 crores plus of deposits. Again, an amazing growth over the last year. So we are quite pleased with that growth. 350,000 BC points, business correspondent points, as we call it, across our sort of own network and corporate BC network. And the AMC has grown. Started business 9 months ago. Average assets under management is in excess of 16,000 crores. So these are the engines that are firing right now.
Hitesh, hi, morning. I understand that your expenses are front-loading because you're building infrastructure for the next decade. But if you just look at the numbers, right, the NII growth is 29% year-on-year, but the pre-provisioning operating profit, all the profits are down. When do you think your expenses will start normalizing relative to your revenue?
So just on that point, it's a very good question. See, our expenses is more or less, I would say, a bit of a function of accounting as well. Certainly that we are investing in our for the future. Jio Payment Bank particularly was actually accounted for as an associate last year because it was a joint venture with State Bank. So that came in below the PPOP line. Whereas this year, after we had acquired the stake of Jio Payment Bank in June of 25, all the line items started to consolidate from the top line to expenses. Had we adjusted for that like-to-like basis, our PPOP had actually increased by about 8 to 9%. So we are very mindful of operating profit and making sure that at unit economics, every business scales, they deliver operating bottom line for the shareholders.
Okay, so say for FY27, what could the NII growth or the pre-provisioning PPOP look like? You said, yeah, go ahead.
So we've been very cautious in terms of giving forward guidances. All I can say here is that we've grown from 10,000 to 25,700 crores. Now, thankfully, capital is not a constraint at this stage for us. We will certainly leverage the balance sheet more. Right now, our leverage is in the 3 handle for the NBFC. Clearly, NBFCs tend to leverage 3 to 4x or 4 to 5x rather at growth stage. So we clearly expect robust growth in absolute PPOP. We expect robust growth in our top line as well. And parallelly, we are also investing in businesses, the wealth management, the broking, the insurance businesses. So there will be an investment phase in parallel in some of the businesses as well.
All right. Hi, Hitesh. Good to speak to you. Hitesh, Jio, BlackRock, AMC, that's ramped up to a little over 15,000 crores. That's in a decent period of time. What's the strategy to scale this business meaningfully into a revenue contributor?
I know it's an amazing, it's a good question. See, Jio BlackRock, as you have rightly said, started about 9 months ago. We started with a suite of institutional products, the cash, money market, and liquid funds. And thereafter, we've launched over close to a dozen, I would say, retail products. The product pipeline is very strong. We have also announced that we are getting into the gift city. We've got some set of approvals already in there. We are launching our SIF product in due course. So clearly expanding the product suite in the coming year is one clear agenda. Expanding the distribution suite is another, or distribution channels is another agenda that we'll pursue. And we expect the rapid growth to continue in line with the market.
Got that. On insurance, Hitesh, right? That is one area where there is really top-down focus from the government as well to increase penetration in a big way. And we've been reporting on how, there's all kinds of efforts. There's Bima Sugam back on the table and lots of stuff happening. What is the plan, the roadmap, if you can give us some sense?
No, wonderful. I think, we firmly believe that insurance is a very under-penetrated sector in India. I mean, insurance penetration is about 4% at a country level, whereas parallel or peer economies are at 7%, and developed economies are in double digits. So we have a long runway to go in terms of sheer market expansion itself. We've already launched our reinsurance business. Through our agentic neural marketplace, we are able to, and through our insurance broking, we are able to bring about 80 plus policies across the spectrum, general, life, PNC, term policies, etc., to our customers. In July last year, we had announced that we had entered into a non-binding agreement with Allianz to get into underwriting both on the life and general side. Work is underway, and hopefully, once we reach certain milestones, we'll be happy to report that back to you. But insurance
when will we see products on life in general?
Once we have our binding agreements in place with Allianz, I think thereafter the regulatory process will have to start. Once we get our license, that's when we will be able to launch out.
And how? I mean, just broadly, we're not going to hold you to it. But what's your assessment? How long will that take?
Teams are working towards it, so we expect it to be soon.
And you said that the NBFC business was the growth driver. Now, last year that grew, I think the AUM there grew 150%. Will it continue to be in this phase of expansion? And give us a sense of the underlying asset quality, because there is unsecured lending also taking place.
So we have not yet forayed into unsecured lending. Our product suite right now is all secured lending. So it's loan against property, loan against shares, loan against mutual funds, mortgages, and a set of supply chain finance corporate lending solutions. So by and large, we are in the, I would say, secured lending segment itself. Growth, again, we are nascent. We have just started the growth cycle. So we believe that robust growth will continue in the coming financial year. And like I mentioned, we will up the leverage. Capital is, we believe, not a constraint for us, and therefore, really market opportunities also there in front of us. So we believe we will grow at rapid pace in the coming years.
And how do you all broadly think about margins, the net interest margins in your NBFC business? Because you are competing with very large players like a Bajaj Finance.
Yeah, so good question. Again, see, the advantage we have is being a AAA rated entity, and we've reported our cost of funds. We closed the year at 7% cost of funds, which we believe is the best in the industry compared to all other AAA rated peers. Clearly, with leverage going, the net interest margins will come down. I mean, that's simple math. But that is necessary fuel for growth. So we believe that we will continue to grow absolute margins. We will continue to grow absolute profitable business, and asset quality so far has been very stable for us. Given that we are at the, I would say, conservative end of the risk spectrum, given nascent stage of our business.
This is one, and this is slightly forward-looking question, Hitesh, but there is a 4%, a rule, right? Insurance companies operating here in India have to pay, I think 4% of the sum assured to Indian companies. I think GIC used to. Would you be part of this as well?
So again, we'll have to follow the law of the land. So once we get into primary insurances, clearly every primary insurer has to reinsure its portfolio. And therefore, if the waterfall mechanism of the country certainly requires a certain percentage to be given to national insurance reinsurers, that will be followed by all entities, and we will have to follow that.
Okay. This is basically it says Indian reinsurers.
Yes. Yes.
Okay. Got that. But of course, I mean, as you said, this is subject to the binding agreement and all of that's taking place.
And process and everything. Yeah.
Work in progress. Well, we wish you all the best of luck. Thank you very much for joining us here on CNBC TV 18. Thank you for your time. I think we'll just take note of what's happening on the market. The screen is indicating advanced decline is negative, a little over 2:1 on the downside. So 2 down for every 1 stock higher, not very much on the Nifty at all. 17, 18 points down. You had Sandeep Tandon of Quant just a little while back essentially saying that maybe next 7-10 days, according to him, perhaps the market is sideways to slightly lower. But of course, I mean, he is positive. He thinks oil's going to be more well-behaved from here. He's not expecting any big spikes, etc. We'll see. So for now, 78,520 on the Sensex. Again, a flattish. Maybe the Nifty Bank is the one which is doing much better, about 200 points on the Nifty Bank at this stage. If you can pull up Mastek very quickly and look at what's happening there. There is some news flow coming through on Mastek. Is down about 3.5%. Rima, anything?
Well, it's the numbers. And the company's top-line growth has been slow, just about 0.2% constant currency revenue growth in Q4. For the full year, the company's done about a 3% growth. On account of the wage hike impact, margins have been lower this quarter, 16.1%. So even if there was a rupee depreciation benefit, it's not showed up yet in the margins. And profits for the company are down about 2%. But this is also a very big week in terms of IT earnings. So tomorrow you've got HCL Tech reporting numbers. Then you've got Infosys on Thursday and a slew of mid-cap earnings like a Persistent, Tata Elxsi, etc. reporting numbers. So it's a big week. And we'll get a clearer picture by the end of this.
All right. Mastek reacting to its numbers and IEX reacting to news flow over the weekend. That explains why the stock is down. Vivek joins us to help us refresh what's going on there. Vivek?
Well, that's right. So over the weekend, like we highlighted, just prior to market open, CRC has released a draft as far as power market regulations are concerned. And this includes a formal framework as far as the implementation of market coupling is concerned. CRC has invited both stakeholder as well as public feedback by 16th of May 2026 and expect detailed procedures of market coupling to be issued within 6 months of the draft notification. Now, what are the key highlights and what exactly is impacting the share price of IEX? Number one, Grid India will now act as the MCO or the market coupling operator, which basically means Grid India will be collating all of the bids that will be placed across all of the 3 power market exchanges, and they will decide the market clearing price as far as bids as well as trades are concerned. Now, this is the key overhang as far as IEX is concerned, because up till now, IEX and the power exchanges were the ones that were actually going ahead and deciding the clearing price depending on the bids that they were collating. Now, along with that, post the implementation of market coupling, power exchanges will continue to collect bids, but they will not determine the prices post-coupling, which basically means that the kind of monopoly that IEX was sharing or enjoying in terms of significant market share, being one of the most prominent players, could go away, which is now acting as an overhang as far as IEX is concerned. Separately, Axis Capital also highlights that there could be a capping as far as the kind of brokerage that IEX enjoys However, this is an older news that they have written about, but despite that, that too is acting as an additional overhang as far as IEX is concerned.
Thank you very much for that. We will get into a break. On the other side, we'll talk commodities with Manisha. Welcome back. Markets are absolutely flat, but crude prices have been inching up. And now as we speak, Brent crude is at $95.5 per barrel. Manisha is here to tell us what exactly is happening to crude and the news flow surrounding it. Manisha.
Well, thank you so much for that. Yes, it's an 8% of a gain that we started a new week in the Asian markets therein. And remember, this comes in on the back of 10 to 11% of a decline on Friday. Well, there also have been reports on how after that conversation on Friday that Strait of Hormuz is open, we saw nearly 20 ships pass by on Saturday via Strait of Hormuz, carrying various things from crude oil to LNG, metals, fertilizers. This is as per the Clipper data. And this is the highest ship passage that we've seen since 1st of March. 20 ships in a day is what we haven't seen in last 60 days together. Well, interestingly, but now we're back about at geopolitical tensions on the Strait of Hormuz. Those seem to be flaring yet again in the Middle East there. U.S. has said that the Navy has fired and seized Iranian flag cargo vessels in Gulf of Oman. You also have statements coming in from Iran targeting ships, reasserting its control over Strait of Hormuz. U.S. negotiations heading in for a second round in Pakistan today is something that the street will watch out for. But there has been a huge impact on crude and products in last 52 days of this West Asia conflict. If you look at the overall crude itself, well, 500 million barrels of crude and condensate has been lost in 50 days. This is the data coming in from Kepler. It also says that nearly 80 oil and gas facilities have been damaged because of this war, and the Gulf Arab countries have lost nearly 8 million barrels per day of a crude in all of month of March there. Also, when you look at the global onshore crude inventories, they have seen a sharp decline as well, down by nearly 45 million barrels in the month of April so far. Now, when you look at the jet oil exports from the Middle East, from various countries, whether it has been about Saudi Arabia, Qatar, UAE, Kuwait, Bahrain, Oman, etc., has seen a very sharp decline. So while it was at 19.6 million barrels per day in the month of March, in the month of Feb rather, March and April seen it come down to 4.1 million. So a very sharp decline from where we were in Feb and where we stand in March and April therein. But apart from that, US renewing waiver on sanctioned Russian oil is a bit of a sign that the markets are looking at. So overall, with this waiver that we've seen last for now 2 months now, 200 million barrels could be used from on-sea, that's the sanctioned Russian crude oil that seems to be lying around. So that is where the markets are taking a bit of a cue from. But the other very important thing is the crude oil price movement itself. And we do understand that the CFTC is looking at that. There have been 3 instances where we have seen price move a lot. So one was 17th of April, which was Friday. The shorts worth $760 million was created on Brent futures. Iran announced that the Strait of Hormuz was open. And even before this announcement came in, minutes before that, this is the kind of short position that we saw into the markets. And that led to an 11% decline in crude prices. Apart from 17th of April, it has been also the case on 7th of April that we saw shorts being created here as well, worth 950 million barrel, 50 million in case of Brent there. The announcement on 7th April was that the US and Iran are announcing a 2-week ceasefire. During this, the crude oil prices fell below $100 a barrel. And take a step back. Before that, 23rd of March, investors sold 500 million in case of oil futures there. When at that point in time, the announcements that was that the US president would delay attack on Iran's energy infrastructure. The price impact of this was a decline by nearly 15%. So 3 instances which the CFTC is looking at this point in time. Every time before the announcements, shorts were created, and we've seen prices decline anywhere between 10 to 15%.
Okay, all right. We'll see where that investigation goes. But yeah, I mean, pretty stark in terms of the volatility that we've seen, and of course all the allegations swirling around about perhaps people making money off of these moves. Well, let's just get some trading ideas out of the way. And we have Nagaraj Sethi of HDFC Securities with us. Nagaraj, good morning. Good to have you here. Just your, I mean, it's a flattish kind of day, Monday, after all of the news flow volatility over the last 2 days. How would you trade it?
Hi, good morning, Prashant. Yes, market has been very volatile on affecting the geopolitical tensions. The technically market Nifty has bounced back very well. We have seen some 2,000 points of rally from 22,200 to 24,400 as well. I think having moved up very well, that market is likely to cool off from the higher levels. I think 24,400, 500 is going to be the hurdle. And once it breaks above 24,800 is going to be the next stop. In between, we are likely to see some volatility and a sharp movement, consolidation movement within that. That is going to be the range for the market. Overall market breadth remains positive, and we are likely to see market moving higher after the consolidation phase. I have 2 stocks from my side. One is from NLC India, second is from K Fintech. NLC India chartically has witnessed a sharp breakout recently in the last 2 sessions and currently trading higher levels. Overall chart pattern is looking at decisive upside breakout of the last multi-month hurdle. The overall chart pattern and the volume pattern is also going to move further, and I'm expecting this to be a buy candidate. One can look to buy at the current market 314, and immediate target would be around 335. One can place a stop loss at 305. And second one is K Fintech. K Fintech, after forming a bottom reversal, has bounced back very well from the lower levels, currently showing consolidation. The overall chart pattern is indicating an important bottom formation, currently trading around 968. One can look to buy at this point of time. Immediate target would be around 1,015. One can place a stop loss at 935.
Thank you very much for that. Well, the Nifty and the Sensex are flat. Banks are doing very well. The Nifty Bank has moved to the high point of the day, and now not the high point, but it's inched up in the last 30 minutes, and now very close to the 20-day moving average, well above that. It's crossed. Okay, I apologize. It's crossed the 100-day moving average quite comfortably. Got the numbers wrong there. We will slip into a break on that note. We'll come back and talk about banks and the earnings, HDFC Bank and ICICI Bank with Shantanu Chakraborty of BNP Paribas.
Welcome back. We continue with results analysis of the two big banks that announced results over the weekend. ICICI clearly impressed with a 15.8% loan growth and best-in-class margins, 4.32%. HDFC Bank definitely beat markets' profit estimates, but loan growth and margins are still a distance from the bank's own past and from ICICI. Yes Bank too impressed with return to 1% ROA. To analyze bank results and NBFC results that have been and will be announced, that will come later this week, I'm joined by Shantanu Chakraborty, the banking expert from BNP Paribas. Shantanu, good morning and thank you very much indeed for your time. Let me start with the HDFC Bank results. Well, impressive, but margins are still struggling at that 3.38, 3.4% mark. They're not quite able to make a headway even above the 3.5% mark. You still retain a very high target price. That's why I'm asking, what are your thoughts?
Good morning, Lata, and as usual, a pleasure to be here. Yes, you're absolutely right. Look, the entire idea on which we are predicating our positivity on HDFC Bank is the idea that the ROA and ROE of the business is going to get somewhere near its pre-merger levels over a period of 4 to 6 quarters, depending on how fast the CASA cycle works out. So to that extent, that happening is very linearly correlated with what the margin trajectory looks like. Now, if you look at quarter-on-quarter basis, HDFC's margins are down almost 7 basis points, while ICICI is up actually 2 basis points. So HDFC, no doubt, was slightly below our margin expectations. But zoom out a little bit and think about what we were thinking in December and January about the banking sector. And you'll realize despite the cuts in December, we have actually got, banks holding up their margins pretty well, as the liability easing story has really kicked in earnest. I mean, even for HDFC Bank, if you look at the pure cost of funds part of the angle of the entire margin story, you'll realize that that part has played its role. Maybe because of in the last 2 quarters, the corporate loans have picked up a little bit, something to do with extra liquidity carried on the balance sheet as well, that the margin has not panned out the way that the cost of funds story would have otherwise suggested. Having said that, look at the CASA numbers that the bank has been able to deliver and the overall deposit growth number. So the CASA number is 12.5. It's almost 200 basis points, above what even ICICI has been able to deliver. That's a very strong number. And on top of that, you are also seeing deposit mobilization at 14.4%. And this CDR ratio that people worried about in this case is starting to now become non-concern, even with the people who were concerned with it. We were never concerned with it to begin with. So the elements of that margin expansion story remain in place, and which is why, we see the disappointment, we take stock of the disappointment, but we don't think that it derails the fundamental re-rating story, for the bank.
So you retain the target price of 1360, your highest on the street?
Yes, by far, and I have been for a while.
Okay, yes, I agree. Now, HDFC Bank trades at what, some 25% discount to ICICI Bank, depending on, whether if you look at the ROA and things like that. Right. Do you think that will narrow?
So if I strip out the valuation of subsidiaries, and of course, since some of the subsidiaries in both cases are unlisted, there is an element of subjectivity to it. But the variation in opinion on the street on subsidiary valuation is not that high. So attributing a certain subsidiary valuation in the absence of any holding company discount, you'll realize that ICICI trades at about 2.3 times 1 year forward. This is as of Friday close, I'm saying. And HDFC trades at 1.7. Now, Lata, 1.7 is the multiple generally assigned to a upper mid-tier NBFC. It cannot be the multiple of one of the lowest risk banks of the country, which even in a period of serious turmoil and reinvention of its balance sheet structure has grown at 12%. Right. So and that's the thesis.
So your expectation is that the valuation gap will be merged by HDFC price rising and not the other way around.
No, even ICICI, frankly.
Let's come to ICICI, yeah.
So ICICI has clocked almost 16.6% ROE in the quarter. I understand that credit cost has played a role there. But please understand that the other income hit also is not something which is business as usual. It happened because of a specific regulatory move, at least in part, right? So, on balance, ICICI looks very easily capable of delivering 17 to 18% ROE, especially as margins gradually pick up for the sector in a small measured manner, but through the year. The ROEs can inch up higher. So in that context, you are getting the best earnings predictability in the Indian financials context, perhaps. The bank whose earnings profiles appears most insulated to what happens to cyclical outcomes, including conflict, etc., that the market is worried about. And on that context, is 2.3 a very high multiple, especially for the bank, which clearly on landed cost of raw material has the greatest advantage in the India context today. And therefore, there is re-rating potential within ICICI as well. Of course, HDFC is coming from a deeper valuation discount. So, I would expect sharper re-rating in HDFC, but HDFC has a few things to prove, while ICICI has a running story. That's the difference.
Has proven those issues. Well, well, speaking of cost of raw material, actually, I think the one that will come with results tomorrow, or I think later today, Bank of Maharashtra is the one that's been surprising with amazingly low cost of funds. But Shantanu, if someone were to give you 1 crore, what will be the percentage way in which you will split between the various banks that you recommend?
Right. So our top 3 preferences very clearly remain, HDFC, ICICI, and Axis in that order. The neutrals for us are SBI and Kotak, but in Kotak, even though we are neutral, incrementally because of the underperformance in the stock, the upside from our target price has been increasing. So, that also could have equal weight kind of allocation maybe. The underperforms for us remain even names like IndusInd, where, we still need to see a lot more before we can bet on a re-rating. Because as far as we are concerned, the total fallout from whatever happened in the company in terms of impact on the various businesses, all that we have to see, how it's panned out. Because it's not just about how much asset quality problems came up and things like that. We have to see what the exits have been at the various levels, what each of the business divisions, how they are holding up. And the bank itself, in terms of its ROE target, is also not promising anything aggressive, which would suggest that, this was all a particular egregious incident, and therefore the rest of the business can be business as usual. I don't think that assumption works yet for us. And
Fair enough. Fair enough. I mean, many people have been cautious to see whether IndusInd is able to turn itself around on financials and set aside the prior issues. But what about, the other banks that have, now come into the limelight? Like many of the PSU banks, are you not looking at expanding your coverage and including those? Some of them have had a sterling performance.
Right. So I mean, without going into those specific names, what I can suggest to you, Lata, in terms of our opinion, has been that if you look at the entire story driving the PSU theme,
yes,
it has been based on the idea that in both FY25 and 26, PSUs have gained significant credit market share over privates. What people do not notice is that they have lost deposit market share.
Yeah.
Right. And given the structure of PSU bank balance sheets and the typical operating situation, it's for them to gain credit share would mean that they would need to gain share in corporate, in home loans, basically in prime categories. It's not the sort of balance sheet which can grow. Let's say business banking itself can drive a big delta and things like that, or commercial banking, or say specific segments like CV, etc. That is not the typical PSU balance sheet. Okay. And what is common to all these prime businesses? They require very low cost of funds.
And low margins.
Yeah, so being low margin, you have to do that business with cheap money. Okay. And on cheap money, private banks seem to be doing better than PSU banks.
Fair point. Okay, that's the reason for you not getting into those banks. What about NBFCs? We just saw the results of Jio Financial. That's not in your coverage. HDB is in your coverage. Will you expand to Jio at some point? How are the issues stacking up for NBFCs? The cost of funds has not really gone down.
Right. So I was never a big believer in the cost of funds story because, frankly, think about it, Lata. I mean, most of these NBFCs are 8 to 10% margins. So where you're going to find 10 basis points of cost of funds within 800 basis points, I don't know. I think that's just a story that people like to popularize. Now, coming to HDB, I think the HDB numbers portend very well for the real thing that matters for NBFCs, which is the asset cycle. And for the first time, in a serious sense, we saw credit costs getting arrested. Apart from two segments, two other segments delivering solid growth, which is a testament to how much confidence management has on emergent asset quality. So, and I think there is a read through of that for the sector as well. I expect the asset cycle to be turning for the positive for NBFCs. Now, obviously, the risk to that remains if this conflict escalates and things like that, an impact on Indian economy, then obviously NBFCs become a lot more vulnerable than private banks. But that aside, clearly, at least Q4, as far as Q4 is concerned, I think the cycle has turned for the positive.
Oh, actually, you're taking away my next question, which was precisely this about banks as well. That is the best of the asset cycle over? We are going to have, higher fertilizer cost, probably an El Nino, and all that, even otherwise the first quarter has higher rural loan, NPAs. So, I mean, have we hit the best on loan quality, and will we start seeing trouble, exporters, SMEs in the FY27 numbers for banks as well?
Right. So, I mean, first things first, even if, nothing untoward happens from any of the parameters that you mentioned, the vanishingly low credit costs, especially seen in the last 2-3 quarters, obviously are not sustainable, even if nothing changes about extent asset quality, because these are at the end of the day fairly conservative managements. And, they would like to build a little bit of a war chest as and when time goes on, and not drink every last drop of water that is available to them, and try and set up so high earnings base that FY28 underperformance becomes like kind of a fait accompli. So that's just common sense. Now that has greater implications within the PSU ecosystem, where I am seeing credit costs which are lower than the 20-year housing finance track record of HDFC. So clearly that's not going to sustain. Having said that, now let's come to the extent asset quality part of it. I think it's a direct function of how long and how deep the conflict impact is going to be. As far as slightly higher crude prices for a couple of months is concerned, I don't think we are that vulnerable to that. I mean, as long as liquidity is being maintained, despite the outflows, the foreign outflows that have been happening by RBI, the only impact that I see is maybe banks grow a little more wary on risks and slow down for the first half their growth a little bit. And that's what our impact analysis note also pointed out a couple of weeks back. But other than that, nothing big from there. What becomes a bigger challenge is if this goes on for a long time and more than hydrocarbon prices, if availability and quantity becomes a problem at some situation, then that's a very different level of economic dislocation.
Okay.
And then
I think we should not discuss that now, simply because, there are talks on, and one hopes that it'll click. Let's not talk about dire scenarios, simply because whether you look at the, long-term crude market, or whether you look at, the current equity market, financial markets, you're not getting a sense that the markets are pricing in something so dire. Let me just ask you, what is your hierarchy in terms of banks and NBFCs? You told us your hierarchy within banks. And what is your hierarchy within NBFCs?
So within NBFCs, the top pick remains Bajaj Finance, right? And, the underperform that we have is SBI Cards, where we are still not comfortable with valuations. But the idea that I want to mention is that this entire thesis of margin expansion for NBFCs is a deeply overplayed story, and some of it has corrected in the second half of the last financial. But still some amount of optimism around that persists. I think optimism in NBFCs has to be rooted in what happens to the asset cycle and not based on margins. From this point of view, I think we have a clear preference for the private banks because the valuation safety is in a very different order vis-a-vis where long-term valuations are. And the funny part is that the balance sheets are as healthy as they have ever been, and the ROEs are also, in the long-term zone. So it's not like ROEs are suppressed or balance sheet risk is high. And yet the valuations are low there. So purely once I bring in valuation, the bank preference over NBFCs becomes very strong. But within NBFCs, clearly Bajaj Finance is the top.
Okay, we'll leave it at that. Out of time. Thank you very much, Shantanu Chakrabarti, for analyzing the big bank results that came over the weekend. At the moment, markets are giving a thumbs up to the banking sector. That's the leading index with over 0.5% gain at this point in time. But green all over. Keep your fingers crossed that we don't get any more adverse tweets. Take a break. Chartbusters after the break.
The Indian market makes a higher start, quickly gives up gains, but still now recovers from the lows. Iran shuts the Strait of Hormuz again following the US blockade of its ports. The Nifty slips below 24,800. It's the market breadth which is currently in favor of declines.
HDFC Bank's fourth quarter net interest income and operating profit miss estimates. The stock is lower by around very mildly. Brokerages, however, remain largely positive on the stock.
Straight cheers numbers coming in from ICICI Bank and Yes Bank. ICICI Bank beats estimates in a strong quarter. Lower provision boosts the bottom line. Yes Bank too surging after delivering a 45% growth in the quarter that went by.
IEX is under pressure. The stock slips close to around 6% as the CERC releases new draft market coupling norms with detailed procedures set to be issued within 6 months.
Strong run for Bharat Wire Ropes continues. The stock had surged about 7%, adding to its near 30% surge in 2026 so far. Block deal data indicates that the Lloyds Group has also picked up 5% stake in the company.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. Mangalam, the screen is telling you the picture, right? Any kind of bad news is getting bought into on the Nifty Bank. The intraday charts tell you the picture. And I'll tell you what, on the Nifty, we're reaching a very, very crucial juncture. We're approaching that 50-day MA. We're almost there, I think so. And the Nifty Bank as well, almost headed to around the 200-day MA. So good times, I think, that buy on dips is working out. And that's on full display on the screen.
The buy and dips is working out. We're at the high point of trade for the Nifty Bank, and it is looking good. You know, from the start of April month itself, every dip that came by in the markets, the bull lapped up on that, and currently we're crossing in fact, we're above the 50-day moving average on the Nifty, which is just about 24,415. So we're about 20 points above that. The Nifty Bank as well, about 100 points from here is the 50-day moving average. The only thing that the street would want from here on is one little cool off in the India VIX, which saw a lot of cool off earlier from levels of 28 down all the way to 17 and some point. But today it's seen an up move of about 5%. And the other part would be the advanced decline ratio. Though the number of stocks advancing in the morning to now have seen an increase, let's see whether those lines crisscross and we, towards the end, see more stocks advancing than the number of stocks which are declining. Good time to then get in Shivangi Sarda for a quick technical check on the market. Shivangi, we've seen recovery from the lows and now the market's crossing important technical levels too.
Very good morning, Mangalam and Nigel. Thank you for having me. So we've seen that, the markets have shown a very smart recovery from the lower levels. And the kind of base formation that we've seen in the last 4 sessions has been quite strong. Although we've faced some resistances near 24,400 marks, but today marks a day where we are comfortably holding above the same. And in fact, crossing key exponential moving average levels as well. Now, of course, India VIX needs to pull off below 15 zones to completely favor the bulls, but overall buy on decline to continue over here. And we're looking at 24,800 and 25,000 next on the Nifty index. And the support would lie at 24,050 zones if we talk about the positional support, but immediate support lies at 24,300 marks. Now, talking about Bank Nifty, we've seen that some of the PSU names are picking up strength today, which is adding to the index. And we've seen that overall, after a long consolidation of 7 days, this index is finally starting to move and at par with the broader market. Now, next up on Bank Nifty, we're looking at 57,650 as the next resistance for Bank Nifty with a support of 56,650 marks.
Okay, all right. Shivangi, I wanted to ask you about your call on Reliance Industries. That pullback to around 300 odd, but it's shown a very sharp pullback from around 1,300 towards that 1,400 odd mark. Levels you're tracking?
Reliance, we've definitely seen a very good amount of short covering, and the kind of base formation on the weekly basis has been quite strong because we've seen that from the last 12 weeks, it hasn't, breached this level. And we are seeing a good amount of upswing in the last 2 sessions. But overall, with the broader market and with the amount of strength gaining in this sector again, we are, expecting a good run here. Now, of course, the risk reward is quite favorable at these levels, and we are roundabout expecting next up for Reliance with a level of 1,400 levels, which is the next key exponential moving average, and the support would lie at 1,350 levels.
Okay, all right. What about individual stocks? You want to help us out with some ideas?
So individual stock with the trend that we've seen in the entire banking space, first up on my radar is Federal Bank. We've seen that the stock has been quite resilient in the in its space, and it's respecting the upward sloping trend line on the weekly basis as well. We've seen that after the good rollovers, we've fairly done good in this month so far, and we are heading to touch new highs as well. So this one's looking quite positive. The IVs have cooled off and looking quite comfortable here at these levels. And the next targets that we're looking out for Federal Bank is 307 levels with a support of 290 zones. And the second pick on my radar is Power Grid, with a lot of action over here in this entire space. There'll be tailwind, and Power Grid has kind of witnessed good amount of OI addition in the last 4 sessions, which is adding up, with RSI showing positive signs of divergence as well. So this one's looking quite positive for the next targets of round about 333 and a support of 315 level.
All right, Shivangi, thanks a lot. Take the point. Just keep an eye on a couple of stocks before we move forward. We have, Voltas and Blue Star, both of them doing well. The heat wave perhaps seems to be doing well for their AC and cooler sales. Alongside that, we have, Shoppers Stop as well, which has seen a big up move right now. From the lows, the stock has moved to the high point of trade. And a lot of these retail players are seeing some traction. V-Mart Retail, for one, 25% revenue growth is what the company reported in its update, and that stock has moved higher as well. Let's get some ideas for profit coming in from our colleagues at Money Control Pro. Bharat Giani joins in now with the stock that he's been tracking closely. Bharat.
Today's ideas would be Trent Limited. The company's growth accelerated in Q4, with the company posting revenue growth of 20% YOY as compared to 16% growth in Q3 FY26. The company accelerated network expansion, opening 22 new Westside stores and 109 new Zudio stores in the quarter gone by. Not only is the company entering new cities and towns, but also deepening presence in key existing markets. Accelerated store expansion implies that the growth momentum is likely to sustain going ahead. Also, the company would have the benefit of low base from the current quarter. The emerging categories of beauty and personal care, innerwear and footwear are ramping up, which will enable the company to maintain the growth momentum. Also, the company is scaling up its digital business. We expect the margin improvement to sustain, driven by operating efficiencies and increasing automation. At the current market price, the stock is trading at a PE of 50 times FY28 core fashion business earnings. We recommend investors to add this.
Thanks a lot for that, Bharat. For the time being, we slip into a short break. Come back. The management of Senco Gold is waiting for us on the other side. Stay tuned.
Welcome back. 90-point uptick is what we're seeing in the frontline index, and the Nifty Bank leading it with a gain of 0.8%. Let's welcome to the show Senco Gold and understand the impact of multiple things. One, recent festivities. There was Poila Boishakh, there's Akshaya Tritiya, how margins shaping up, the expectations from the new fiscal year, and more importantly, there was some sort of uncertainty around the gold import as well. So is there any more clarity on that already? We do have Suvankar Sen, who's the MD and CEO of Senco Gold and Diamonds, joining in. Their fourth quarter update was fairly strong, so margins, etc., something that we'll be speaking about as well. So, Ankar, first up, if you could give us an update on how sales performed in both Poila Boishakh as well as Akshaya Tritiya, which was yesterday, and parts of it undergoes today as well.
So you know, it's a very positive sign that we are seeing good traction, a lot of footfalls at the stores. In terms of numbers, till now, we are looking at a growth of 25% upwards. As far as the sales that we have been seeing this month compared to last year's April, Akshaya Tritiya and Poila Boishakh. So I think that consumers are looking at these current prices as attractive prices for buying either for the upcoming weddings or for their personal savings. Yes, in terms of volume, the prices almost is double or close to double from last year's April. So if you look at in terms of volumes, there is a degrowth of about 12 to 15%, but in terms of value, we're looking 25 to 30% growth compared to last year. So that's a good sign that we are seeing. And the momentum from Q4, as we see that, you know, the Q4 performance or the last year's overall performance, we've seen a 46% growth in the Q4 of last year and about a 35% growth of the whole of financial year for the last year. So I think that with the increase in price, it's giving much more confidence to the consumers that gold and silver is good assets to buy and invest in, and that is impacting positively the sector overall.
All right.
And as far as please continue.
Go ahead, complete that point.
No, and when you're concerned about the the imports that you were saying, that there was recently a news that the government was trying to curb imports, or the duty was on the higher side. So basically, it is more from a perspective that there is a 3% IGST that is charged for the Dore imports, but for imports from by the banks, initially there were no charges that were being actioned on them. And in the last 1 month or so, there was some kind of miscommunication, and the 3% IGST was being charged to the banks. So that there were certain banks who were paying, and there were certain banks who were not being able to pay, and trying to explain to the authorities that after all it is passed on to the consumer, and when we are paying the GST, then it is paid to the authorities. So that was a little bit of a kind of a confusion in between, but that did not impact the supply overall. There was enough and more supply, the bullion dealers, the Dores, the existing gold in the system. So that did not impact the supply chain and the overall planning for the season.
So you are saying that there is now clarity on this import-related issue. Is there clarity across the board? Because I was given to understand that Dores are still unclear on Dores. What's the kind of exposure there?
No, Dores is not unclear. They were importing Dores by paying upfront GST. So that is always a thing that is happening. It was only with the banks importing the gold where initially it was not charged, and recently they had started charging. So as far as Dores is concerned, you pay the upfront IGST and you get the gold out. So that's not an issue at all. So that's coming smoothly. So that's a good thing.
Okay, all right. Hi, Suvankar. This is Nigel on this side. Good to see you, Ben. So pricing is good. Volumes are down by 12-13%, as you said. What about buyer growth? How has that been?
The growth of in terms of
number of buyers.
Buyers, if you look at it, the average ticket size of the buyers, though overall has gone up, but in terms of the weightage that they are buying, that is coming lower. So people are saying that, I want to buy something within the budget. So that is one aspect of it. And as far as number of footfalls is concerned, we are looking at a very minimum 2-3% growth in terms of footfalls. So there are a lot of KPIs that are being tracked in terms of existing customers, new customers, number of total customers, what is the ATV, ASP. So yes, people, and we've launched 9-carat gold jewelry. There is in weddings, in other kind of jewelry, we are always trying to make things lighter so that it fits into the budget of the customer. And I think that's giving the confidence to the customer that yes, we can buy no matter what the gold price is, it is within their budget. and 18-karat jewelry, 14-karat jewelry, diamond jewelry. I think diamond jewelry sales have also seen a very good sign. There is about a 14-15 growth in diamond jewelry as well. So for daily wear, people are getting that confidence that they can buy.
Right, we'll get to the studded ratio bit in just a bit. Suvankar, you said that buyer growth was, footfalls were about 2 to 3% higher. I wanted to understand a couple of things from you. One, in the fourth quarter, you've reported in your update that there was 46% revenue growth. Can you give us a sense of the volume performance in the fourth quarter and also on the margin front? That's something that you haven't reported in your update. How much of margin improvement did you see in the fourth quarter and how much of that was inventory led?
So as far as it's concerned, we are waiting for the results to come in the month of May. And that is when we will be able to, talk more details about the margin as for the past performance. And as far as the future is concerned, we've been giving a guidance that we are looking at an EBITDA of about 7.5 to 7.8%. So you need to just wait till the end of May for the margins expectation. And I would say that, in terms of the volumes that got impacted, so even though there is a value growth of 46% for the whole year, we have seen a volume degrowth of about 12 to 15% in the last year as well. So that's the kind of trend and momentum that is going on, that yes, people are buying less with the high gold price. And there's a lot of old gold exchange happening, which is helping the overall sales also. It's almost 45 to 48% that people are exchanging their old jewelry and buying the new one. And as far as your question on the impact of, value, volume, hedging, inventory. So I would say that, we've been keeping our inventory hedged at about 55% because of the, upward momentum of gold price, and which will lead to a little bit of positive impact on the overall margins, because of the 55% of approximate hedging that we've been doing.
Okay, all right. Suvankar, we'll wait for the exact numbers when you come out with your numbers. But sometimes rejig at the top makes investors a little bit nervous. So I'm noticing that I think on April 10th, the chief sales as well as business officer resigned. Any particular reason for this?
No, there's no particular reason. He was a person based out of Mumbai. So after 5 years of his service with us, he decided to spend time with his family. His parents were aging, so he's shifting back to Mumbai. And we wanted someone who's heading sales to work out of head office at Calcutta. So I think there's nothing to worry. If you see the current momentum and the growth continues to happen at about 25-30%. So the team is working hard. And I would assure all of you that I think it's the momentum is on and the growth is on.
All right, we take that point. Thanks a lot, Suvankar, for joining in. More details and more granularity on the numbers and the outlook once you report your numbers mid-May. Until then, have a good festive season. With that, we'll take a short break, come back. On the other side, we'll get you more on the markets. A lot of stock-specific action up for you.
Welcome back. Well, a few stocks actually from the broader markets are bucking the trend. Bharat Wire Ropes, that stock has surged. It's up close to around 10%. This follows up the 20% gain that we saw on Friday's trading session. After the Lloyd Group went ahead and bought more than 5% stake in the company. That was officially announced post-market hours, so the stock is reacting to that. In fact, talking about the Lloyd Group, Lloyd Metal as well, what a brilliant recovery we have seen. I recall the stock going down to around 1100 rupees, or I think there was a big seller out there that got cleared out. And the numbers look quite good for the past quarter. And quarter four, going by the operational performance, should look equally good. So that's why, in fact, that stock is at the high point of the day, 1.5% higher. HCC is moved up as well. That stock was in the red, I think so. That's moved into the green. I'm not sure if there is any news flow, but HCC should come up for you. And Tilaknagar Industries, that stock, I think, in this month itself, it's up close to around 20%. There is a couple of initiating coverage notes that have come out, and I think there's a bit of a tailwind with regard to the forward movement from the Karnataka government for the alcohol industry itself. So that one, just take a look at that. From 416 rupees, the stock has moved to around 485. And let's pull up some other names. Allied Blenders as well should come up for you. Maybe Radico as well should come up for you on the screen. So Mangalam, good times for the markets. At the start of the SAR, the Nifty was in the red. It's moved into the green. And the breadth of the market, gradually those two, we're coming out of the weekend, but it seems they're going to be kissing each other in the next few minutes or so. Advanced decline ratio is what I'm talking about.
Look at that, Nigel. But, IEX, that's the one stock in an otherwise strong market, looking under pressure as the companies followed the CERC's release of the new draft rules for market coupling. Vivek joins in with all the details here. Vivek.
That's right. The Central Electricity Regulatory Commission has gone ahead and issued a draft notification as far as power market regulations are concerned, and has included a formal framework as well as the introduction of market coupling is concerned. CERC has invited stakeholders and public feedback and expected this to come in by 16th of May 2026. Detailed procedures on market coupling to be issued within 6 months. Now, what does the draft say? The draft says that Grid India will now act as the market coupling operator, or the MCO. Grid India will now aggregate bids from all of the exchanges, and they will decide the clearing price. Remember, till now, you actually had the exchanges themselves collating the bids and going ahead and seeing what was the actual clearing price. So this is the main issue as far as market coupling is concerned. Remember, this actually impacts the market leader IEX quite negatively, given the fact that they are the market leader in terms of both market share as well as the number of bids that they collate. Now, along with that, market coupling will now expand to other market segments as well. So day-ahead market was expected, but real-time market as well as other market segments is what the release says. Apart from this, Axis Capital has also said that there could be a certain capping as far as brokerage that IEX charges are concerned. So all of this is weighing quite heavily on IEX today.
Take that point, Vivek. Thanks a lot for that. So that's about IEX, down 7% right now, the top F&O loser. Though we do have a bunch of stocks which are spiking right now. Kolte Patil continues to do well from last week's updates that came in, and it's now up 36% this month. Actually, what we'll do is we'll take your leave on this edition of Chartbusters, but you stay tuned to CNBC TV team. Don't go anywhere. On the other side of the short break, the team of Trading Hour takes all the market action and stock market action forward. Good morning. You're watching us here live on Trading Hour. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam Malu. With me, Hormas Fatakia. Looks like a good Monday morning for the markets. Why do I say that? Because the news over the weekend was not particularly good. We opened lower, and every subsequent low that we saw has been bought into by the bulls, and the Nifty is now holding above important levels, above 24,420. And as we speak, it's around the 50-day moving average. So all these factors, and with good results coming in over the weekend for the banking pack as well, has led the Nifty Bank, which was an erstwhile underperformer, to become the outperformer today, gaining 2 times as much as the Nifty. The Nifty is up 1/4%, or rather 2/3%, and the Nifty Bank is about 0.8%. And a lot of the movers and shakers in the broader markets as well, the advanced decline, while they're split right down the middle, the number of stocks which have gained have only increased in the last hour or so. All in all, looking good if you're a bull. Hormas joins in, and with a lot more buzzing stocks at this morning. Hormas.
It's been absolutely topsy-turvy so far, but the bulls will take a 70-point advance, and especially considering the developments that have transpired over the weekend. And as you mentioned, every dip on the index has been bought into. The other good part is the fact that the index is now trading above its highs for last week, which were 24,400. So we are comfortably above those levels as well. And this is despite the rebound seen in the crude oil prices. Both Brent and NYMEX were up 5% each. Brent is now nearing 96, NYMEX is nearing 90, still holding on to gains of around 6%. You mentioned earnings reactions, and they are the ones. It is HDFC Bank that has recovered from the lows of the day. At one point was down 1.5%, now back near the flat line. ICICI Bank continues to hold on to gains. Jio Financial and Mastek seeing some negative reaction to their results. We heard the management of Jio Financial just a few minutes back. But take a look at the newsmakers today. IEX is now down 8%. The market coupling bugbear is back to haunt the stock yet again. Sterling and Wilson, after its order win, the value of which was around 70% of its market cap, 13% higher now on the stock. Trent, of course, the bonus issue coming in later this week. And of course, BHEL, after the business update that the company put out over the weekend, 4% higher here as well. Now look at the heat wave alert across the country. The AC stocks that were earlier fearing a lot of underperformance are now outperforming in today's session. Blue Star and Voltas are up 2% each. Whirlpool is now up 4% as we speak. So good going for a lot of these AC manufacturers and cooling companies. Stocks that are at a 52-week high in the broader markets today. Torrent Power is one, NLC India is one, Hitachi Energy. Some positive brokerage commentary coming in here, nearing 30,000 now is Hitachi Energy among the top performers in the broader markets this year. And lastly, some stocks that are seeing some profit booking today. GMDC is now down 6%, did very well last week. Cartrade Tech from levels of 3,300 has now halved to around 1,750, and KEC International too seeing some bit of profit booking in today's trading session.
Take that point, Hormas. Thanks a lot for that. Perfect time to actually welcome Saumil Mehta from Mirae Asset Sharekhan for a quick technical check of the market. Saumil, we're doing well. We're seeing rallies from lows, but we're also moving into consolidation zone, or maybe supply zone. The 50-day moving average for the Nifty, the 50 and the 200-day moving average for the Nifty Bank. How are you seeing the market right now?
Good morning to everyone. We're taking this as a bounce. Now, our first target was 24,500, where we had a good amount of open interest. Now, the next target is 200 daily exponential moving average, which is around 24,750, 24,800. So that would be my target next in the very short term. However, we shouldn't forget that we have broken some very crucial levels on the monthly, quarterly charts. We are still expecting, a formation of higher tops, higher bottom from here on the higher degree time frame. We are trading, Nifty is trading about 20 and 40 daily moving average, which is a very good sign. We are trading above some very crucial levels like 24,000, which was very crucial to watch out for. And we are trading above that. That's a very crucial sign. Today, Bank Nifty has started trading about 200 daily exponential moving average along with 20 and 40. So overall, the trend still remains positive in the short to medium term outlook. And I'll be expecting higher targets. For Nifty, I'll be expecting 24,750. And on Bank Nifty, I'll be expecting a target of 59,000 in the short to medium term. I have two stocks which I have chosen to go long. The first one is delivery. Delivery has broken a small triangle pattern on the daily charts, and my stop loss for this stock is 458, and my target is 510. The second stock which I have chosen is Indian Bank, and Indian Bank has also broken out of a small triangular pattern, taken support at 10 daily moving average, trading about 220-40 daily moving average, already in the uptrend. Stop loss would be 928, and the target would be 1000.
Saumil, thank you for spending time and joining us today with your views on the index and on specific stock recommendations as well. Delivery being one of his recommendations, back near its IPO price of 487. Take a short break, put the spotlight on the bond markets on the other side with Manisha Gupta. Welcome back. As promised, shifting focus to the bond markets, Manisha Gupta is here with the latest. Manisha.
Thank you so much for that. Well, the 10-year benchmark bond has opened at around 6.91% on the higher side. And this is yet again because of the crude oil prices, the kind of rebound that we are looking into that one. Friday, remember, was 10 to 11% of a decline, and today has been 7 to 8% of an upside herein. So the inflation concerns are all back into the markets therein, and the very, very volatile crude oil prices, in any case, are keeping the asset classes on edge there. RBI's FY27 inflation numbers anyway is projected at 4.6%, something that the street will keep an eye on. But apart from that, it also is going to be about the state governments planning a 16,900 crore deal auction. This is happening on 21st of April, and it is higher than 11,500 crores, a number that was mentioned earlier therein. The RBI upcoming meeting minutes also is something that is going to be in focus in sense of policy direction for the bond market investors therein. In the meanwhile, there are various reports that also have been streaming around. Goldman Sachs, for one, says that they have raised 2026 inflation forecast for India to 4.6%. You have S&P Global Platts, which says that if the crude oil prices continue to average around $130 for 2026, then India's growth could slow by nearly 0.8%. And then there is an IMF report as well suggesting that India's GDP growth is expected to remain strong to around 6.5% for FY27. So various reports coming in, and that would impact the rupee and the bond markets as well. But interestingly, what also seems to be catching eye is the municipal corporation and multiple numbers coming in there in sense of debt market there. This is after Centre has offered incentive during the previous budget, and that has led to a lot of municipals now coming in sense of raising money in the debt market therein. So when you look at Many of this, and this is by the way, SEBI data, it suggests that Nasik, Surat, Pimpri Chinchwad, Lucknow, Pune, Chennai, these are some of the municipal corporations that are looking to raise 200 crores in sense of debt therein. This is outstanding, by the way. And then you have big numbers also coming in from Hyderabad, Ahmedabad to the tune of 400 to 495 crores, and Indore at 384 crores is what we saw happen in 2023 therein. So this is strong numbers that we see coming in for infrastructure, logistics, etc., that state governments seem to be tapping into.
Right, Manisha, thanks a lot for that. So that's about the bond market action. We'll take a short break. On the other side, a very interesting conversation lined up for you. Naveen Pandey, who's the Managing Director of Bajaj Consumer Care, joins in to discuss their quarterly performance. Stock did well post their numbers on Friday. Welcome back. One of the stocks of Friday was Bajaj Consumer, reported a very good set of numbers. In fact, for the last couple of quarters, the company has been reporting, better than industry performance. Naveen Pandey was managing director of the company, who joined in June itself, June 24th. Since then, has seen, stellar performance in the company's quarterly updates. Second quarter last year, we had 13% revenue growth with 45% EBITDA growth. Third quarter was 31% revenue growth with over 100% EBITDA growth. And fourth quarter had 30% revenue growth with 140% EBITDA growth. That plate comes up for you on the screen. So for the person who's, responsible to turning this company around, joins us once again. Naveen, always a pleasure speaking with you. I remember you joined us when you just took over. You did tell us that you are targeting strong double-digit growth with mid-20s sort of EBITDA. And lo and behold, in the next 2 quarters, you've gone ahead and delivered that. The question is, what is it that you did for you to actually, get the company back onto growth path? And now the question, after the company having reported 2 quarters of growth, is the low-hanging fruits. Have they entirely been plucked? How much of this is sustainable?
Thank you. Pleasure to be here, Mangalam. Always a pleasure to speak to you. And thank you for your kind words. I think the last couple of quarters have been very good for us. But what we've been essentially doing is nothing different from what I spoke to you when I had just joined. Our focus has been on investing back and reviving Almond Drop. We've upped our advertising on the brand. We've stayed consistently on air. We've improved the weeks on air. We've gone very aggressive on the digital portion of the advertising. We worked on the distribution footprint through Project Arohan. We have gone ahead, increased direct reach. We have improved our wholesale network. We have reworked our entire rural network from a van-based selling system to a super stockist-based selling system. And all of this has led into a good reach expansion. So focus on the brand and reach expansion, I think, has done really wonders to our top line, and that is where you see a lot of top line momentum. Besides Almond Drop, what we've also done is we've done a lot of work in terms of fixing the P&L. Our coconut portfolio is in much better shape profitability-wise today than it was earlier. In terms of the extensions of Almond Drop and some of the other brands, we are much healthier today in terms of their P&L shape. And all of this is putting together, contributing to a very, very solid movement on the bottom line front. So I guess it's not very different from what we outlined ourselves. And I think we're very, very happy with the results, especially the speed of the results as they've come in.
Right. We take that point, Naveen. You've done well to pluck those fruits. You are, expanding the project Arohan as well, along with increasing the scope of revenue coming in from non-ADHO portfolio as well, while maintaining the growth in ADHO. The current risk is that of raw material inflation. We've seen between the third quarter and the fourth quarter a near 75-80% rise in crude, and as a result of which, crude derivatives as well. You've enjoyed the benefits of the inventory that you had earlier, but now going forward, what kind of challenges do you see when it comes to both margins and demand because of higher prices?
So first on the inventory and the cost front, Mangalam, I think our team has done a very good job in terms of managing the inventory and the prices, and we still have good covers as we get into Q1. But yes, our low price covers will exhaust at a certain point of time, and the market continues to remain volatile. However, our belief is that it should settle down from the current levels to lower. It might not come back to the pre-war level. We might find a new normal, as has frequently been seen the case. And that might necessitate us to take a bit of consumer pricing, which we are monitoring very closely. And we will try and keep it calibrated to cover the costs, in terms of both what pricing we need to take as well as what cost-cutting initiatives we can take to cushion the price impact on the consumers. So we will take a host of measures to protect our margin and try and do what is the bare minimum pricing needed on the consumer end. But I think we are confident of quarter one, and we will be taking actions in the quarter one as the quarter unfolds. But this is a situation wherein really, a quarter prediction is, maybe something which will be difficult to do. But we are monitoring the P&L on a month-on-month basis, and we are iterating our strategy, our actions as needed to, be fair both to the consumers and to ourselves.
Naveen, a couple of questions, clubbing them into one. First, you mentioned that you have increased your ad spends on the Almond Drops hair oil. What has the ROAS been on that? And two, now that you mentioned about the raw material costs and the subsequent impact on margins, in order to protect those, you mentioned you would pass on some bit of it to the consumer, but do you intend to bring ad spends down as well so that the costs go down and thereby the margins are protected so that the hit to the consumer is lesser?
So first coming into advertising, so I think today roughly 50% of our advertising is traditional and 50% of our advertising broadly is digital. And within digital, we do both kind of advertisings, off platform and on platform. So typically we measure, your return on spends in the typical method on sales for the one which we do on platform. And, on platform, our matrices are, closest to some of the best brands which are there. And on off platform, we look at more traditional matrices like reach frequency for the traditional media and, your viewing rates and, your frequency as well as reach on the digital front. So our matrices are extremely solid and good, and they are comparable to some of the best brands in the country. When I was mentioning about, iterating of cost, I think we would want to protect advertising as much as possible. And hence, any tweaking in advertising will only be short-term and temporary if it happens. But on a continuous or a long-term, on a full-year basis, as an organization, we don't believe in cutting down advertising costs. So we will try and remain competitive in terms of maintaining our share of, market on share of voice on both television and digital. If the market itself falls, and that leads to an opportunity wherein other of our competitor brands don't advertise, and hence we are able to maintain our share of voice, which lesser spends, then we will evaluate that as we go along.
Right. A couple of quick questions before we let you go, Naveen. One is on further gains which are likely from the distribution project. Second part is any other category that you're looking to enter, because hair oil is 92% penetrated. And international, that was a decline in FY26. How much do you expect that to rebound in FY27?
So, Mangalam, what I would like to just say is that we've typically been, one of the challenges which has always been stated on us is concentration risk. And the two concentration risks which have always been highlighted us was over-dependence on wholesale and GT specifically, and the second was on almond drop. So I'm happy to tell you that with the financial year which we have ended, we have 225 crores of revenue coming in from non-almond drop, or what we call as a growth portfolio. And we've clearly outlined a 500 crore target for ourselves over the next 3 years. And we are confident that we will go on this path and achieve that. And that will be a very, very meaningful diversification to us. The second factor which is there is on the new age channels. So today, organized trade, which is a combination of modern trade, e-commerce, quick commerce, is now close to 30% of our revenue. That gives us a very, very sizable base to launch new products, to do premiumization, to do higher end innovation, take them into new age consumers. And I believe that both of these are now we are at a tipping point wherein we can accelerate some of the diversification and the new product agenda, at a much greater speed. Coming back to the specific question on new products, what you should expect, I think you should expect 1 to 2 new products from us every year, and as well as in this year.
And you've crossed the 1,000 crore milestone this year. 1,500 crore and 2,000 crore come when?
Hopefully very soon.
And any acquisitions on the annual, Naveen?
We are always on the lookout for finding a good fit company. As I've said in the past, I think our desire to acquire will, depend on the kind of company and the fitment we get. We have, ability to take on acquisition, both in terms of financial as well as organizational bandwidth. We just need to find a good fit, and we are, consistently on the lookout. Obviously, nothing on the cards as of now for us to disclose, but as and when we will obviously come back and share.
Take that point. Thanks a lot for joining in, Naveen. Wish you good luck, and hopefully 1,500 and 2,000 crore come soon as well. With that, we'll take a short break, and as we do that, on the other side, we'll get you more of the markets and a lot of stock-specific action. Keep it with Trading Hour. Welcome back. Welcome back. You're watching us here on Trading Hour. A good time to actually get in the F&O updates coming in. The Nifty has crossed the 100-point mark, so it's a century. And if you look at the way the markets are moving, both the Nifty led by the Nifty Bank and the mid-cap end of things tells you that bulls are feeling a lot better about the mood of the market right now. However, a couple of data points that maybe would further cement that. One is the advance decline ratio. More stocks declining than the number of stocks which are advancing. So at some point when they crisscross and the green line moves above, bulls would feel a lot better. Second is that despite the up move that we're seeing, the India VIX is higher by 5%. Remember, typically when the market moves higher, you would want the India VIX to come down as against move further higher as well. The Nifty has crossed the 50-day moving average, 24414. The Nifty Bank is very close to its 50-day moving average and the 200-day moving average. So after outperforming today, entering into some sort of congestion zone. So breaking out of this would be extremely crucial to track as well. Put writers are fairly active. They're very happy with the kind of recovery that we've seen. So 24,300 put seeing a lot of writing, 24,400 put seeing a lot of writing as well. Both of them tell you that the support for the market has moved higher to around 24,200 to 24,250. And there is some punt buying which is taking place at the 24,500 call. These are options that expire tomorrow, so let's see how that comes about. The only fly in the ointment here is that the Nifty PCR has moved to 1.25 versus 1.08. Typically it denotes some sort of overheated move as it moves between 1.25 to 1.3, so that's something that we will monitor as well. BHEL and Torrent Power seeing a lot of long positions being added, short covering on Trent, and we have fresh shots on IEX.
Oh, well, 52-week high for Torrent Power, so good going for that stock as well. 100 points higher now on the index. Now, pull up State Bank of India as well. Among the top gainers on the index today. In fact, it is the top gainer now on the index. It has surpassed the moves on Trent. 3.6% higher now on the stock. 1120 is where SBI is. Of course, the record high is 1234. So still some distance away from that. But good going from SBI. It's slipped below the 1,000 rupee mark during the sell-off in the month of March. So it's been a smart recovery from those lows for SBI. Rohit Srivastava from India Charts and Strike Money joins in now. Rohit, good morning. Thank you for joining in. The recovery that you have seen now on the index, do you believe that 22,182 could well be the low for the year? And even if we move lower from these levels that we are right now, we won't go below that level at least.
Yeah, that's a view that we took very much at the start of the month, that we were close to a bottom, and now that it's recovered from there, we definitely think this is the final low for the year or even for the years to come. So that is sort of the outlook. Every dip that we will see from here will only offer better buying opportunities. In fact, too many people expecting a dip might end up being the case. So you're really not getting one.
And what about the banking index, Rohit? Because the banking index is the one that has led the recovery on the Nifty. And from levels of sub 50,000, we are back at 56, 57 now on the Nifty Bank. Do you see a retest of those record high levels anytime soon, or close to 62,000?
So how soon do we get to 62, 63 remains a question. I mean, will it happen in within the next 6 months? It's definitely possible. A new high for 2026 should not be a very difficult task. We were very, very close to that before the war broke out. So as these talks continue, I think we get closer and closer to going back there. So not a big issue. But yeah, we just need to be, like you said, do we look for dips? They can happen. We don't know how the whole scenario plays out, but we should keep in mind that we may have put in place the bottom, and selection will probably be more important when it comes to particular sectors, especially in banking. We have seen different parts of the banking segment underperform, outperform, like private banks not doing too great, and PSUs doing better, or NBFCs being better picks. And I think some of those themes remain. Even within private banks, you might actually end up going and looking at the smaller names like EU, small finance, and those kind of variations there. Do you go with the big banks or the smaller banks? But overall, I think financials do pick up, and that's often a good lead signal for the market itself. When financials and autos lead, you get a sense that the market is, discounting all the negatives.
All right, take that point, Rohit. Thanks a lot for joining in and giving us your view on the indices and the stocks. We'll obviously keep coming back to you through the course of the week for a lot more updates as and when we have moves on the market. With that, we'll take a short break, come back. On the other side, more news and updates. We wait for you.
Welcome back. 24,450 on the index. So good going. HDFC Bank and Reliance, both of them leading the recovery from the lows. HDFC Bank is now at the highs of the day, just about trading at the flat line. So back above levels of 800. And Reliance Industries too has announced that it will be reporting results on Friday. That too had moved to the highest point of the day, but still holding on above the flat line from levels of sub around 1350, now nearing 1370. A couple of new listings that are not doing well in today's session. Lenskart is now moved to the day's low. That's down 4% as we speak. IKS, which is Inventurous Knowledge Solutions, that is also trading 3% lower. So that is another stock that's seeing some profit booking. And CE Infosystems, MapMyIndia, below its IPO price now, 930 on the stock, 2.5% lower on that stock as well. So a couple of these new latest listings not doing well for themselves. What has moved to the highest point of the day though is Graphite India, 8% higher now, among the top movers on the Nifty 500, and Triveni Turbines continuing to move from where they left off last week, 12% higher now on that stock as well. So at the highest point of the day is Triveni Turbine. But the one stock that has not been doing well all day long, even as the markets have been very, very choppy, is IEX. And that is after the CERC's release of the new draft rules for market coupling, 7.5% lower now on the stock. Vivek is here to tell us more details on that. Vivek.
Well, that's right. So CERC has gone ahead and released a draft paper as far as power market regulations for the implementation of market coupling. Now, CERC has invited stakeholder as well as public feedback and expects this to come in before 16th of May 2026. The detailed procedure on market coupling to be issued within the next 6 months from the release of this particular draft notification. What are the key points of the draft? Number one, Grid India will now act as the MCO, which is the market coupling operator. Why is this important? Remember, so far power exchanges were determining, collecting, collating all of the bids, and they were determining the clearing price as far as the final sale of electricity was concerned on the exchange. But now, however, this particular power will be exercised by Grid Control of India, which takes away one of the key strengths that IEX had, which is why you're seeing the kind of decline that the stock price is seeing. Now, apart from that, the street was actually anticipating that this particular market coupling directive would be applicable only in the DAM market, which is the day-ahead market. But the notification now mentions that RTM, which is the real-time market, and other segments too may be included, adding or proving to be an additional headwind as far as IEX is concerned. And lastly, analysts on the street, especially Axis Capital, mentioned that there could be a capping as far as broking charges that IEX is levying is concerned, which too acts as a bit of a headwind. So all of these have proven to be a perfect storm, and the stock down over 7% today.
7.5% lower on IEX, continuing to be the top loser on the Nifty 500 in today's session. But the other segment that has been in the spotlight has been the transmission and distribution segment, and Motilal Oswal has come out with a note on all of these companies. Vinny is here with the stocks that the brokerage is betting on. Vinny.
Hi, good morning. So first up, let's talk about the positive stance on the transformers and distribution side of the players. Why are they so positive on this? One, the capex cycle has just started for these companies. They've been investing in this side as well, all the capital good companies. Other than that, they're continuing to deliver very strong earnings over the last couple of years as well. Since FY25, we've seen strong growth in T&D players. FY26, they managed to do good so far as well, and this growth is expected to continue till FY28. Apart from that, HVDC projects, right? These projects are seeing an increase coming in. India is focusing on this, and that is why these players will be able to see the benefit of this as well, increase their share in the HVDC projects. Global demand, that remains strong. No concern on that front. So export opportunities, that continues to be there. Now, there are some supply gaps that are actually coming on the transformer side. So with the capacity expansion plans that they have, this turns out to be positive for the industry as a whole, because that means additional revenue will come in to fill the supply gap. Valuations, however, still are expensive. So that is something that is a bit of a worry, but opportunities come in on export front. That is why they expect this to continue going forward as well if earnings growth continues. Now, they've initiated coverage on CG Power. Buy rating, target price of 900 rupees per share. Obviously, this is the company that will start seeing those benefits coming in from their OSAT facility, and they are one of those early movers. Atlanta Electricals, that's a recent listing, relatively recent listing. Initiated coverage on this one. Buy rating, target price of 1,650 rupees per share. GE Vernova T&D, they've initiated coverage on this one as well. Target price is 4,750 rupees and buy rating. And Siemens Energy, they're reiterating the buy rating. Target price is 3,700 rupees per share. And Hitachi Energy, they've upgraded the stock to neutral rating. Target price is 27,000 rupees per share. Valuation wise, when you look at it, CG Power, GE Vernova, Hitachi Energy, all of these are trading above the historical average. Now, today, when you look at GE Vernova TNT, it's trading at peak valuation as well. So all these stocks are close to around their peak valuation as well, and surely above the historical average. Expensive, but Motilal Oswal says that opportunities that come in are there. There's a possibility of better earnings, and that is why they continue to maintain their ratings.
Right, take that point, Vinny. Thanks a lot for that. We do have a bunch of other stocks which are spiking right now. Triveni Turbine is up around 12%, and we're seeing some traction on Z Entertainment as well. Z Entertainment is up 5%. A lot of volumes backing that stock. Remember, it's seen a big correction from the peak. That stock is finding some buyers at lower levels. But Sterling and Wilson plus EMS companies, they are on our radar. Vivek, why is that?
Well, that's right. So first, Sterling and Wilson Renewable Energy, that's the new name of the company. Remember, the company has gone ahead and informed the exchanges that they have received new domestic orders worth a little over 3,500 crore rupees. The company has been declared as L1 or the lowest bidder. This is a turnkey EPC package of 875 megawatt. This is in Rajasthan, and the order is coming from Coal India. The other order is from a private independent power producer for 50 megawatt project in Maharashtra, and the EPC order inflows for Sterling and Wilson has now exceeded over 10,000 crores in FY26. Order book 2 quite strong at over 10,400 crores. On the other hand, EMS Limited, that's the other stock on the radar. The company has been given or awarded the lowest bidder status by one of the tenders that was conducted by UP Jal Nigam in Varanasi. This is for 2 separate construction works. The size of the first order is over 140 crore, and the other order is worth close to 65 crore. Remember that at the end of Q3, order book of the company was around 2,200 crore rupees. So order win cheer, keeping both of these stocks up in the session today.
Good going for both of these names, EMS and Sterling and Wilson. Double-digit gains for both. Sterling and Wilson now up 15%, EMS up 13%. But the other one that has been doing well over the last couple of days has been Bharat Wire Ropes. The stock was up in a circuit on Friday and is continuing to move higher in today's session as well. Nigel is here to tell us why. Nigel.
Well, that's right. Bharat Wire Ropes is seeing some follow-through in today's trading session as well. As you rightly mentioned, Friday's trading session, the stock was up close to around 20%. And it moved on very, very large volumes. One was wondering who exactly could be there in terms of participation in these large, large volumes. One speculation was maybe the promoter entity that has been hiking stake, maybe they came in, but that wasn't the case. And there's another large shareholder as well that wasn't part of the transaction. Post-market, as we understood, that in fact Lloyd Group has gone ahead and bought close to around 5% stake in the company with two of the entities. Lloyd Enterprises, they bought close to around 5 lakh shares on the BSE at a price of around 215 rupees. And at a similar price on the NSE, they bought close to around 11.5 lakh shares. So Lloyd Enterprises in total, they bought close to around 16.5 lakh shares. Besides that, Lloyd Metal and Energy, well, on the NSE, they bought the initial 20 lakh shares at around 193 rupees. So put it together between both of them, they bought close to around 36 lakh shares in the company, which equates to around 5.3%. What's the way ahead from here is going to be interesting. Is it just a strategic buy or is there something more in the offing? That's something that the street will be looking forward to in terms of clarity. But remember, they have close to around 70% of their revenues that comes in from the export market. If there is de-escalation, it helps in terms of movement and trade on the whole. So they'll be a potential beneficiary as well. So we'll keep an eye out on the stock for the time being. In the last two trading sessions, the stock is up more than 30%. Back to you guys.
Good going for Bharat Wire Ropes as well. 8% higher now on the stock. Nigel, thank you for that update. Take a short break. Continue our conversation with corporates. Umang Nahata, the CEO of Mastek, joins in on the other side to discuss the fourth quarter performance and, of course, the road ahead for the company. Stay tuned. Extending gains now is the Nifty, 24,470. now nearing that mark of 24,500. The broader markets don't want to be left far behind as well. The mid-cap index too is now headed towards the highs of the day again. So 200 points higher on the mid-cap index as well. Continuing our conversation on earnings and the road ahead, Umang Nahata, the CEO of Mastek, is now joining in. Numbers were reported after market hours on Friday. Umang, good morning. Thank you for joining in. Talk about the margins first up, Umang, at 16.1% this time around. Can you tell us how much was the impact of the wage hike felt? How much did the currency depreciation contributed to it? And will you let this currency depreciation flow into the margins for FY27, or do you plan on reinvesting it back into the business? Because the last time you spoke to us, you mentioned that 16.5% to 17% is a fair margin band. Do you stick to that?
Hi, good morning, guys. Thank you for having me on your call. So yeah, EBITDA performance, as we have been discussing in our previous calls, also in our earnings statements, it's important, and we believe we'll be staying stable at around 16.5 as we continue to look at this business. While there'll be some one-time ups and downs that we may experience, but in general, the business should continue to stay stable at 16. Anywhere between 16 to 16.5 is where our current outlook is. This quarter did have a few, one-time things. We did a wage hike in the quarter, which had approximately a 1.5% impact circa on our performance, as well as there was the true up of the labor code impact. We had made some assumptions last quarter, but we had to correct those assumptions as we came into Q4. So there was a one labor code also. So overall impact for the year is around 30 crores in terms of labor code true up. But with that, that's the one-time item. We've executed all of that in this year. From cash flow and a few, we definitely had a healthy quarter, and we've been consistently delivering positive cash growth as we go forward. And we are strategically evaluating our options for the right deployment of cash. As you know, we have declared dividend, final dividend for this quarter, but we're still strong war chest and evaluating the right options for deployment of that cash.
Well, that's something would be an important trigger for you going forward as well. You said margin 16.5%. Is that what your, say, stated guidance for next year is?
Yes, in that range between 16.5.
All right, because earlier you had said 16.5 to 17% is a good position to have in terms of EBITDA margin. So we're just trying to figure out if you lowered that.
Yeah, we had earlier, when we started the year, our ambition was to go closer to 17. But given the kind of competitiveness that we have in the market, especially due to AI, as well as the investments that we are trying to make in terms of strategically move our business towards vertical focus and AI-led vertical focus, we believe holding margins at between 16 to 16.5 would be a good place.
That's interesting because, the street was worried a little about competitive pressures. So if you could throw some little more color on that, is it because large clients are asking for discounts, or by and large competitors have also gotten a little more efficient because of artificial intelligence is something that I'd like your commentary on. And while we're on the topic of artificial intelligence, TCS is about 7.5% of their revenue contribution from AI. Do you have a comparable vertical? Because you did close about 25 AI-assisted deals.
Yeah. No, the market going forward is a lot about how do we adopt to AI and how are we delivering AI in our businesses. It has multiple impacts, you're right, in terms of these client discussions and negotiations, especially the renewals of all existing deals that we have. There is, competitiveness there, and we are offering, and we've offered already anywhere between a 10 to 15% discount on those deals. But as far as net new deals are concerned, there are other cases, discounts or asks are significantly higher. It's a little double-edged while we are trying to protect our current business in terms of top line. The bottom line is still well protected because those efficiencies are also visible in the way we execute. Having said that, we are also strong pipeline momentum where a lot of new customers, when they are renewing their existing book of business, are looking forward to younger and more committed players like us to participate with an aggressive price offer. So that's one part of the business. The other part of the impact that we are, this is, while it is its ability to do tech in terms of coding and testing, etc., definitely is phenomenal. But the ability of AI to impact business in terms of clients' workflow, the way they execute, and all of that is equally sharp. So we are also starting to experience a lot of net new AI use case deployment kind of deals. And that kind of enterprise AI transformation is something that we are looking forward to.
So is it 7.5% plus? I mean, the number we didn't get.
In terms of numbers, it's so the way we look at it is a lot of AI, almost all programs that we deliver has a lot of AI. We're currently, for the year, we had done around 80 plus programs, which had significant AI components. So when we are calling a program, influenced by AI, almost 70-80% of the program is impacted. Either the deal came because of AI or is influenced by AI. Also, either the third category is where we are implementing net new AI use cases or transformation or discovery for AI. So these are still growing in numbers. I would not call it as a separate line. It's basically that we do, whether it is digital or Oracle or Salesforce. A lot of AI deployment is happening across the line. So our intention is not to call out a separate line percentage as AI. These are programs that will be influenced by AI, while the capability could be digital areas.
What has been plaguing the US business, Umang, because the share of the business has come down, the revenue growth was in the negative this time around as well. Although UK is a bigger part of your business, that continues to do well, but the second biggest part, which is the US, that's not doing very well. So what's the what is troubling the business there, and what are the steps that you're taking to mitigate that?
So you're right, our North America business, in terms of revenue performance is still behind. Having said that, as we've been saying, we've made some important fundamental corrections to the business, right from the team to the focus, to our, the way we deal with clients, etc. And we're starting to see some really positive lead indicators. This is the second quarter we have seen growth in our order book momentum in North America. And we clearly see a positive order book growth continuing in the coming few quarters. A lot of our business was project driven also. So while we are growing net new, there was still some of these projects that were closing, and therefore the revenue impact is still not visible. But as the order book continues, we are very positive that in FY27 we would have turned around North America.
So when you are expecting a turnaround in FY27 for the US business, does the share of the revenue also normalize in that? And also you mentioned that FY27 will be a better year compared to FY26. So your dollar revenue this time around was 3%, you grew 3%. What do you expect this time around?
Yeah, as you know, we don't give any specific number guidances, but we're starting the year with very strong fundamentals, right? We have a much more stable leadership team in place. Our focus in terms of areas of business and investments are clear. Our AI capabilities are much more stronger, and we're seeing really good reciprocation from our customers on those AI offerings and services around AI that we are offering. As well as we are starting with a very positive and stronger 12-month order backlog. Putting all of, but still taking into account the macro uncertainties as well as some of the changing. We feel a balanced view that next year will be a much stronger year as compared to FY26.
Umang, thank you so much for sparing time, joining us today with your road, with the views on your road ahead for the company. Wish you good luck for FY27 as well. But just before we call time on the show, a couple of stocks. Jyoti CNC is now up 6.5%, so among the top movers on the Nifty 500 today. And the one stock that continues to grow from strength to strength is Ather Energy. That too is now up another 6% in today's trading session. So continues to do well for the month is Ather Energy, now back above levels of 900. Take your leave on this edition of Trading Hour from Manglam and me. Thank you for watching. Halftime report on the other side.
Stocks pull back as strikes by US and Iran in Hormuz cast a shadow over the markets. A reported second round of talks and ensures full closure of the vital strait. Utilities, industrials, financials gains, while realty and IT drag.
ICICI Bank delivers a strong show, beating estimates on income and profit growth, while HDFC Bank sees muted growth in income even as profits rise on lower OPEX and credit costs. The street also awaits clarity on its new chair.
CERC issues a draft on market coupling rules, naming Grid India as the operator for determining the market clearing price for key market segments. The stock of IEX slumps on this long-opposed move by the power exchange.
The board of Hirabai Trust proposes an amendment to allow non-Zoroastrians from becoming trustees soon after Venu Srinivasan resigns following a complaint. Meanwhile, another complaint is filed for violation of the lifetime trustee rule by Sir Ratan Tata Trust.
Hello and welcome to Halftime Report live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra, with me Sonal Bhutra and Vinny Motiwala. Well, it's turning out to be a session where we are seeing gains today. So we have the Nifty, which is up over 100 odd points at this point in time, and the Midcap index, which is up around 0.4%. So currently, yes, the situation globally is a bit tentative at this point in time, but the markets are showing some amount of confidence. We have the Bank Nifty, which is up at the high point of the day, up around 0.8%. Hi, guys.
Hey girls, good afternoon. And there's a recovery that we are seeing, right? Despite the pressure that we saw over the weekend, Nifty did recover around 200 points from the lows of the day, above the 24,450 mark as we speak. A lot of sectors which are contributing to that. Of course, Bank Nifty is one of them. Numbers of the weekend, a lot of them. ICICI Bank did really well, but HDFC Bank, that seemed to be a disappointment versus the estimates. But these two stocks, of course, on our radar. PSU Banking Index, that's leading the charts today, followed by energy and media. While we do have the realty and the metal pack, which is not doing so well. However, in last couple of minutes, we are seeing some of these stocks doing really well. So some of these metal stocks from the Nifty pack should come up for you on the screen, and they are at the day's highs. Also, Reliance Industries, which is leading to the move from the lower levels on the Nifty as we speak. So watch out for these names. But of course, earnings, they continue to be on our radar, Vinny. We are in the middle of that, but it's a long way to go.
Middle just started. I think we have a very long way to go. But yes, in terms of the markets, recovery, like Sonal mentioned as well. Advance decline ratio, let's pull that up, right? Still a bit more in favor of advances versus decline. So that'll be interesting to see whether we maintain or, that crisscross happen. And now that advance decline is favor of advance versus decline, whether this sustains is something that we'll be keeping an eye on through the day as well. Today, IT, that continues to be under pressure. But I want to highlight some of these names that are managing to hold on to very good gains, and at 52-week high are some of these capital good names. BHEL, Apar Industries, CG Power, we have Hitachi Energy, ABB, all these are managing to hold on to gains, and these are 52-week gains is what they're seeing coming in. Other than that, on the flip side, we have IEX, Cohance, which continues to be under pressure as well. So, about a day that we'll hope this recovery continues.
Okay, all right. So let's begin by telling you what do we have on the show today. We put the spotlight on power stocks in our What's Trending segment and focus on the stock move since the West Asia war and the recent developments in the sector as well. We also put the spotlight on the pharma space in our Quarter Se Quarter Tak segment and take the conversation forward with Systematics Group's Vishal Manchanda. And in our Movers and Shakers segment, we focus on Bharat Wire Ropes, Sterling and Winston, as well as ICICI Bank. Stay tuned for that.
Okay, all right. Well, let's get going in terms of a couple of stocks that we're tracking now. We have Vivek, who joins in to take us through all of the stocks that are moving around in trade.
Well, thank you so much for that. Clearly, the capital goods power space is what's capturing most of the headlines today. Stocks doing very well. Apart from that, have a look at a name like PTC India, IEX. Market coupling regulation is something that, is clearly having a significant impact as far as the market is concerned. PTC India holds stake in HPX, and IEX, of course, clearly negatively impacted by the market coupling regulation. In other stocks that we're looking at, BHEL came out with its provisional update as far as FY26 is concerned. Very strong Q4 is what the company appears to have, and over a 30% growth, revenue growth, 4% higher as far as BSE is concerned, one of the top movers in the last few trading weeks. Order win cheer for a couple of names, Sterling and Wilson Solar Energy as well as EMS Limited. Both of these names on good volumes, up in double digits today. When you're looking at some of the other names, from the broad end of the market, have a look at a name like Prism Johnson. This particular name on good volumes today, one of the top gainers on the NSE 500 index. And Bharat Wire Ropes, on the upper circuit on Friday. And today, the Lloyds Metal Group has picked up, some more stake. That was the clarification that came in post-market as that stock higher by over 7%. On the other hand, not too many laggards. In fact, most of the laggards have recovered from the day's lowest point. GMDC clearly standing out, down 5% from among the top NSE 500 laggards. Mastek, a guidance downgrade coming in as far as EBITDA margins are concerned. That stock low by almost 4% today. Some of the metals, especially aluminium names, after a stellar rally, seeing a bit of profit booking. Nifty Hindalco sale to under a bit of pressure today. And Coforge, very interestingly, two significant resignations. The M&A head of the company as well as the IR head have resigned, but that particular stock too has recovered from the day's lowest point.
Okay, all right, Vivek, thanks very much for that. So a lot of buzzing stocks today, but time for our What's Trending segment. Today we'll put the focus on the power sector, and Nimesh joins in to take us through the performance of the stocks in just a bit. So we have him joining in just soon enough. But before that, just want to point out a couple of stocks which are in focus. Trent, interestingly, comes out with its numbers this week. So that stock is up around 3.6%. SBI is gaining some amount of confidence after, ICICI Bank as well as HDFC Bank released their numbers. So State Bank of India is doing well. So that stock is up around 3% Asian Paints, there is that paint hike which has taken place. So Asian Paints and other paint stocks in focus. So up around 1.6% at this point. But let's, in fact, focus on the power sector. Nimesh now joins in to take us through the performance of stocks and valuations since the start of the West Asia conflict. We will follow it up with the recent developments with IEX, which is under pressure today, and Motilal Oswal's view on T&D stocks as well. Nimesh, over to you first.
Hi, Tana. So even if you look at today's market, the large part of the winners have come from the power space. And this is exactly what I put out on Friday as well in the ERT, where I said, since the Iran war broke out, the big emphasis has been on the power security. And hence, you've seen a big outperformance in all the power stocks. So essentially, large part, across the board, whether it's thermal, whether it's renewables, whether it's even the EV businesses, all have done well and have outperformed in the last one month or so. I'll start with the thermal space first. Look at the kind of outperformance we've seen in the stocks like Adani Power, BHEL, for that matter, even Tata Power, all are buzzing in trade. But also keep an eye on the valuations as well. Something like a BHEL, it's up 4% even in today's market. But look at the valuations on 1 year forward. It's almost sitting at close to 90 times. Of course, on a 2-year basis, given the expectation of big earnings up move, it may look cheap, but on at least on 1 year, it's not that cheap. So that's the first part of the rally which we've seen in the thermal space. All are buzzing in the last 1 month or so. The second plate would be largely on the renewables. Even that space has done relatively well in the last 1 month or so. Look at the kind of returns we've seen. Wari, Premier, Acme, MB Photovoltaic, all are buzzing up between 25 to 35%. Here, the valuations have corrected actually from the recent peak. Like Premier, if I remember, was sitting at close to 60 times. Now it's come to 25 times on 1 year forward. So is Wari, so is Acme Solar as well as MB Photovoltaic as well. So that's the part of the solar space. Now look at even the wind space. Even that has seen a bit of a pickup in the last few weeks. Solar energy, Suzlon has collapsed from all the way from 80-85 to a low of 40. And since then, we've seen a 20% rally on Suzlon as well. That's sitting close to 30 times. And so is a couple of other names. Even Inox Wind. If you look at the chart of Inox Wind from 200, it has fallen to 75. Now seen a bit of an uptick in Inox Wind as well. Last but not the least, which also was a part of the Motilal note today, that was part of my list as well. All the transformer companies have seen a big rally in the last month, week, for that matter, Y2D as well. All of them are trading expensive, and that's exactly what Motilal has also said. While the growth seems to be quite strong, keep in mind the valuations as well. GE is now trading at 72 times. Hitachi is trading at close to 90 times on 1 year forward. So there is a lot of momentum now which is playing out in the power space across, as I said, all sets of sectors or stocks have done really well. Some of the reasons is there is a big tailwind which is expected because of this Iran war. So that's given. But keep in mind, for some of these names, the valuations are expensive as well. The last list is all the PSU stocks, REC, PFC, all are buzzing off late. Well, for REC, PFC, P is not a right way to look at, but again, they are not very, very expensive. So, as I said, the big tailwind seems to be, demand deficit, big tailwind in terms of sector doing well, lot of, momentum as well. And also energy security will be a big play with the government focus. But at the same time, also keep in mind there are some headwinds as well. Execution is going to be a big challenge. Valuation is a big challenge for a lot of companies like BHL that I pointed out. So net, the entire focus in the market seems to be the energy theme, and that's clearly playing out in the last 1 month.
Very interesting data, Nimesh. Thank you so much for joining us and putting this all together. That's the big risk, right? What happens with the execution? There's an interesting note by Motilal Oswal as well on transmission and distribution plays. Vinny, tell us more. Valuation remains a concern again.
Absolutely. Nimesh just highlighted it as for us as well. So let's talk about what are the points they're highlighting and why are they positive on this one. One, they believe that obviously the capex cycle that these companies have announced, all the transformers and distribution side of the company, they've announced capex over the last couple of years, and that will start playing out for these players. They believe that these companies will continue to deliver strong growth. In the last couple of quarters, if you had seen, these players actually managed to see better growth versus other capital good players. Now, apart from that, HVDC projects, that's increasing. So that's a positive that comes in from the India side and for domestic players. So their share starts increasing in this. Global demand, that remains strong. We have heard a lot of commentary coming in from, parent companies of GE Vernova, Hitachi Energy. They all talk about how the demand is there, and that means even these companies will get orders. So export opportunities, that is there for these companies. That is some bit of a supply gap that is there in transformers. That means they will have more in terms of expansion, and that will play out well in terms of revenue ramp up to make the transformers as well. Valuations, like even Motilal Oswal is highlighting, it's not cheap, and that continues to be a bit of a concern. But earnings upgrade is there, export opportunity is positive. That's why they initiate coverage on CG Power, buy rating target price 900 rupees, Atlanta Electricals, buy rating initiation 1,650, GE Vernova, Siemens Energy, they are maintaining their buy rating. Hitachi Energy, they've upgraded to a neutral rating, and you can see the target price on the screens. Valuations also coming up for y'all. Historic valuation, they're much above that. The current valuation is much above the historic valuation as well. And GE Vernova today itself is actually trading at peak valuations. So
I just want to add to what you've mentioned, right? I mean, of course, the Motilal Oswal report also mentions a bit of risk in terms of these particular stocks. But I'm going to put a good note, which is part of my graphics as well. In terms of the key worries, for HVDC, the order visibility is not that strong in FY27. They all are sitting on good orders, but those are all backdated, which everybody knows, the market knows about it. In terms of phase transmission execution, that there is going to be a limited upside, at least in the very near term. Even the thermal demand has picked up, so there will be a bit of a question mark on the renewables as well. I just want to put out, while everybody's talking about power as a theme, we put out the data as well as to how these stocks have rallied. Bit of valuation concerns as well as it's not going to be a one-way straight rally. So one needs to be mindful about valuations and the fact that there's going to be a few challenges in terms of execution as well for many of this, especially the T&D companies. So yes, there is momentum. Yes, there is a long tailwind, but watch out for valuation and watch out for execution for some of these companies.
Okay, fair enough. Nimesh as well as Vinny, thanks very much for taking us through that entire comprehensive list of stocks which are in focus. But to take this conversation forward as well as, talk about the markets a little more, we do have Rajesh Palvia who's joining in. He's the tech guest who is joining in for a couple of questions. Rajesh, over to you. First, just wanted your thoughts in terms of the markets. We're seeing a little bit of momentum on the upside, or maybe some amount of, resilience, you'd have to say. How would you approach it?
Hi, good afternoon. So we have taken the support from 24,200 put-based concentration. And in this recovery, the major put writers are aggressive at 24,200, 24,300 strike. Which seems to act as a support area for near-term perspective. So till Nifty is trading about 24,200, I think trend is likely to exhibit on the bullish side. Though Nifty is now negotiating with its 50-day moving average supply area, which is almost placed at the current market price of the Nifty. 24,450 is the important level to watch for during the day. If we are able to take out these level on a closing basis, then yes, we could see further more short covering action to play out, and then possible extension of rally towards 24,600, 700 we may see in the coming days. For Bank Nifty, again, the similar kind of structure. In initial dip, we took support almost from the major put-based concentration of 56,200, 300 zone, and recovery took place from those level. But still, again, on the bank Nifty front also, it's negotiating with its 50-day moving average supply area, which is placed at around 57,000 level. So that level needs to watch closely. If we able to take out a 57,000 level, then here also short covering action cannot be ruled out. Some of the pockets where continuity of uptrend is there, capital goods, automobile, metal, these three pockets are continuously showing buying interest, and momentum is there in this space. So I think for trading point of view, one can focus on these three sectors where a lot of opportunity are there. On the stock specific, most of the stocks are trading about to their near-term, short-term breakouts level. So here one can find out lot many opportunity on the trading side on the stocks front.
Rajesh, then can you quickly tell us those opportunities? The markets have also come up from the highs a little bit. So it's a short-term play, or is it a long trade that you're doing?
No, trades are on the long side only. First one is Jindal Steel and Power. Stock is now able to take out its previous swing high. Looking at the data setup, long built up is there. This is the third consecutive week where stock is making higher high-low formation. It's a sign of sustained buying action. We are bullish on Jindal Steel and Power and projecting target of 1340, 1350. One can buy and accumulate with stop loss of 1265. The second stock is from the capital goods space, that is ABB. Stock is moving in upsloping channel on a weekly chart. And looking at the long built up, we believe that this stock has potential to extend gain. Possible target towards 7,400 to 7,500 we could see in the near term perspective. So ABB is also buy with stop loss of 7170.
Okay, ABB is also a buy. Actually, I was going to ask you on the capital goods space. And this is despite ABB actually YTD performance, it's gone up 41, 42%. Can you even look at the charts for us for maybe a Siemens Energy as well, or even a Thermax? All of these also are the names that have run up as well. Anywhere, maybe it's time to book profits. While obviously we just spoke about the positives, pros and cons, but anything on the charts here?
But Vinny, if we look at the structure for all these stocks, most of the stocks now manage to give breakout on long-term charts. For Thermax, almost stock now able to give breakout of almost 7-8 month consolidation range. And it's a long-term chart breakout took place on the Thermax. So till Thermax is trading above 4050 level, I think here we could see continuity of buying interest. And I think in the near term perspective also, we may see a target of 4,400, 4,500. So those who are on the long side of trade, 4050 needs to keep as a stop loss. Even Siemens and BHEL, both stocks are also managed to give breakout of long consolidation. So I think most of the stocks are exhibiting the similar kind of structure. 7-8 month consolidation range breakout took place in all these stocks. For Siemens also, the breakout level is around 3,500, and till this stock is trading above 3,500, I think the next target on the higher side we may see towards 4,000 level also.
Okay, take that point. Rajesh, thank you so much for joining us today with your thoughts on individual names and this sector in particular. We'll slip into a short break. When we come back, we'll put the spotlight on the pharma space in our quarter Turks segment and take the conversation forward with Systematics Group's Vishal Manchanda. Welcome back. You're still tuned into Halftime Report. The markets have come off from the highs of the day. The Nifty is up around 75 points. We started with a 100-point uptick, and it's led by Bank Nifty. So majority of these names, Axis Bank, SBI, ICICI Bank, Kotak Mahindra Bank, leading to the losses from the highs of the day. So keep an eye out on the markets. And as we do that, we'll also get you all the sectoral expectations from Q4. It's time for our special Quarter C, Quarter Tech segment. Today, Ekta will tell us what Q4 FY26 will look like for the pharma sector. Over to you, Ekta.
After nearly 3 years of consistent earnings growth, the pharma sector may be heading into a phase of moderation. On an aggregate basis, companies under coverage are expected to post around an 8% year-on-year revenue growth, and led by the domestic formulation segment, which is likely to grow over 13% now driven by new launches and steady traction in chronic therapies. But the key pressure point this quarter is the US generics business, which is expected to see a sharp 25% odd year-on-year decline, largely due to lower sales of cancer drug Revlimid generic and continued pricing pressure. However, watch for some offsets such as a weaker rupee. Now, margins are where the real stress could possibly show up. EBITDA margins could possibly contract by even as much as 500 basis points to around 21%, impacted by lower high-margin product contributions, increasing marketing spends due to recent GLP-1 launches, and higher freight costs amid geopolitical tensions. As a result, the profit after tax could decline by as much as 30% on a year-on-year basis. Now, breaking it down for some key stocks. For Sun Pharma, the street expects around a 13% revenue growth. The US is expected to be aided by the recent launch of a key drug. For Cipla, the focus will be on how well the India business sustains momentum, with estimates of around 10 to 11% growth. The US is expected to decline by up to even 24% due to higher competition from the cancer drug Revlimid generic. For Dr. Reddy's, the street will keenly watch for commentary on semaglutide launch in Canada and the offtake in India. Lupin is expected to remain strong, with sales growth estimated at over 20% and margins of over 25%, led by the US markets. For Biocon, the street will watch for biologic sales expected to grow around 8%. CDMOs such as Divi's Labs are likely to see a decline in the generic segment, while higher freight costs could possibly impact margins. Expect Laurus Labs' revenue run rate to possibly soften versus the last 5 quarters. Commentary will continue to be key, with the impact of higher freight and some intermediate costs, and the launch and offtake of weight loss drug semaglutide to possibly be on top of mind. Let's leave you with some broad valuations on some of the key stocks. As you can see, Sun Pharma ruling the roost at this point in time, Cipla, Dr. Reddy's in a similar range, Lupin at around 25 times, and Divi's one of the most expensive plays within the CDMO space.
Okay, thank you so much for that, Ekta. But let's take this conversation forward with Vishal Manchanda, pharma analyst at Systematics Group. Vishal, good afternoon. Thank you so much for joining us on the show. Ekta started by talking about how this time maybe we could see a moderation that will come in for the pharma sector in terms of growth. One, what is it that you believe could do better versus other pharma companies, even if we are seeing a moderation?
Yeah, hi, good afternoon. So I think EBITDA margins will largely compress for most companies because, as Ekta discussed, you see Revlimid completely coming off this quarter. But one company that is immune from Revlimid genericization is Lupin. That would probably be the strongest performing company among the pharma pack. So we are expecting about 60% earnings growth there, and that would probably be even better depending on what royalty they will need to pay on Mirabegron. So this is one of their large products in the US, but incrementally this quarter, their costs around the product will increase because they have a settlement. But otherwise, it's going to be a strong quarter for them. Sun Pharma potentially can surprise on the upside, depending on how their specialty portfolio pans out. And I think if we look at the prescription trends, they probably should be able to kind of put a positive surprise on the specialty front.
Vishal, hi, good to see you in. This is Ekta. Wanted to ask you about Dr. Reddy's, because not only is Canada delayed in terms of the semaglutide launch, there's possible delays in Brazil as well. What would you like to hear from Dr. Reddy's, and how much do you think this delay is possibly going to impact stocks such as OneSource?
Yeah, so I think semaglutide is the most important launch for Reddy's for FY27. If that comes through, probably the pain of Revlimid will be less. Otherwise, it will be quite. So we'll see a sharp erosion in their EBITDA margins if semaglutide doesn't come through. While it's difficult to predict on what happens, but typically such products tend to get delayed. They get delayed by like 6 months, 1 year, or even more. So if we look at similar drugs from in Canada, which have been filed by Indian companies, we have seen 2-3 years since these drugs have been filed and they have not got approval. So maybe we'll have to treat these as free call options and assume that FY27 will be can be a weak year, but they have other launches like abatacept that might come through during the end of this year and then lift sentiments on Dr. Reddy's. One source could be impacted because that kind of is largely dependent on semaglutide for their growth, but we don't have coverage on that stock.
Okay, take that point. Vishal, what would you watch out for in terms of commentary from managements this time around? Of course, there's the weight loss drug. So much has happened with respect to the West Asia war and exports as well. So what is the most important tracking factor now in management commentary?
I think one is everybody is waiting to understand how raw material inflation is going to impact the numbers next year, because Q4 should be managed because there is inventory in the channel and companies should manage that. But next year, I think raw material inflation will be important. And then people will also like to understand whether there are any other complex launches that companies can get in the US beyond what we already know about each company. So that remains that can always be an area of surprise for most companies. We can see launches we don't expect in the US, so that's another area. And again, there is some companies have got a lot of cash on the balance sheet, and we need to understand how they kind of plan to put the cash to use. So Sun and Cipla are those companies which have large cash on their balance sheet. So that's going to be important.
All right. Well, you know, Vishal, that is possibly going to be top of mind. How exactly Sun Pharma is going to be utilizing that cash that they have on books and the possible acquisition of Organon. How critical do you think commentary on that would be for analysts and investors? And what's your sense in terms of maybe them even contemplating such a large acquisition at this point?
Yeah, so I think probably we might not hear anything on Organon acquisition on the con call. Like that was something they also avoided discussing in the previous con call. So probably I think we'll not get any inputs on the company, and they kind of have indicated on the exchanges that these are speculative, but they have not completely denied. That's also true. But obviously the acquisition is important, and everybody is interested to understand how this, whether they are pursuing it, because the street is not very positive about the acquisition, considering the scale and the leverage that it's going to bring. But we'll also have to consider that if they acquire Organon, Sun Pharma will be on a very different scale. They'll be kind of like a large global pharma company. So currently they are a small emerging large pharma, but then acquiring Organon will put them in a very different position among the innovator companies globally.
Okay, all right, Vishal, thank you so much for joining us with your thoughts and telling us what to expect from Q4. A lot of moving parts, so it'll be an interesting quarter for the pharma space. Time for a break now. We'll get going with the F&O setup at noon with Mangalam on the other side.
Welcome back to Halftime Report on CNBC TV 18. The Nifty has come up again to the day's highest point as of now. 24,460 levels is what the Nifty is at. 100-point uptick for the Nifty 50. Nifty Bank continues to hold on to gains of 6/10 to 0.7% in the trading session as well. But now let's move on, and on that note, bring on board Mangalam also, who's here to tell us what's happening in the world of F&O and what we should keep an eye out on. Mangalam, afternoon.
Good afternoon. So the market's doing well, like you pointed out. From lower levels, we have seen recovery. The Nifty holding around the 24,420 mark thereabouts. The Nifty Bank leading the gains. Midcap index doing well too. Just a couple of things that the street would have liked a lot better, though. One is the advance decline ratio. If you look at the advance decline ratio, yes, more number of stocks are declining than the number of stocks which are advancing. Street would have liked, that to be much in favor of advances as against declines. And the second part is the India VIX. When the market moves so much higher, after all of last week where advances far outnumbered declines and the India VIX was lower on a considerate basis, from 28 it's down to about closer to 16, 17 and now has moved back to 18. You would have liked the India VIX to be a lot lower as well. But having said that, a lot of stocks are doing well, and specifically the ones that belong to the retail space. So we have Trent, where the board will consider bonus along with numbers. So that stock's among the top Nifty gainers. And we are seeing some traction on V-Mart retail as well as Shoppers Stop in today's trading session so far as well. If you look at the options, 24,400 puts are seeing a lot of writing. For a premium of almost 100 rupees, that tells you that 24,300 is an important support. But we are seeing some traction on the 24,500 call as well. So the option writers are trading for a broad range of 24,300 to 24,600. It remains to be seen whether the Nifty stays, at current levels and grows beyond that, because one, it's crossed the 50-day moving average already. It's hovering around that level, and the Nifty Bank, which is leading the Nifty today. We have both, the 50 and the 200-day moving average very close to where the Nifty Bank is trading right now. So there is some congestion zone awaited for the Nifty Bank. And add to all of this, the put-call ratio too has moved to 1.3. Remember, the put-call ratio tops out at around 1.25 to 1.35. So that range tells you that maybe after a big rally that we've seen from the lows, there could be some consolidation ahead. So be mindful of that. But above and beyond that, a lot of stocks seeing a lot of long positions being added. Torrent Power is one of them. We are seeing some traction on Hitachi Energy along with Blue Star as well, which is seeing a fair amount of traction.
Okay, thanks so much for that, Mangalam. But other than that, capital market stocks, that's also what we're putting the spotlight on. Ekta, been in focus. There's a lot that's happening here as well. I'm going to give it to you to take us through what is happening and what is it that we're keeping an eye on.
Yeah, just a couple of key points with regards to some statistics on capital marketplace. The entire set of stocks have actually done well in the month of April. So if you look at Anand Rathi Wealth, you look at Anand Rathi Shares, Angel One, Grow, 361, Motilal Oswal, JM Financial, all of these stocks have rallied anywhere between 16 to over 30-odd%, close to 40-odd% for Angel One in the month of April. So there is a lot of traction which has taken place within this entire capital market space. Now, Angel One, for example, it released its numbers just a couple of days ago. It's up around close to 9% post its Q4 numbers. Anand Rathi Wealth is up around 4% post its Q4 numbers, and both are trading near their 52-week highs. So both of them have seen some amount of incremental traction and buying on after the Q4 numbers have been released. Anand Rathi Wealth has said that their FY27 profit is at around 460 crores, which is up around 19% on a year-on-year basis. That's the guidance that they've provided for FY27, which is quite strong. And Angel One says their broking and distribution margins are expected to cross around 45% in FY27. So this, with this data, just want to leave you with the fact that, Grow is going to be releasing its numbers today. We have 361, which is going to be releasing its numbers tomorrow. And Motilal Oswal and GM Financial will be releasing their Q4 numbers as well. They've not come out with the datas yet, but all of these stocks will be in focus on account of what's taking place in that entire space.
Okay, interesting data there. And, there have been conversations around maybe STT hike is impacting volumes and the number of subscribers has gone down as well. But that is not something that is showing in the stock prices, considering the results have been quite strong. But with that, we'll do one thing. We'll slip into a short break. On the other side, Manisha Gupta joins us with SVB Energy International's Sara Vakshori and focus on crude oil and the outlook going forward. Stay tuned.
Welcome back, and joining me now is Sarah Vakshori, who's the founder and president at SVB Energy International. Sarah, hi, thank you so much for joining in. I want to start by asking on what your sense is on crude oil prices, because one, we've seen it very, very volatile. It started from $70 before the West Asia conflict, went to almost $120, trading around that $95, $98 right now. Big divergence, of course, between spot and the futures market, even as second round of peace talks perhaps is underway.
It's always great to be back at your program, Anisha. Thanks for having me. So actually, it's very interesting because some interesting phenomena that we have been seeing since the beginning of the war in the past month and more than a month is the huge divergence and gap between the physical and paper market. We are in a historical high backwardation between the physical paper market. What that means is that the benchmarks in a stock market on a paper market, they're much lower than the oil traded at the physical market. Or in the other word, we can say the oil that today is traded in a physical barrel is sold at a premium of between $20 to $50 per barrel, which means we are having a severe shortage of oil. Nevertheless, the market, the paper market and the benchmarks are considering the traders' few factors. As you mentioned, one is the ongoing talks and the fact that the market is still optimistic that the flow of oil will resume soon from the Strait of Hormuz. And the second factors are inventories. The inventories in the market, and also the fact that IEA announced that they're going to release 400 million barrels a day. All of these are giving a cushion to the paper market to somehow react in a measured way. But the story in the physical market is very different.
Sarah, so are you looking at a new crude range now where $85 a barrel perhaps is a support and upside opens after $120?
I believe if the talks result or gives immediately, we have a headline in a market that US, let's say, and Iran have reached to some sort of peace agreement, and the flow of oil from Strait of Hormuz is going to resume from tomorrow, we're going to have prices reducing way below $90. But if we're having a case scenario that these talks are going for further, or the closure is going to be prolonged without any prospect, and also on the other side, without intensification of assets being targeted, then staying around the same range. You know, the important part, there are two things that we have to understand from beginning. One is that this war is going to cause volatility. So volatility would be the norm until things resume permanently, or markets have somehow that understanding that things are going to be resolved. Otherwise, change of headlines every day, change of prospects every day causes volatility in the market. And the other factor that is important in the market is the timing. So how long we're going to have Strait of Hormuz being closed? Because as of now that we're talking, still we're having the inventories in the market that creating that cushion. Nevertheless, as I mentioned, these inventories are uneven. They are not evenly distributed around the world. So different countries could hit differently and have different resilience. But overall, the time is an important factor. So time and volatility would be two factors that consistent and certain that we could be certain about them.
Oh, yes. Sarah, the even more important question is that the way things are in West Asia right now, will there ever be a permanent resolution? Because the markets do believe that with what's gone on in that area, an issue perhaps can just about spring any time.
As you said correctly, many things has changed, and something fundamentally, if you just look at it in terms of energy and energy infrastructure, there are two things that's going to change permanently. One is the view of investors in the region. How fast the investors are going to be convinced to come back to the region and invest in the energy industries. Again, I'm not going to put all the countries in the same categories. There are certain countries that might be more, give more confidence to investors, some of them less. The second thing is the export rerouting and diversification of logistics. We have seen that how Saudis could quickly reroute a huge portion of their export from Red Sea, the East-West pipeline that has been playing a crucial part in global energy security within this crisis. And also we've seen it's being targeted. The Saudi Aramco was able to restore the pipeline quickly. So it tells us that how diversification of logistics and also quick restoration of that has played a crucial and important role for energy security. So we are seeing other countries trying to rerouting their oil, like for instance, Iraq trying to reroute its oil through Syria, through Turkey, some of the products. So we are going to see a long-term change in terms of the mentality of a lot of producers to look and search for alternative ways, a lot of diversification in terms of export routes, infrastructure, investments, thinking differently, and also importers. I'm sure that this is the historical, the highest interruption in the market, historically worst disruption in the market. Last time in 1970s, when the oil shock happened, we had a whole rechange of thinking about global energy security, especially among importers. So we might see more inventories being built and also more resources, alternative sources from coal to renewables being approached by major energy consumers to be part of their energy portfolio. So we're going to see a lot more of diversification of resources, suppliers, logistics, and also inventories.
Sarah, thank you so much for joining us with your insights. Thank you, Manisha, for taking us through this conversation. Crude oil prices, the most important conversation since the time the West Asia war has started. We'll slip into a short break now. When we come back, we'll focus on our movers and shakers segment and get you some stock-specific information. Stay tuned for that.
Welcome back. Well, for the markets, it's holding steady at this point, but just watch out because this is going to be a very hectic week in terms of numbers. We do have stocks such as Nestle, HCL Tech, Persistent Systems, We do have even companies such as Axis Bank as well as Trent, which will be releasing its numbers along with TechM. So it's going to be a heavy week in terms of numbers, definitely. So a lot will be in focus in terms of specific stocks. And Trent will be considering a bonus for the first time ever as well. So that takes place tomorrow, or rather on the 22nd of April, which is on Wednesday. So to watch out for that. Well, let's focus on some movers and shakers, which we are tracking at this point. There's a whole host of stocks which are buzzing. We have Ananya who joins in on ICICI Bank first. Ananya, over to you.
So ICICI Bank reported a steady Q4 with net interest income rising 8.4%, profit after tax rose 8.5%, and as management highlighted, core operating profit grew 5.1%. Now on a full year basis, the bank's standalone net profit crossed the 50,000 crore milestone, underlying strong earnings momentum. Now coming to the asset quality side, now asset quality continued to improve with the gross NPA ratio declining to 1.40% from 1.67%, and the net NPA ratio improving to 0.33% from 0.39%. The bank also remained comfortably capitalized with capital adequacy ratio of 17.18%. Now, on the con call, the management noted a 106 crore treasury loss in Q4, driven mainly by market movements in RBI foreign exchange measures. Now, at the same time, provision declined by about 89% and were under 100 crore, which helped by better asset quality and better recoveries. Now, overall, it was a stable quarter for the company.
Ananya, thank you so much for joining us with all those details. It's been a busy weekend for you, but let's talk about some more stocks in the broader markets which are moving around and big moves there. Sterling and Wilson got an order. That stock is up around 14%. We do have Equus, which has been a new listing, been buzzing for a while now. That stock is the other one, which is up around 10.5%, and Quality Waltz is the other stock on our radar. But IEX is the one which is in focus, has declined more than 6% in trade. Vivek is here to tell us why. Vivek.
Well, that's right. So, the main reason why IEX is in focus today is the fact that CERC has gone ahead and released a draft as far as power market regulations for introducing a formal framework for market coupling is concerned. They've invited stakeholders and public feedback by 16th of May 2026, and detailed procedures for market coupling is going to be issued within 6 months itself. Now, what is it that the draft is saying, and why is IEX in focus? The draft says that Grid India henceforth will now act as the MCO, the market coupling operator. So Grid India basically will collect all of the bids. They will also determine the market clearing price, which hitherto was being done by the power exchanges. So power exchanges were collecting the bids, and they were also going ahead and determining the clearing price. IEX, being the market leader in this particular space with the highest market share, will see this particular process, or the price discovery process, going away from it, and which is why most of the analysts on the street have a negative view on the back of market coupling. The other important point that we will need to keep an eye out on going forward is that whether there is any price cap that could happen as far as broking charges are concerned on power exchanges, and that could be an additional headwind for most of the power exchanges. On the back of that, as you mentioned, IEX, one of the top laggards today.
Okay, Vivek, thank you so much for joining in and telling us what's happening in IEX. But on that note, we're going to step into a very short break. We'll come back with more on markets and stock specific after the break as well.
Welcome back. Off the highs yet again on the Nifty. We are at the 24,430 mark. Okay, all right. So my system is not showing me the right rates. We're at the day's high again, and some of these steel stocks are leading to the gains that we are seeing right now. JSW Steel, for instance, is at the day's high. We do have Tata Steel as well, which has made a substantial recovery from the lows. Look at that, and it is up around 3% We do have some of these IT names which are doing well. So something like a TCS. We do have Eicher Motors too, which is doing well and is at the day's high. So some of these stocks which are leading to the recovery that we are seeing from the lows of the day. Interglobe Aviation is the other one, which is at the day's high and looking good for now. Overall markets decent for now. We have seen a substantial recovery from the lows. We'll have to see whether that sustains or not.
Absolutely. We'll keep an eye out on the sustenance of this up move that we're seeing in the market as of now. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, your Business Lunch.
Stocks pull back as strikes by US and Iran in the Strait of Hormuz cast a shadow over a reported second round of talks and ensure full closure of the vital strait. Utilities, industrials and financials gain, while realty and IT are the big drags.
ICICI Bank delivers a strong show, beating estimates on income and profit growth, while HDFC Bank sees muted growth in income even as profits rise on lower OPEX and credit costs. The street also awaits clarity on its new chair.
The CERC has issued a draft on market coupling rules, naming Grid India as the operator for determining the market clearing price for key market segments. The stock of IEX slumps on this long opposed move by the power exchange.
The board of Hirabai Trust proposes an amendment to allow non-Zoroastrians from becoming trustees soon after Venu Srinivasan resigns following a complaint. Meanwhile, another complaint is filed for violation of the lifetime trustee rules by Sir Ratan Tata Trust.
Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormaz Fatakia. With me, as always, Arundhati Raman. And Arundhati, good afternoon.
Good afternoon, Hormaz. The market's holding up well in the green. You know, the Nifty just now was above that 24,450 mark, but is at 24,432 as we speak. Banks outperforming.
They're doing well. The bulls will take that because, of course, there is some congestion at that 24,500 mark, nearing that 50-day moving average on the index. But on a day when oil prices are rebounding, the Dow futures are still down around about 300 odd points, although even they too have cut back their losses by almost 50%. The bulls will take that because at that one point, the GIFT Nifty was up around 400 odd points on Friday after the announcements that were made and then the subsequent session on Wall Street. But as of now, with the developments over the weekend, the index is doing well for itself, still above that mark of 24,400. It has managed to cross last week's high, but the key is that it needs to sustain above that last week's high, and that is 24,400. For now, it's holding on to those levels, and the principal contributor to this recovery from the opening lows has been the Nifty Bank, and that is also courtesy ICICI Bank and a lot of these PSU banks that are doing well, led by State Bank of India and of course Bank of Maharashtra, which comes out with numbers in just a few minutes from now. But overall, they're doing well for themselves are the markets today, contrary to expectations considering the weekend developments, and the bulls will be happy with that.
Absolutely. You know, banks have been in focus today, right? After results came over the weekend, ICICI Bank gaining after a good set. And that's what's helping the Nifty also gain. PSU banks, that's the top gaining index, as Hormaz pointed out. SBI soaring 3%, Bank of Baroda 1.5% higher, Canara Bank over 1% in the green. We've got those energy names as well that are doing well. Adani Power, CG Power, BHEL, all of them between 3 and 5% in the green. But on the downside, we've got those realty names, Lodha, DLF, and Oberoi, all of them in the red as we speak.
And on to the top story that we have been tracking over the last few weeks, the fragile ceasefire between the United States and Iran is due to expire by Wednesday, but tensions seem to be escalating as the US Navy has seized the Iranian-flagged cargo ship Tosca in the Strait of Hormuz, prompting warnings of retaliation from Tehran. US President Donald Trump said in a Truth Social post that a US Navy guided missile destroyer fired on and intercepted the Iranian ship and had given them a fair warning to stop. The seizure is an escalation of the blockade and comes after Iran fired upon commercial vessels attempting to transit the Strait of Hormuz earlier on Sunday. Meanwhile, US President Trump also announced that he was sending his team to Pakistan's capital Islamabad for possible talks with Iran. CNBC's Dan Murphy is now joining in with the latest updates. Dan.
What we understand is that a high-level US delegation will reportedly head to Islamabad for a make-or-break second round of peace talks with Tehran, with the ceasefire set to expire on Wednesday. The US Energy Secretary Chris Wright striking an optimistic tone earlier, saying President Trump is looking for maximum leverage and also predicting a deal will be reached soon, he says. Listen in.
There are negotiations with the Iranians going on, despite what you hear in the chatter in public. I think those are actually going well. I think before long, you'll see an agreement that achieves the United States' end, puts an end to the 47 years of terrorism launched from Iran, and probably launches Iran on a better trajectory for its own people as well.
The Energy Secretary Chris Wright there, of course, he has been sounding optimistic, but at the same time as well, the Iranians haven't even said that they will actually attend these talks, and what we can expect to see on the ground in Islamabad, of course, remains to be seen. At the same time as well, President Trump also striking a very different tone on Sunday, Trump accusing Iran of a total violation of the truce, and he said if Tehran doesn't sign a deal, he threatened to, quote, knock out every single power plant and every single bridge in Iran. President Trump also revealed on Sunday that US forces had seized an Iranian-flagged ship in the Gulf of Oman, which is the first first known use of force in the US blockade. The UK Maritime Trade Operation also confirmed Saturday that IRGC gunboats opened fire on a tanker, and Reuters reported at least 2 other vessels came under direct fire as well. So we have seen a return to hostilities in the Strait of Hormuz after, of course, what was expected to be a calming of tensions there. We saw Iran's foreign minister also speaking on Friday, saying the waterway was going to be open, only to be publicly overruled by the Revolutionary Guard. And that split is really important because it exposes what we also know to be true, that the pragmatists seeking a deal are very far away from the hardliners who want more leverage at the table. And of course, they're not necessarily always on the same page, which is also adding to the confusion as we come into these talks. Certainly adding to the confusion inside the oil markets as well. We saw a huge whipsaw in the price of oil, down 10% on Friday on the Iranian foreign minister's comments, and then up almost 10% in Asia trade today. So markets certainly trading on the headlines here as well. It is reported that the Vice President, J.D. Vance, is expected to lead this US team. He'll be joined by the Middle East envoy Steve Witkoff and Jared Kushner as well. But as I mentioned, the gaps here are very wide. Washington wants Iran to reopen the strait and surrender its enriched uranium stockpile and freeze enrichment for at least 20 years, as it's being reported. Tehran, for its part, wants continued control of the strait, full sanctions relief, and a much shorter suspension when it comes to that uranium enrichment. So a lot is riding on this as we come into the ceasefire deadline, which is quite literally now just hours away.
Absolutely. Thank you so much for taking us through those details, Dan. But let's also listen into what experts had to say about the second round of peace talks that is likely to take place in Islamabad later today.
I think this is the last chance to achieve an agreement before the ceasefire expires. And I do assume that the president is telling the truth when he says that there will be a resumption of a bombing campaign directed at Iran's power plants and bridges. I don't know what all that entails, but at least the ceasefire will end sometime tomorrow night or Wednesday morning, depending on whose time it is that the expiration takes place.
What we see is that the Iranians have a strategy: engage and tie down the president in negotiations, but then drag their feet, make the negotiations difficult, undermine them from within, so that the oil price remains uncomfortably high and you start to galvanize policy change in the United States. Negotiations themselves are very tenuous, very flimsy. They've also had to be pushed back several days, and we see this ratcheting of tensions ahead of time to build leverage. So what that reflects, though, is not the fact that Iran can afford to have the president expand the attack to target their economic capacity. They really don't want that extension, and President Trump is constantly reminding them that he can take out power plants, bridges, economic capacity. So they do have a major incentive to continue to engage in negotiations. They're drawing them out in order to draw out the economic pain until the point at which they're absolutely forced to sit at the table.
Now, oil prices too have seen a bit of a rebound after they tanked on Friday as tensions between the US and Iran rose ahead of the expiry of the 2-week ceasefire window later this week. Manisha is here with more on this. Manisha.
Well, it continues to be very, very volatile for the crude oil prices after that 10 to 11% of a decline on Friday to almost 6 to 7% of gains in the Asian markets right now. This is as we have had the geopolitical tensions between US and Iran flare up yet again, with the US Navy freezing and seizing Iran-flagged vessel in Gulf of Oman. And Iran also has targeted ships reasserting control of Strait of Hormuz. So we are back again at the same level therein, with expectation that the second round of peace talks, which are expected to happen today in Islamabad, perhaps can get a more permanent resolution therein. Having said that, it is about the crude and products that already have been lost, with markets believing that even if the war was to stop tomorrow with Strait of Hormuz opening as well, it would take anywhere between 4 to 8 months for these crude supplies to come back. You have 500 million barrels of crude and condensate out of the market right now. 80 oil and gas facilities have been damaged within West Asia there. And it also is about the Gulf Arab countries, which are losing to the tune of around nearly 8 million barrels per day of crude every single day. Now, when you look at jet fuel exports from Middle East, which is Saudi Arabia, Qatar, Kuwait, Bahrain, Oman, UAE, etc. In the month of Feb, the jet fuel export was 19.8 million barrels per day, which in March and April has come down to just about 4 million barrels per day therein. So the US is looking to renew sanctions on sanction waivers rather on Russian oil at sea, and that perhaps could lead to 200 million barrels being taken off or consumed by Asian countries. A bit of a support coming in there. But until the time you see a resolution to this whole thing in West Asia, the markets do believe that one, the crude prices will continue to be volatile, and two, $85 a barrel continues to be a strong support as well.
Manisha, thank you for that update there. Numbers from Grow flashing at the bottom of your screens. 24% revenue growth compared to the previous quarter. Margins have also seen an expansion led by that strong revenue growth. So 3 percentage points expansion in its margins at 62.4% from 59.2% in the previous quarter. EBITDA too has seen a 30% growth. So on the face of it, the numbers look good on a sequential basis, but you need to keep in mind that the stock has run up significantly, particularly this month from roundabout levels of 150. The stock went on to make a high of 214 last week, and it has doubled from its issue price. Now the issue price was 100 rupees, so we need to keep that in account. So it almost looks as if the numbers, the street anticipated good numbers, and that showed up in the price itself. We'll get more details on how the MTF book has grown for the company and a lot of other details, be it active clients and so on, in just a bit. But as of now, the prima facie numbers look good for Grow.
Absolutely. Q4 numbers looking good for Grow as we speak. But on that note, it is time for us to slip into a short break. But before we go, we are proud to bring back HSBC presents CNBC TV 18 Future Female Forward Season 4, co-presented by Cognizant, with a powerful cultural launch gala in New Delhi. Top industry leaders come together for a dynamic town hall on equity and leadership in New India, along with curated entertainment performances. The launch will also see the announcement of a special advisory committee to guide female micro-entrepreneurs through the year to drive more meaningful impact. Tune in on April 23rd, 5 p.m. onwards, only on CNBC TV 18. Welcome back. You're still with us on Business Lunch. HDFC Bank and ICICI Bank are both in focus after reporting numbers over the weekend. Ananya is joining us to bring us all of the details and the key highlights from those numbers. Ananya?
Now, over the weekend, we saw key banking results giving good overview on the sector's health. Now, coming to HDFC Bank, they delivered a stable quarter with some mixed underlying trends. Now, net interest income grew around 3% YOY, but came in below expectations. Profit after tax was up about 9% YOY. Now, advances grew 12%, but was below industry pace. Now, while deposit was stronger at 14%. Now, on the positive side, asset quality improved with GNPA around 1.15% and NPA at 0.38%, with capital adequacy remaining strong at 19.7%. Now, management also acknowledged the leadership-related development with no recommendation for chairman's name still made to the RBI. And they also mentioned that the legal review for the chairman's exit is still ongoing with no clear timeline. And on the Dubai issue, they mentioned that the regulator's order clearly stated that the customers were not uninformed. Now, in contrast with this, ICICI Bank delivered a healthy quarter. Now, NII grew 8.4% YOY and profit after tax rose 8.5% with steady operating performance. Now, loan growth was healthy at 15.8% and deposits grew 11.4%. Now, the standout was asset quality. GNPA improved to 1.4% and NNPA to 0.33% with provisions dropping sharply below 100 crores. Now, management remained confident about growth and said that the credit costs will remain below at 50 basis point. Now, strong liquidity with LCR above 125% is expected and continued momentum across segments. So, overall, HDFC Bank delivered a stable quarter, but development around leadership and in the ongoing review will keep the sentiments watchful. And for ICICI Bank, it was a very healthy quarter.
Ananya, thank you for those updates there. Now, Jio Financial Services reported a strong operating growth with net interest income rising 29% from last year. Listening to MD and CEO Hitesh Sethia on the company's fourth quarter performance and the planned trajectory ahead.
NBFC has been our growth engine for this year, and that, as we have reported, has got a 25,700 crores plus of assets under management, primarily focused on secured lending. That growth has been from about 10,000 crores a year ago and practically zero about 2 years ago because we got demerged around that time. So that growth has been fantastic. It's been primarily across mortgages, loan against securities, and a bunch of corporate lending solutions that we offer for our customers. We are very mindful of operating profit and making sure that at unit economics, every business scales, they deliver operating bottom line for the shareholders. We started with a suite of institutional products, the cash, money market, and liquid funds. And thereafter, we've launched over close to a dozen, I would say, retail products. The product pipeline is very strong. We have also announced that we are getting into the gift city. We've got some set of approvals already in there. We are launching our SIF product in due course. So clearly expanding the product suite in the coming year is one clear agenda. In July last year, we had announced that we had entered into a non-binding agreement with Allianz to get into underwriting both on the life and general side. Work is underway, and hopefully once we reach certain milestones, we'll be happy to report that back to you. But insurance isn't. The advantage we have is being a AAA rated entity, and we've reported our cost of funds. We closed the year at 7% cost of funds, which we believe is the best in the industry compared to all other AAA rated peers. Clearly, with leverage going, the net interest margins will come down. I mean, that's simple math, but that is necessary fuel for growth. So we believe that we will continue to grow absolute margins. We will continue to grow absolute profitable business, and asset quality so far has been very stable for us. Given that we are at the, I would say, conservative end of the risk spectrum, given nascent stage of our business.
And on that note, it is time for us to head into another short break, but more news and updates continue on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. Sir Ratan Tata Trust is facing a legal notice over alleged violation of Maharashtra Public Trusts Act. Shireen Bhan is on the phone line to take us through all of those details. Shireen?
Well, thanks very much. Yes, a fresh legal notice being sent to the Sir Ratan Tata Trust. Now, remember, this is one of the key trusts that controls Tata Sons. And this legal notice raises fresh concerns on the trust board composition. The notice reiterates concerns of violations of Section 30A2 of the Maharashtra Public Trust Act by the Sir Ratan Tata Trust. The notice essentially says that the trust presently has 6 trustees, out of which 3 are functioning as perpetual or lifetime trustees. Now, this constitutes 50% of the board, which this notice claims is the direct contravention of the statutory mandate. Now, just to inform our viewers, Section 30A2 of the Maharashtra Public Trust Act says the number of perpetual trustees or lifetime trustees shall not exceed 1/4 of the total number of trustees. The notice also goes on to say that the continuation of the present board composition is illegal. The composition of the present board defeats the legislative intent of preventing the entrenchment of a small group of lifetime trustees and ensuring greater accountability in the management of public charitable trusts. It has called on the Charity Commissioner to convene an urgent board meeting of the Sir Ratan Tata Trust and place before the board the need to rectify this so-called violation. So this is a fresh battle that has opened up, a fresh battlefront that has opened up, reiterating one of the concerns that had previously also been raised by the former trustee, Meli Mistry. Separately, there has been a decision taken by the Tata Trust to also ensure that concerns linked to the Bhai Hirabai Trust are also rectified. Remember, Ratan Tata had sought legal precedents in 2000, which had stated that the trust should not adhere strictly to the eligibility criteria of having only Zoroastrian trustees. Now the Tata Trust has said that they've always believed in inclusion, in being secular and all-encompassing, and hence they will move an amendment to change the deed, the trust deed of the Bhai Hirabai Trust. This is, of course, also part of the larger group of Tata Trust. But at this point in time, several developments taking place over the weekend, and the big one, as we reported, is the legal notice sent to the Sir Ratan Tata Trust seeking a recomposition of its board.
Shireen, thank you very much for that update there. Now, in a major operation, the drug control officer in Gurugram, acting on a tip-off, has seized a consignment of fake injections of Eli Lilly's anti-diabetes drug Mounjaro. Timsy is here to tell us more on that. Timsy.
Well, yes, that's what officials are saying, and that's what we've learned from our sources, that acting on a specific tip-off, officials were alerted to the illegal sale of suspected counterfeit versions of Mounjaro's quick pen injection, which is an anti-diabetic diabetes drug in multiple strengths ranging from 2.5 mg to 15 mg. Now, this was a joint effort between the state drug controller, that is the state drug inspector, and police of Gurugram, who actually caught hold of this syndicate by seizing a car which was carrying these injections, which were worth over 56 lakh rupees. And these injections were being seized from Supermart 1 in DLF Phase 4 at around 7:25 in the evening on 18th April. And this entire exercise continued till early hours of 19th April. Now, 2 people have been allegedly also arrested. Mujammil Khan, who claimed to be a medical representative, and Avi Sharma, to whom this consignment was getting delivered. But when he was asked by the officers to show a proper sales license, he could not produce so, and thus these 2 are allegedly now under arrest under various provisions of the Drugs and Cosmetics Act. Now, both Avi Sharma and Mujammil are being they are being arrested under the charges that are related to spurious drugs and sales without license. Also, investigators are now probing the wider network, if at all exists, in Gurugram or nearby areas. Also, they say that these drugs that have been seized have a lot of discrepancies. They were not stored under the proper medical conditions, that is, but in cold conditions. Also, these drugs were found to be having several discrepancies on the labels, including font mismatch, punctuation marks, etc., which clearly shows that these were spurious drugs. Further investigations are underway. Let's see whether this is a larger syndicate or just a small one working. Back to you.
All right, Timsy, many thanks for taking us through all of those details. But a quick check on the markets. Now, the Nifty is below the 24,400 mark at 24,361. And the Midcap and the Nifty Bank now in the red, 0.1% lower. But with that, it is a wrap on this edition of Business Lunch. Midcap Radar takes all the action forward. Stay tuned.
Good afternoon. Welcome to Midcap Radar. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Vivek Iyer. Well, we did recover sharply from the lows of the day, and we've fallen as sharply. And Nifty is below the 24,400 mark for now. Just a 31-point gain. At a point in time, we were trading with gains of around 100 odd points. And Bank Nifty is the one which is leading to those cuts from the highs. And a lot of these IT names will continue to be on a radar. And a very busy week with respect to heavyweights on the Nifty.
That's right. Good afternoon, Sonal. So Bank Nifty, like you mentioned, dragged lower by Kotak Mahindra Bank, Axis Bank, and along with that, what we're actually seeing is that small cap index has slipped into negative territory. A lot lined up on the show, an important corporate conversation as well. So let's start off with the top headline. Market falls from the day's high as the Nifty trades below 24,400 levels. Utility, industrials, and financials gain, while realty and IT dragged.
Bharat Heavy Electricals gains after the company reported robust provisional financial performance for FY26 and growing optimism around the company's execution outlook.
CERC issues a draft guideline on market coupling rules, naming Grid India as the operator for determining the market clearing price for key market segments. The stock of IEX slumps on this long opposed move by the power exchange.
Sterling and Wilson zooms in trade after the renewable major bags new domestic orders worth 3,550 crore rupees. The value of the orders won amounts to 70% of its overall market capitalization, which stands at just above 5,000 crore rupees.
And growth sees a sharp fall despite reporting a steady set of Q4 earnings. Net profit sees a 25% uptick to over 680 crore, while margin expands to 62%.
Okay, all right, those are the top headlines. Of course, the fall from the highs is the big story that we are tracking. The mid-caps, of course, continue to be on our radar, absolutely flat, with some positive bias though right now. But the advanced decline ratio, that has turned into the favor of declines. And those two lines, that advanced decline chart should come up for you on the screen. They have been, quite volatile since the word go, and now more in favor of the declines versus advances as we speak. Bank Nifty is the one which is leading to the fall that we are seeing from the highs. But mid-caps continue to be on our radar. We'll discuss a lot of small caps today as well.
That's right. Mid-cap, small caps, order win cheers, power theme, capital goods, all of these stocks surging in the session. And along with that, a lot of earnings, billion brains, or Grow as it's more popularly known as, came out with its numbers, seeing a bit of profit booking after the results came out. But this is our special segment, Mid-Cap Movers. We are standing by the wall to take us through all of the mid-caps that are moving around in the session.
Well, a lot of stocks on our radar today. Let's start off with the gainers first. The first one is EMS, posting strong gains after winning orders worth roughly 208 crore rupees. Sterling and Wilson Renewable also in focus on the back of order wins. They've received orders worth roughly 3,550 crores. Bharat Wire Ropes is another one that has been in focus today after a block deal where Lloyd's Group has bought roughly 5% stake in the company. And apart from this, Triveni Turbine as well as Graphite India posting gains anywhere between 5 to 11%. Moving on to the stocks that are at their 52-week high today, there's companies like Belrise Industries, Apar Industries, HEG, BHEL and ABB India all posting strong gains and all at their 52-week highs today. And on the flip side, looking at the losers then, IEX is the one that has been losing in trade after the CERC has released a draft proposal on market coupling, and Mastek also taking a hit in today's trade after posting a muted set of results in Q4 and also cutting its FY27 margin guidance for the year. And apart from this, GMDC, Cohance as well as IKS also taking a big hit in today's trading session.
Take that point, Riya. Thank you so much for joining us as always with the list of stocks which are moving around in the broader markets. It's a good time to get a technical check on the markets. Ajit Mishra, SVP Research from Religare Broking, is joining us now. Ajit, what explains the fall that we've seen from the highs, and this after a surge from the lows as well? Do you think the last 1 hour could continue to be volatile?
Yeah, good afternoon, Sonal. Yes, it seems so, considering that tomorrow is going to be the weekly expiry day, and means after 2 weeks of rebound. The banking index, Sonal, is basically facing resistance around the 100 EMA mark, around 57,100-200 zone. And that's the reason why we are seeing a bit of a profit taking in the heavyweight, especially from the banking pack, which is weighing on the sentiments in today's trade. While the other sectors are participating on the rotational basis, it's not significant enough to push the index towards the next area where we are eyeing, means 24,600, 24,800, where the long-term averages are placed for the Nifty index. So as of now, consolidation tone is more likely in the index, but the overall tone is likely to remain positive. That's a good point. Means 24,100, 200 is still an area where one can look for buying opportunity.
Okay, Ajit, and what are your individual trades for the day?
So Vivek, we are seeing that auto counters post this move in the banking are likely to resume the uptrend after this marginal pause, of the 1 week of consolidation. And Bajaj Auto is something that we like at current levels. After this marginal dip, we are anticipating that 10,000 is something that the Bajaj Auto can test in a day or two. With stop at 96.90, one can go long in Bajaj. Other stock from the metal basket wherein we are seeing continuous traction is Jindal Steel. Stock is at the record highs. Volume, price action, all are pointing towards prevailing trend to continue. 1395 is what we are eyeing as the immediate target with stop at 1220.
Okay, all right. Thank you, Ajit, for joining us with all those details. So that's a technical check on the markets. We'll slip into a short break now. When we come back, we'll get to the management of Insecticides India on the other side. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC TV 18. A lot of stocks in the broader markets which are buzzing around. And recently, we did have a SkyMed forecast which indicated that India 2026 monsoon will be seen 94% below normal at 94% of the long period average. It, of course, impacts a lot of sectors, agriculture being one of them. So let's discuss this. We are now joined by the management of Insecticides India. The company is also set to launch its formulation facility in Rajasthan soon. But to understand the impact of lower than normal monsoons and a lot more, let's welcome Rajesh Agrawal, Managing Director of Insecticides India, on the show. Mr. Agrawal, good afternoon. Thank you so much for joining in. We did have the West Asia war, which impacted supply chain, and now the indication is that monsoons could be below normal. How has demand been on ground, and do you think a possibility of lower monsoons could hit the sowing, the output, and generally the operations?
India is a very vast country, so the impact will be different in different parts of the country. So first of all, I would like to tell you that the percentages don't matter a lot. The most important part is, when do you receive the rain? What is the gap between the rains? Is the farmer getting the rain at the right time when it is needed, or there are some losses? So I'll explain it area to area. Just North India is little different. When I say North India, Punjab, Haryana and UP. Because here you have availability of groundwater, and the major crop which farmer goes for is paddy. So the time of paddy transplantation may get little here and there if there is some gap in the rains. But after that, generally, because there is groundwater availability, so there is no much risk in this part of the country. Yes, the cost of agriculture goes up, but these days there are a lot of solar power pumps also available with the farmer. But some other farmers who are depending on electricity, they might consume more electricity, though some state gives free electricity to the farmer. But the availability of the electricity also suffers when this type of condition is there, and farmer has to go for burning diesel sometimes. So that increases the cost for him. But overall, there is no much impact in these areas, particularly on the paddy crops. Okay. But when it comes to central India, states like MP, Gujarat, Maharashtra, and also Karnataka, which is somewhat similar, there the dependence on rain is very, very high. The good part is the dams are full. The bad part can be that farmer sows a dry crop like soybean, like cotton, and if there is a gap in the rain, then he might have to go for resowing. Or if that time is okay, and then there is a gap in the later stages, then yes, there can be some gap in the sprays. Particularly in the last year also, we had seen that there was impact on herbicide sprays, because at that time it was completely a dry weather. But yes, there is more pest infestation in certain stages when the rains are too high, and then there are no rains, there are long gaps. So it can be any possibilities. When it comes to South India, particularly Andhra, Telangana and Tamil Nadu, in these areas, they depend on southwest monsoon as well as northeast monsoons. So if the southwest monsoon fails, then there is northeast monsoon to support. What happens is the season gets little delayed if there is a big gap. But overall, the sentiment is positive. The dams are full across the country, including South India. So that is a very big and important point. And due to these gaps in the international market, whatever is the scenario, the prices are going up because there is no certainty of anything. The availability is tight. So a lot of demand is visible in the market. Any which ways, the monsoon hits the country in mid of June, or rather we say sometimes in the end of the June. So Q1 don't get the impact. So in Q1, we see a big increase happening because of the people's interest to build up the inventories. Q2 will have the real impact, that how the sales is happening for all the inventories, and because that is the real time when the maximum sales takes place. So that will be the deciding time actually. So we have to
Mr. Agarwal, we get that point completely, and you spoke about how Q1 may be insulated, but Q2 may face an impact. Let's address the fact that this year around there is a possibility, or a rising possibility, of an El Nino effect also coming across. A domestic brokerage says that typically in a year like that, the P&L impact for a domestic agrochem company like yourself first emerges in the gross margins as you look to defend volumes through channel discounting and extended credit. Now you have a generic heavy portfolio. In case of a likelihood of El Nino happening, how exactly are you impacted?
Like if we look at today's scenario, here the prices of everything is on rise. from solvents to emulsifiers to packaging material, all sorts of packaging material. When it may be paper, it may be metal, it may be plastics, everything is on rise, and the availability of everything is very tight. So the prices are high, the availability is tight. Government is trying to make the efforts. They have exempted the duties in certain products to keep the prices normal, but still the availability is not meeting the demand. So today in Q1, definitely there will be a big increase. Q2 we have to see, so it will be little early to comment. But since the inventories are not much there in the system, because in the previous year, all the network had returned whatever they had. So they are building up the new inventories. Yes, the challenges of the monsoon, if there is a very dry spell, are there. But still India is a vast country. As I told you, North India is fully insulated. South India has the advantage of northeast monsoons also. So it can't be similar across the country, but we are very, very optimistic that this should be a growth year for the industry.
Okay, so growth year for the industry. Mr. Agrawal, what kind of diversification do you have? What kind of dependence do you have, let me put it that way, across different parts of the country? And you did indicate input prices have gone up. By how much? And are you able to pass it on to consumers right now, your B2B clients, to not take a hit on your margins?
On an overall average, it is going up, but it is about to touch the double-digit mark at the moment, because it varies from product to product. Some products have gone up by 15-20%. There are others which are just increased by 5%. So overall, I can say about 10-12% type of increase has already come in. And if the situation of war persists, then there can be another 5% increase in the next month. So overall, yes, the prices are going to the market. And market is accepting the prices, because everybody knows that the situation overall is very, very tough and the availability is tight. So yes, the prices are being passed and they are being accepted by the market at the moment.
Mr. Agrawal, really appreciate your candor. I understand you are in a silent period, so let me just push and what you can answer. We leave it up to you. When you spoke to us earlier in February, you said that the revenue growth guidance for FY26, from an earlier 10%, you've reduced it to 5 to 6%, and premium products too, you expected a 10% growth versus an earlier guided 20% growth. Largely sticking to those lines, and FY27, you earlier had mentioned that you're expecting close to 8 to 10% growth. Now you mentioned you're expecting it to be a growth year. So are you trimming down or moderating your own expectations?
No, I'm not. We will perform. We have performed better. So Q4 performance is going to be better in Q3 in all respects. I cannot say more than that. And in the Q1, I had already told that this is going to be a recovery year where the expectations were very, very good. And in the current situations where the demand is there, so we have to see how much we can supply, how we can supply. So we are trying to present the entire product mix across all crops. We are trying to be present in herbicide, insecticide, fungicide. In the wet areas, we are working on paddy. In the other areas, cotton, soybeans, pulses. So different crops we are choosing, and we are working very aggressively on that. So I believe the performance of the company will be very, very positive, and we should be able to perform good this year.
All right, so we'll have that conversation after your Q4 and annual results. Mr. Agrawal, thank you so much for joining us with your thoughts on what a possibility of El Nino mean for the industry and the other aspects of the ongoing West Asia crisis as well. We'll slip into a short break now. When we come back, we'll get you more on the markets and stock-specific action. Stay tuned for that.
Welcome back to Midcap Radar. Well, we are focusing on one particular stock in the session today, and that is from one of the power exchanges, that is IEX. So over the weekend, CERC released a draft on power market regulations that has included a formal framework as far as market coupling is concerned. Every time we speak about IEX, we always tell you that there is the overhang of market coupling, which is now getting fructified. Now, detailed procedures on market coupling will be issued within 6 months from this particular draft paper, and CERC has invited feedback from various stakeholders as well as public by 16th of May 2026. What is it that the draft is proposing? The draft says that Grid India will now start acting as an MCO, which is the market coupling operator. MCO will aggregate the bids from all of the exchanges and they will determine a uniform market clearing price. Remember, so far, power exchanges in India were collating all of the bids and they were determining the clearing price. So that particular moat which IEX was enjoying, being the market leader, now shifts away. So that is one key headwind as far as IEX is concerned post the implementation of market coupling. Now, the other big worry as far as the market coupling and IEX is concerned is that power exchanges in India enjoy much higher broking charges compared to the rest of the world. So that is also something that they're looking at, which could be a potential headwind for, especially for IEX actually.
So a lot of regulation is something that does impact some of these stocks. Oil marketing companies or oil and gas has been one of those spaces, and IEX, as Vivek said, has been an ongoing issue for a while. The stock is down 7.5% as we speak. But there's been a lot around energy since the time we've seen the West Asia war or the crisis begin, and transmission and distribution stocks, and a lot of these stocks in this space have been in focus. But there's an interesting note from Motilal on TND stocks and plays. Winnie, what is this note indicating?
Hi, so absolutely an interesting note that's coming on TND players. Now, TND players have been in focus, and even when you look at the YTD performance of these stocks, they've seen a sharp run up. Now, Motilal Oswal, they're maintaining the positive stance on TND players. They say that the capex cycle, that's very good for the companies. They've announced a lot of capex in the last year or so, and now that will fructify for the companies. They expect transformer players to continue to deliver the strong earnings growth that one has seen coming in. FY25, FY26, they reported better earnings in terms versus other capital good players, and that's expected to continue in terms of strong growth. Apart from that, HVDC projects, that's increasing. So for domestic players, they could increase their share in these HVDC projects. Global demand is improving. A lot of these global parent companies of, whether you look at GE, Vernova, TND, Hitachi Energy, they've spoken about, increasing in terms of the India share, and that means overall exports also could increase for these players. So export opportunity increases. Supply gap is there in transformers. Capacity expansion plus the supply gap means more transformers coming in, and that means more of these players could benefit in terms of growth. Additional revenue growth comes in. Now, the concern that comes in there is in terms of valuation, because valuation is no longer cheap. We've seen a very sharp run up. Whether you look at all these players, they're trading almost near the peak valuations, above historic valuations for sure, but near peak valuations. GE, Vernova, TND is trading at those high valuations. Even today, peak valuations is what it trades at. So Motilal Oswal has initiated coverage on CG Power, buy rating, target price of 900 rupees per share. Atlanta Electricals initiated coverage on this one, buy rating, target price is 1,650. GE Vernova, they've initiated coverage again on this one as well, buy rating and target price is 4,750. For Siemens Energy, they're reiterating the buy rating. Target price is 3,700 rupees per share. And Hitachi Energy, they've upgraded the stock to a neutral rating. Target price is 27,000 rupees per share. So the benefits continue to be HVDC projects. They continue to be the export opportunity for these domestic players. Concern continues to be in terms of high valuations, as well as in terms of anything that comes in on execution front. If there's a blip, that will be a concern.
Well, thank you so much, Vinny, for joining us. The entire pack doing very well in the session today. Well, a quick check on two stocks that I've been tracking, Sterling & Wilson Solar Renewable Energy and EMS Limited. Remember, both of these names, order wins here is what's keeping these names excited in the session today. Sterling & Wilson received domestic orders worth over 3,550, a turnkey EPC package in Rajasthan from Coal India. Along with that, EPC order inflows in FY26 has now exceeded 10,000 crore rupees, order book over 10,400. EMS Limited in Varanasi, the company has received an order for a Jal Jeevan project. This particular order combined worth of both of these orders is over 200 crore. End of Q3 order book was at 2,200 crore. Both of these stocks doing very well in the session.
Okay, that's on the order. Wind stocks are doing well, but the benchmark index that is closer to the day's low. It is up just 27 points, sharply off the highs of the day. The mid-cap index is in the red. The rupee also at the day's low. So a swift turn in terms of the market move. So watch out for that. As I said, the mid-cap index is in the red as we speak. With that, we'll take your leave on this edition of Mid-Cap Radar. Stay tuned, your stocks, when we return to answer all your individual stock queries.
Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. With me is my colleague Arundhati Raman. And Arundhati, good afternoon. In terms of the afternoon, we're seeing a bit of a muted performance now. The markets have come off from the day's highest point. Look at the Nifty now. What we are trading at is currently 24,380, approximately that level, what the Nifty is trading at, 390 as of now, but significantly off the day's highest point. Private banks, they've moved to the red. We're seeing 0.2% of decline for the private banks. Financial services seem a bit under pressure as well. Chemicals, IT, as well as healthcare, seems like that's under pressure in terms of the sectoral performance. Apart from that, when you look at the advanced decline ratio, that also again has moved to the red versus the green. So we're seeing more stocks in the red than the green. At one point of time, we were seeing more stocks in the green, Arundhati, but now it seems like that's come off.
Absolutely. You know, leading the charge has been that PSU Bank pack, right? So all of those stocks are doing well. We've also got that energy pack that's been doing well all day. But on the downside now, we've got those IT names that aren't doing very well. And we've got the FMCG pack, which has also turned into the red. But on that note, let's go across to our guests who are joining us today. Gaurang Shah, the Senior Vice President at Jio Financial Services, and Ruchit Jain, the Equity Technical Research Wealth Management at Motilal Oswal Financial Services, to answer all of your stock queries. Gentlemen, good afternoon and thank you for joining us on the show. Let's go across to our first query. Thomas George writes to us from Kerala. He holds 100 shares of Radico Khaitan at 2,630 rupees per share. He says he can hold for 2 to 3 years more and wants to know if he should continue to hold or book his profits. So he's making a profit there. The stock currently at 3,299. Gaurang, let me come to you first. What's your view on the stock?
Thank you, Anditi, for having me on the show. Good afternoon to all your viewers, to you, as well as your entire team. Small disclosure, and to Vinny as well. A small disclosure, Anditi, that all recommendations that I'll be sharing with you this afternoon on the show, they are part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So extremely positive about the sector, that is Alco Beverages. And Radico Khaitan happens to be one of the oldest players, having some very strong and powerful brands, which has actually gained a decent amount of market share, and the consumer loyalty or a product recall is very, very high as far as some of the products of Radico Khaitan is concerned. Having said that, like I mentioned, we are positive on the sector. We like United Spirits as a disclosure, but Radico Khaitan is a very strong player. And the good part about this investment, Anditi, is that the gentleman got in at a very decent level. Won't give specifics since we don't have coverage.
Okay, but that's the word at least coming in on the Alco Bev space. Thanks for that, Gaurang. Let's also talk about the technical front for this one as well, right? What is the level that one should watch out for now, Ruchit? What the viewer is making a profit, is it better to get out of this one or continue to hold?
Yeah, hi, very good afternoon, Vinny. Very good afternoon to everyone. Well, the overall trend still seems to be positive. Recently, we did see some price-wise correction from that high of 3,500 to 2,600. But the stock seems to have formed a good support base around the recent close. Surpassed its important 50 and 200 EMA in last few trading sessions, and we can clearly see the volumes increasing along with the price up more. So I think this just seems to be a resumption of the broader uptrend after a corrective phase. Technically, if we take the retracement, then it gives us a price target somewhere around 3,650. So for a potential target of 3,650, one should hold on. Maybe can take a review again around those levels.
Okay, we'll keep an eye out on those levels over there. Let's move on. And this next query is an investment query. This is coming from Rajesh, who's writing to us from Hyderabad. He wants to know if he can invest in solar or EV theme stocks for the long term. Gaurang, you know, solar, especially the solar PV players, in the recent time, we have seen a whole host of brokerage notes that have come in. All these stocks are buzzing. We're seeing that renewable energy, that's the focus, right? EV themes also, again, on that play is something that's been in focus. Any stock that you specifically like here, or is it a theme that one should see right now, or has this become expensive already?
Well, expensive, it's a relative term. It depends upon what's your time horizon. But yeah, I mean, speaking about some names in the auto EV pack, well, we are positive on M&M for a pretty long period of time. And now M&M has got a decent EV product portfolio, as well as in the next couple of years, they are going to increase that offering in the EV segment across different product profiles. So M&M could be one in terms of autos. In terms of pure power play, yes, Vinny, I think whatever government has elaborated and whatever government has learned, and we all have learned from this Middle East situation in West Asia, Iran, Israel and US, I think Atmanirbhar and self-reliance is something that we need to really focus on. I think there's an elaborate policy in place, and there will be new policies coming in from the government side. So if I have to name, Vari Technologies is something that we are positive on. Players which will enable production of clean and green energy. So, you know, there is a small part in Tata Power. They have gone quite well into solar. Similarly, there are other companies which are planning to go into nuclear energy. Vinny, is also a theme that was spoken out by the Honorable Finance Minister in last year's budget. And this year's budget, there's an elaborated, budgetary allocation towards nuclear energy as well. So you have names like Torrent Power, you have names like JSW Energy, NTPC. There are quite a few places that you can look at.
All right, so a few names that you've given us there, Wari, you've given us Tata Power and M&M. But Richard, if I can come to you, he wants to know what stocks he can invest in the solar or EV-themed stocks. And this is for the long term. So any stocks that look attractive to you and any levels at which he can enter this space?
So within the EV theme, I think Ether Energy technically looks quite bullish. We have seen a good relative outperformance over last 3 or 4 months. In fact, when the entire market was in a corrective phase, the stock relatively held well. And now I have seen a good price volume action compared to other stocks within the entire space. So Ether Energy can buy in a staggered manner with maybe 30 to 40% of quantity, whatever he wants to buy at current levels. And if we get any dip towards 800 level, look to add more on declines. So Ether looks good over here, and NTPC, within the power theme or solar theme, I think could do well if he has a bit mid to long term perspective. Already we have seen some good price wise as well as time wise corrective phase. Downside seems to be limited from here on. So that stock from a risk reward ratio perspective looks good.
All right, so Ather and NTPC. So we've got a few names there for these themes that he can invest in. But the next query is coming in from Bala Subramanian, who writes to us from Bangalore. He holds 30 shares of ACC at 2,561 rupees since June 2024. He is a long-term investor, currently making a loss on the stock. And he wants to know the long-term prospects of the stock. In the last 1 year, the stock hasn't done much. It's actually fallen quite a bit. So Gaurang, what's your long-term view on the stock? What's the fundamental view for it?
Well, so, our belief, Anditi, is that cement consumption per se is going to go up, right? There is, again, if you have to reflect upon the budget and the budgetary allocation towards creating new infrastructure and along with that, modernizing the existing ones. Second trigger, tailwind positive, could be in form of the uptick in real estate. And real estate sector happens to be the second largest consumer of cement, whatever is manufactured in India. And most of the companies have actually undertaken capex, or they have taken over smaller companies to have an additional capex come through. Gotten at 2,000 plus levels. Currently, the stock is trading at about 1,400, 1,430 plus. My first advice is to, first of all, hold on to your investment. Second advice would be that if you have investable amount, and I would request the gentleman investor to add to the current levels and thereby bring down, because you got it at 2,500 plus, the stock is trading at about 1,400 odd. It's a perfect time and an advantage to add and bring down your cost of investment and stay invested for long term.
Okay. Add and stay invested for the long term. Richard, what's your view on the technical levels for this one? Is it a good level maybe to average as well, right? 2,500 approximately what they've bought it at, which is those highs of the stock. So now averaging is an option, or would you just say just hold on and don't do anything?
During the entire corrective phase, we have seen a relative underperformance from ACC. Not just last 2 or 3 months, but if you look at last 1.5 years, even when there were times when some of the cement stocks had shown a good rally, but still the kind of participation was there from other names. ACC did not participate. So that considering that relative underperformance, I won't suggest to add more, but yes, can hold existing positions because momentum readings are oversold. These are not the levels where losses should be booked. At least wait for a pullback towards 1,700 kind of levels where the 200 DMA for the stock is placed. So going ahead, if you get levels of around 1,650, 1,700, then take a review again. What should you do over there?
Okay, sure. Let's move on then to the next query. We have Tina who's writing to us from Pune, holding 500 shares of ITC Hotels. Price is 220 rupees per share. They're making a loss on this one. Wants to know if she should continue to hold for the long term or no. Gaurang, hospitality, hotels, they're expected to do well. No matter what, in India, people are going to be traveling. Is the word that comes in. But ITC Hotel, is that the bet that they should hold on to?
So not only in India, Vinny, I think there are going to be a lot of people who will be coming to India in terms of Pravasi Bharat. And I think, religious tourism and along with that, again, reflecting upon what the finance minister said, medical tourism. So we are extremely positive about the entire hospitality sector. And the fact, Vinny, is that a lot of companies which are associated with this sector, they are undertaking capex, or they are taking over some smaller companies to add to the capex, or construct new assets. We are positive on Indian hotels. And one thing I would like to add, Vinny, over here is that Along with this, we are, of course, in the summer season, holidays, so travel will be more frequent. People would want to go on holidays, etc. Along with that, I think all the festive seasons and marriage season augurs extremely well for hospitality sector because of the contribution that comes in from F&B, that is food and beverages and banquets. So extremely positive on it. ITC Hotels happens to be a strong player. Unfortunately, since we don't have a coverage, I wouldn't give specifics, but yeah, we are positive on the sector. Indian hotels is something that we like.
Positive on the sector and Indian hotels is what you like. But Ruchit, what do you make of this investment? Do you think she should continue to hold the shares that she has of ITC? Are you as positive about the sector?
Yes, I think should hold at current levels. We have already seen a good price-wise corrective phase from that high of 255, 260 to 140. And we are now trading around that lower end of that entire range. So the risk-reward ratio is not that bad to hold at current levels. Maybe we would see some time-wise correction or consolidation in the short term this stock. So if we can wait for another at least 2 to 3 quarters, then can expect an up move towards 200 kind of levels.
All right, hold for a couple more quarters and you'll see it go towards 200. But on that note, we have to slip into a short break. But before we go, we are proud to bring back HSBC presents CNBC TV 18 Future Female Forward. Season 4, co-presented by Cognizant, with a powerful cultural launch gala in New Delhi. Top industry leaders come together for a dynamic town hall on equity and leadership in New India, along with curated entertainment performances. The launch will also see the announcement of a special advisory committee to guide female micro-entrepreneurs through the year to drive more meaningful impact. Tune in on April 23rd, 5 p.m. onwards, only on CNBC TV 18. Welcome back. You're still with us on Your Stocks. We still have with us Gaurang Shah of Jio Financial Services and Richard Jain of Motilal Oswal Financial Services to answer all of your stock queries. The next query is coming in from Parag Joshi, who writes to us from Navi Mumbai. He holds 175 shares of Chambal Fertilizers at 319 rupees. He's making a profit on the stock and the stock is at 452. He wants to know if he should continue to hold, buy more shares or sell at current levels and book some profits. So Gaurang, let me come to you first. What do you make of this stock? Do you think that he should continue to stay invested in it?
Under the immediate short to medium term concern on the entire fertilizer stroke urea sector or specialty chemical sector is the availability of raw material and the delay in shipments, because quite a bit of it comes in from Strait of Hormuz, and there has been an issue, and this verbatim has been given out in public domain by the respective company. Extremely positive on the sector, and the government's policy to give technology guidance to the farmers in terms of how to use urea fertilizer, to what extent, how to get the best out of your farm, etc., and the best produce, and to get better realization. So positive on the sector. We have coverage on Coromandel International as a disclosure. Chambal Fertilizer also happens to be a decent player with good presence and market share. And again, one thing good about this investment is that the investor got in at a very decent level. Won't give specifics since we don't have coverage.
Okay. Sure. Investors still got it at a decent level, so they're making a profit on this one. Ruchit, on the technical levels, since they're making a profit, would you say maybe it's time to book out some bit of your profit, or should they continue to just hold?
I would suggest to continue to hold. The stock is consolidating around its long-term support of weekly 200 EMA. I was just looking at some of the historical data since July 2022 to October 2023. The stock consolidated in the range for about 1.5 years, just above its weekly 200 EMA. Now, post the recent correction from the high of 700 to 400, again the stock is showing a good support base around its weekly 200 EMA. So going with this historical pattern, I think the downside from here on seems to be limited. So 400 is a strong support. Till that is intact, I don't think one needs to book out or exit any existing long positions. Just continue to hold on. Possibly, I think if we see a breakout over 475, then the stock has the potential to rally towards 550 kind of levels.
Okay. We'll hold on to the stock, is the word coming in on the technical front. Let's move on then to the next query. We have this query that's coming from Sandeep, who's writing to us from Hyderabad. Holding 2,000 shares of JK Tyre, price is 415 rupees per share, making a little bit of profit on this one. While Bharti Airtel, they're holding 500 shares of Bharti Airtel. Price is 1,820 rupees per share. Wants to know the future prospects of both these stocks. Bharti Airtel as well as JK Tyres. Gaurang, your view?
Disclosure, Vinny, positive on both from a long-term point of view. I think one sector that is relatively less affected by the volatility in crude oil prices is the cellular service provider companies. Nowhere close to any kind of negativity, but yeah, because of market volatile, these stocks also. So we have positive coverage on Bharti Airtel as a disclosure. You can continue to hold on to it. If you want to add to it, on dips you can add. JK Tyre, this is the opposite side. It has a direct impact of volatility in crude oil prices because of the dependency on crude derivatives. But it is an important part of a vehicle, that is a tire. New order market is also very strong, Vinny, and so is the replacement market. Continue to hold both, and you can add Bharti Airtel in case if you have investable amount.
All right, so continue to hold both of those stocks. Ruchit, coming to you, JK Tyre, 2,000 shares at 415 rupees and 500 shares of Bharti Airtel at 1,820. What's your view? Any levels to watch out for, and what's the future prospects?
1750 is a good support for Bharti Airtel. Prices have seen a correction from the highs, but till 1750 is intact. I think the downside from here on could be very limited. So continue to hold that. JK Tyre, definitely some volatility could be seen going ahead. The prices are still trading below the important 50 and the 200-day EMA supports. So I think the upside should be limited from here on. So from a near-term perspective, 480 to 380 is what the range has been seen. So we expect some time-wise correction in JK Tyre in the short term.
All right. The next query is coming in from Ranga Reddy, who writes to us from Telangana. He holds 1,750 shares of Bank of Maharashtra at 59 rupees. He wants to know if he should continue to hold, currently at 74 rupees. So should he continue to hold?
We had coverage on Bank of Maharashtra. Our targets were in place. We have removed the coverage. Currently, we don't have coverage. But the numbers were good. There is a significant amount of improvement quarter on quarter for Bank of Maharashtra. I hope they continue to deliver on that front. Other investment ideas amongst the small stroke private sector banks category would be Federal Bank and City Union Bank.
Okay, sure. And Ruchit, your technical levels that you would highlight maybe for Bank of Maharashtra?
So 78 to 80 can be expected in the near term. Overall, we have seen good relative outperformance compared to other PSU banks. Volumes are also good, so can continue to hold existing positions.
Okay, can continue to hold Bank of Maharashtra. That's the word coming in on the technicals. Next query, we have Sujan Chaudhary, who's writing to us from Telangana. He bought few shares of Wipro and Kotak Mahindra Bank, not mentioned the amount of shares that he's bought, but he's bought them recently, is what he's highlighted. So he wants to know the bet on these stocks. Is it the right bet? What should they be doing? And can they continue to hold it for the next quarter as well? What's your view coming in on this one, Gaurang? It seems like it's maybe a short-term query because they're only looking to hold for the next couple of quarters. So both these names.
IT is not for a couple of quarters or short term. IT will have a time of 1.5 year plus. Then definitely you can go ahead and buy IT, with a caveat that this sector is going to go through a lot of innovation, modernization, inventions, etc., like we saw in case of Anthropic, right, Vinny? So you have to have a longish time horizon. On Wipro, we have a hold, but unfortunately, Vinny, numbers were not up to the mark. When you compare Wipro with other large cap boys like Infosys, TCS, HCL, Tech Mahindra, I hope the company gets the mojo back and get back on track in terms of growth and performance and delivery in terms of quarter-on-quarter numbers. Kotak Mahindra Bank, we are positive as a disclosure, and we have a whole recommendation on Kotak.
All right. So positive on Kotak Mahindra Bank. Richard, coming to you, Wipro, Kotak Mahindra Bank levels, are these good investment bets and any levels to watch out for?
So frankly, if you see, both stocks have been relative underperformers in their respective sectors. Be it IT space, within the large cap IT space, we will not see any kind of outperformance or good buying interest coming in Wipro. So I would recommend to make an exit if you get any pullback move towards 225, 230 kind of levels. Maybe some other stock within the same sector can be better. And even from the private sector banks, although the overall sector is not negative for Kotak Bank, but you can see when the banking space is moving up, the leadership is not coming from stocks just Kotak. Stocks like Axis have really done well over last few weeks, that too with good volume. So I think that relative outperformance could continue. So both the good sectors to be in at current right now. But rather than being with the underperformers, I would recommend to take an exit and look for the stocks which are showing leadership.
Okay, that's a view coming in there on Kotak Mahindra Bank as well as Wipro. But that's the last query for today. So Gaurang as well as Richard, thank you so much for joining us on the show. A quick look in terms of what the market has done in the last 30 odd minutes. We've seen the 24,400 come back for the Nifty again as of now. We'll watch out for whether this sustains through the last hour of trade. That will be key to keep an eye out on where we close in the trading session as well, because we did see a bit of a fall and then again we went to the day's high and seen a bit of a comeback, pullback coming in the markets. But in terms of the last hour, what is lost in terms of the momentum? Century Ply, Craftsman Automation, we have Adani Power, that's come down a bit from the highs as well. These all stocks have come down 1% in the last 30 odd minutes. So that will be key to watch out for. Apart from that, what continues to do well? Aether Energy, Z Entertainment, Jyoti CNC, all of them continue to do well. Trent continues to shine in the trading session. SBI, JSW Steel, Asian Paints, all of them on the upside. While on the flip side, we have Hindalco, Jio Financials, L&T and Tata Motors PV that are dragging the market in the trading session. But with that, we're absolutely out of time on this edition of Your Stocks. Thank you so much for tuning in. Do not forget to email us your queries or send us a WhatsApp of your queries as well. The number as well as the email ID is there for you all. So do send us your queries. We'll solve them on Monday, Wednesdays, Fridays at 2 p.m. But last hour of trade is still left. Closing bell is up next for that.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Taiwan index holding on to gains of almost more than 1%. Hang Seng holding on to gains of 0.2%.
ICICI Bank reported a steady Q4 with net interest income rising 8.4%. A steady quarter with consistent year-on-year growth across all key metrics.
Story starts. Iran essentially on Friday evening saying that the Strait of Hormuz is now completely open for commercial traffic.
We're still hopeful that there'll be some kind of closure to this.
It's a 0.1 on the Sensex. It's kind of red.
India underperforming for last many quarters.
NBFC has been our growth engine for this year, and that, as we have reported.
CRC has invited both stakeholder as well as public feedback by 16th of May 2026.
We saw nearly 20 ships pass by on Saturday via Strait of Hormuz.
Looks like a good Monday morning for the markets. Why do I say that?
This is the final low for the year or even for the years to come. So that is sort of the outlook.
Well, it's turning out to be a session where we are seeing gains today.
Even if you look at today's market, the large part of the winners have come from the power space.
A quick check on the markets. Now, the Nifty is below the 24,400 mark.
Okay, this is not a bad-looking screen. There have been dips and there have been bounces, but we are up 80 points, I think, on the Nifty, 24,430 or so. This is Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, Nigel and Rima with me. Guys, hi.
Hi, afternoon. Just in the last, I think, 10 minutes or so, markets are actually trying to claw back. We're almost gotten into the flat line. Yeah. But now the Midcap, the Nifty and the Sensex are up close to about 0.3%. The small cap index, though, has been red today, negative. The small cap index is still down close to about 0.3%, though the mid cap index has managed to recover from at least the early lows and now is back up in the green.
Well, I think the market's telling you a picture, right? It believes that the worst with regard to this war is behind and it's willing to look ahead and it's willing to give that 50% chance in favor of the bullish view. Because from the lows of the day, we're up close to around, I think, 180, 190 points or thereabouts on the Nifty. And the Nifty Bank as well has seen a good recovery. The breadth of the market isn't that bad after the kind of run that you've seen. And you had every reason to at least, see a bit of a down day. But that's not happened. I think it's telling you something about the mood of the markets.
Well, the market wants to go up, Nigel.
That's true.
Right? And it is the general sort of sentiment out there. It's optimism. Markets are optimistic creatures. 90% of the time, 10% they get manic depressive, they sell off, and then they, it tries to price the opposite side. But majority of the time, that is not the case. And I think we are in that other 90% camp right now. Let's see. By the way, I think the reason why the market took a sharp dip, right? We were... I'll tell you, I'm looking at the intraday graph here. 1250, the market was at about 24,000, almost 24,500. 24,480 or so was the high. And from 24,480, the market sold off about 100 points clean. And, it got to very close to where we were flatlined absolutely from last Friday's close. And the reason was that Iran, I think, held a press conference. And the headline out of that press conference is that they said they have no plans to attend another round of talks with US representatives. Remember, there is still no clarity whether there are talks scheduled later today in Islamabad, in Pakistan or not. President Trump has said, we know from the US side that, Mr. Witkoff, and we've got J.D. Vance, who's leading the delegation, Jared Kushner. These are all people who are on the US side, but will the Iranian side show up? Iran, the last week, this is just about an hour back when the market started selling off dramatically. What we heard is that, they've got no plans. So trust in that sense is running low. Oil prices, 96, not very much change from when we started in the morning at about 8 o'clock. So holding steady. US futures, I think, are down, but marginally so. They're not down big time. I think we've had 12 or 13 days of unbroken run for the NASDAQ. So we're basically back to pre-war levels. S&P's at a new high. So a little bit of pullback if you look at US futures at this point in time. Well, how should you position yourself? It's a tricky one, isn't it? Mitesh is with us with exactly that advice. Mitesh, good afternoon. Good to have you here. Your sense?
Good afternoon, Prashant. See, I think on the markets, what is positive is that you kind of filled that gap, which was there on the 6th of March. So the low was 24,415, and today I think the high is just about that 24,241. 404. So just filling that gap. Once we clear that gap, I think then we should see some more strength come into the markets in a move towards 24,800, 25,000 could happen. But for the time, I think I've been maintaining this for the last many days that we look at the 2-hour chart, the 3-hour chart. All the indicators are still pointing on the upside, which means that till there's some kind of price breakdown, and that will happen once we start getting below 24,100, 24,050. I think till then maintain a rock bias. On the stock side, a buy on Grassy is what I recommend. Keep a stop below levels of 27.30 and look for targets of around 28.50. And the other one is buy on Alchem Labs, I think. Alchem is a buy with a stop below 5,600 for targets of 5,800.
Got that. ICICI Bank, is there any trade or any in the private financial space?
So morning we had a buy on Federal Bank, and ICICI Bank to me also looks good along with HDFC Bank. But between the two, ICICI Bank has rallied, and HDFC Bank can yet give a breakout if it starts getting past 815, 820 zone. So if I was to take a fresh trade, I think I would wait for the breakout on the charts of HDFC Bank. Once it moves beyond 815, 820, take a 15, 17 point kind of a stop loss, and the 30, 40 point up move is the minimum what I expect, maybe more.
Okay, all right, got that. Thanks a lot for that, Mitesh. Well, let's go across to Vinny. She's joining in with the note that Motilal Oswal has come out with on transmission and distribution plays. Vinny joins in to fill us in with more on that note. Vinny?
Hi, Nigel. Good afternoon. So obviously this note is coming for transformers and distribution side of players. Motilal Oswal is positive on these names. They believe the capex cycle is started for these ones. The companies have started making investments, so this is a positive for them. And obviously, when you look at it in terms of earnings growth, T&D players have managed to see good earnings growth. FY26 all throughout, they managed to see better earnings growth versus other capital good players. So this earnings growth, they expect that to continue through FY28 as well. Apart from that, HVDC projects, they are coming in. So increasing in terms of share for HVDC project is good for these players. Global demand is improving, so that remains strong. Potential uptick and opportunity in terms of export market for them. There's a supply gap that comes in for transformers as well. So that will be something that will drive the capacity expansion, and especially for these domestic players. Now, Motilal Oswal has initiated coverage on CG Power, buy rating, target price of 900 rupees per share. Atlanta Electricals, I beg your pardon, initiated coverage on this one also, buy rating, target price is 1,650 rupees. GE Vernova T&D, they've initiated coverage on this one with a buy rating, target price of 4,750 rupees. Siemens Energy, they've reiterated the buy, target price is 3,700 rupees per share, and Hitachi Energy upgraded the stock to a neutral rating, target price is 27,000 rupees per share. The key triggers that remain is HVDC projects, capacity expansion, export market is growing, so those are the positives. The concern comes in valuation is expensive. That is what even Motilal Oswal has highlighted. If you look at it in terms of these names, CG Power, GE Vernova, all of them are trading above the historical averages. GE Vernova is trading at peak valuations today, so valuation is high, the opportunity is there, and execution continues to be the key for these projects going forward as well.
Okay, all right. Thanks very much for that. Vinny, we'll stay with the power theme really, right? We highlighted this last week. Adani Power basically making a new all-time high. The intraday will come up on your screen, and maybe we kind of look at that name. We should just highlight. I think out of the power stocks, IPPs, Adani Power, of course, is the best performing name, is just a sign of what's happening that within the Adani Group. And Nimesh is joining us now with a broader take on what's happening with the power space and the excitement here. And I think it's an indication that Adani Power within the Adani Group companies is now the largest market cap weighted name. I think Adani Ports at about 3.6 lakh crores and Adani Power now at about 3.9 plus lakh crores in terms of market capitalization. Nimesh, take it away.
That's right, Prashant. So looks like Adani Power has now overtaken Adani Ports in terms of the highest market cap. But nevertheless, I'd put out a piece on Friday as well in ERT And ever since the Iran war broke out, the power as a theme has been a big outperformer in the markets. It looks like there is a clear shift, in terms of energy security that's playing out as a big theme in the last 1 month or 1.5 months of sale. And across the board, all the energy stocks have done well, whether it's thermal, whether it's solar, whether it's wind or renewables. All sort of stocks have done well in the last 1 month or so. I'll start with the first pack of stocks, which are the pure thermal names. I've just identified 3 names within that. Adani Power, it's up with today's move, maybe it's up more than 35-36%. BHL is up 14% after today's move, and Tata Power is up 11-12%. And there is a 1 year forward multiple as well. Adani Power at 28 times. And the others, in that reasonable range, so to speak. The next is the likes of Premier, Wari, Acme Solar, and MV Photovoltaic. Look at the kind of moves between 25 to 35% in the last 1 month, 1.5 months. And even the valuation, like Premier, I remember at one point in time was trading at almost 30 times, has fallen to almost 23, 24 times. Wari is at 20 times on 1 year forward. So is Acme Solar and MV Photovoltaic at nearly 15 times on 1 year forward. So this space still, in terms of valuation, is not looking out of the whack. We should have gone back to the previous list, wherein some of the names are trading at expensive valuation. But nevertheless, this is the list of. I just wanted to highlight BHEL. It's up today as well, but look at the 1 year forward. It's almost at 87 times now. So, some of the names have rallied, but also look at the valuation picture. They're not cheap, so to speak, on at least 1 year forward. Of course, on 2 year, 3 year forward, BHL may look little cheap because Street is anticipating very sharp move in terms of earnings for BHL going forward. So that's the thermal names. I showed about the solar names as well. Now look at the wind companies as well. The likes of, say, Inox Wind or Suzlon Energy. Suzlon has rallied 15-16% from the recent lows. It's trading at close to 30 times. And Inox Wind is interesting. If you look at the 1 year chart, it has fallen all the way from 210 to 75. Now you've seen a bit of a pullback. Now back to almost 100 odd rupees. But still trading at close to 18 times on 1 year forward. So again, valuation not out of the whack for the wind businesses. The next leg would be the transmission, or for that matter, the transformer companies. Here, the stocks had fallen less and they've actually gained also a little less, but trading at very expensive valuations on 1 year forward. GE Vernova, today there was a big upgrade and hence you've seen a big move on that name, but trading at close to 72 times on 1 year forward. Hitachi has rallied 10-11% from the recent lows, is trading at almost 91 times on 1 year forward. And even Siemens Energy is trading at close to 64 times on 1 year forward. So at least here the valuations are not very, very comfortable on 1 year forward earnings. So this is something to track as far as the transformer stocks are concerned. Even some of the PSU names that are identified in that list, say REC, PFC and Power Grid, they all have rallied from the recent lows, 6 to 10%, 12%. But at least in terms of valuations, again, for just to caveat, REC, PFC cannot be looked at 1 year forward PE, but more on the price to book. Even on price to book, they're quite cheap. And so is the case with Power Grid as well. So that's the kind of move we've seen across the power names ever since the Iran war broke out. Some of the key tailwinds will come up and the headwinds will also come up. I wanted to highlight some headwinds as well. First, why the stocks are outperforming. Obviously, there are some massive tailwinds for the entire sector, and energy as a thrust will be the big focus as well for the government going forward. So that's the key reason why the street is excited about a lot of these power names and transformer stocks as well. Having said that, 2 caveats here. One, on valuations, as I highlighted, a lot of the transformer businesses are not trading cheap. And for transformer businesses per se, going forward, there will be a lot of headwinds as well. One, the HDCV, demand is going to be a bit softer in 27. So that's the overall analyst feedback. As I said, the valuations are not that cheap. And also, with focus on renewables and more on thermal, there will be a bit of question mark on the renewables as well. So net, while there has been a big momentum in the power names, it's been seen as a big theme to play out. There are some worries as well which one needs to factor in as it's getting highlighted here. And also, as I said in the previous chart, the valuation is something you need to be mindful about in some of those names because they've rallied pretty hard and trading at very expensive valuations.
Thank you very much for that. And yesterday, Adani Powers informed the exchanges that they formed a wholly owned subsidiary to focus on nuclear energy. It's called Coastal Maha Atomic Energy Limited. And that's also perhaps aiding the push that we're seeing in Adani Power today. I think the long-term plans are to develop 30 gigawatts of nuclear capacity with the intent to eventually replace much of its thermal fleet as the PPAs expire. As of now, just a wholly owned subsidiary has been formed, but the company has indicated its intention to participate and scale nuclear energy. Dipan Mehta, Director, Elixir Equities, is now joining in. Dipan, you've been mulling over this topic for a very long time, energy security and independence. Do you want to comment on the valuations now? Because stocks have already started pricing in this as a structural long-term theme.
Yeah, Rima, good afternoon, and thank you for having me on your show. Yeah, that's something that we've been concentrating on. But more than the traditional T&D players, our focus is on some of the renewable energy equipment players, both wind power as well as solar power, and then some of the other companies also which are in the energy business. It could be something like an ONGC or OIL as well, which can get a lot of encouragement and SOPs to increase the exploration activity in India. And then there are certain oil field services companies like there's Deep Industries, Asian Oil Field, Plus, Ceylon. These are the companies also which are worth looking into. So I think that energy security could be a big investment theme. And the better way to play it is some of the companies which directly benefit from renewable sources of energy and equipment or otherwise. And there's, of course, the electric two-wheeler companies, Ola Electric and Ather. Ather particularly has done exceptionally well last few trading sessions, particularly because investors are looking for this for stories in this particular investment theme.
So you made purchases here, or you're still evaluating? Say Vernova, TND, Deep Industries.
We already, as a measure of disclosure, we are invested in Suzlon Energy and Inox Wind and Vari Energies as well, and looking at other stories also. Another interesting stock which comes to mind is Fujiyama. It is one of India's largest rooftop solar equipment company, and that's a total retail business. And they've got good growth dynamics, reasonable valuation. So these are the stocks we are contemplating with. I'd like to just wait for the quarterly numbers for these companies. There could be some, if there's a softness in the quarter, then stock prices can correct, and that may give a good opportunity for long-term investing.
Between the two, Ola and Ather, which one would you go for at current prices? One has been a big outperformer and one has been a big underperformer. And the promoter entities as well, very, very educational wise the same, but otherwise contrasting, approaches. Your view on both these two names?
I think that Ola Electric is more like an option. There are a lot of challenges around it, but if they're able to solve their issues, then it could turn out to be a great investment. So you approach it like that, make a small investment in it, and if it works out, then it could be a good multi-bagger stock also. And Ather Electric, I think, is more for the less faint-hearted who want more steady returns and kind of believe in steady growth as well. So that's where Ather falls in. Safety is higher, but valuations are also higher. Ola Electric, if they get their house in order and they have got certain strengths in terms of battery manufacturing, let us see if that really is a strength and can change the fortunes of the company. That's their edge. If they succeed over there, then certainly this company also can give very good returns. Advantage is its low price. It's corrected significantly from its all-time high. Yes. And it's got a lot of capacity to produce two-wheelers. So if the demand is there, then they can certainly, scale up manufacturing. But they need to attend to their quality problems as well.
Got it. Okay. All right. Thanks for that, Dipan. Ola option value, if it works, it could work big time, but Ather is the safer stock. And that's what the street has been thinking as well, just looking at that graphic plate that my director was pulling up. But let's hop across to Hormuz. He's here to tell us about IEX, and he's focusing on the shareholding. We know there's negative news flow that's come in there, but Hormuz is turning his eye on the shareholding pattern. Hormuz, take it away.
Nigel, the stock has been in the news for one specific reason over the last 9 months, and that's about the market coupling norms. And at that 30% fall that the stock saw on the 24th of July last year, since then, the stock has done precious little. Look at the next few months. In August, September, October, the stock had not moved anywhere. And even in the month of December, the stock was down 4%. In the start of this year, the stock was down in the first 3 months. Of course, not by much, but in the month of April, the stock has finally seen some bit of gains. It was up around 10 to 12%. And the month of April has generally been a positive one for IEX. And in the last 7 years, the stock has seen positive returns in 5 of them in the month of April and double-digit returns in 4 of them. So in April in general turns out to be a positive month for IEX. Of course, you've got this negative news flow just as we're about to come to an end of the month. But you take a look at the shareholding for IEX at the end of the March quarter, you see the mutual fund holding has seen a substantial reduction of almost 5 percentage points. From around 27%, it's come down to 22%. What has seen an increase has been the FPI holding that has seen a bit of an increase from 11.5% to around 14%, and the retail shareholding too from 34.5% has gone up to 35.5%. So the shares sold by mutual funds were lapped up by the retail shareholders and the FPIs. Now, which are those funds that pared down their stake? ICICI Pru MF was one such name. From around 5.25%, that holding has come down to 3.5%, and SBI Mutual Fund from close to 7%, they have brought their stake down to as low as 3%. So these are the two major ones that have brought their holdings down. The other major shareholders in IEX, the Massachusetts Institute of Technology or MIT and LIC, both of them, their shareholding has remained constant between December to March. No change there this time around. But as of now, a negative news flow dragging IEX down. This market coupling continues to remain an overhang. But the stock, after that 30% fall in July last year, has done precious little, continues to meander around those levels.
Thank you very much for that. Dipan, the saga continues on IEX. Any fresh thoughts?
No, not really. I think that the sort of uncertainty is best avoidable from an investor's perspective. And I think that it's better to look for other stories within the exchange space also. I think that's done very well recently. I think MCX, BSE Limited, both are scaling to all-time high, and there's a good deal of appetite for NSE's IPO as well. So there are many choices within the exchange space. So I would avoid IEX at this point of time. Although the time to sell also is gone, I think, at these levels. So let us see how this actually plays out. And that if there is something scope for IEX to still prosper under the market coupling rule, then who knows, we could revalue the stock at that time.
Asian Paints has moved up from the morning lows. It opened flat. The company has announced price hikes, but we were speaking to an analyst who indicated that despite the price hikes, which should be in low double digits, the company should be able to do a volume growth, a double-digit kind of a volume growth, and stock is now up close to about 2%. So it's moved quite smartly after the initial dip in the morning. Let's get in some more views then. This is Sandeep Tandon. We had a chat with him. He's from Quant Mutual Fund. Listen in to how he intends to play the capital market theme, why exchanges, wealth managers, AMC, what is it that he likes?
Our focus, as I said, is more through asset management company, wealth management company, and up to certain insurance company. We are not playing through broking or exchanges as now, because given the whatever taxation changes and some of the laws which has been changed in last few months, I think it will affect the market volumes. Okay, and which is the case right now. So, any change happen, it takes some time. Maybe a quarter or two before they stabilize. So we are not negative from a longer term perspective, but we are not very constructive from a very near term perspective, and hence we'll prefer asset management and wealth with a better place over these names.
Okay, all right. Well, Dipan, we'll thank you on that note for joining in and giving us that advice on all of the stocks we discussed. Have a good Monday evening. We catch up with you soon. For the time being, we'll slip in a short break. On the other side, we'll be joined by Nippon India's AIF's Rahul Veera, who's waiting for us.
Welcome back. Let's now put the spotlight on individual stocks. Harmis, as always, joins in. Harmis.
You know, the movers in the broader markets today that are seeing some significant traction on volumes as well. And Triveni Turbines is one of them. The top gainer on the Nifty 500 in today's session. Is the biggest single day gain since March of last year. Is the 15% higher on the stock today. Fourth straight day of gains as well. And today's volumes, in fact, are the highest since November of 2024. There's a 3.5 crore shares have been traded on Triveni Turbines. The 20-day average is only 6.5 lakh shares, and a substantial amount of shares marked for delivery as well. 15% of the total amount traded that has been marked for delivery, and so far the stock is the most traded non-Nifty stock on the Nifty 500 today, and 34% higher in the month itself so far. Is turning out to be the best month on record that the stock has had so far in April. Now Ather Energy is the other one, continues to grow from strength to strength, 5% higher today as well. The snapped a 3-day losing streak, is set to be the second highest volumes today in 2026. Nearly 1 crore shares have been traded so far on Ather. The 20-day average is close to 45 odd lakh shares, and a third of those have been marked for delivery as well. The issue price of 321, the stock is up almost 3x from those levels, and barring January of this year, the stock has gained in every single month since it listed in May of last year. And lastly, of course, we just heard about IEX in terms of its shareholding. And look at the volumes as well on the stock today. The top Nifty 500 loser, no doubt. This is the biggest single day drop and volumes as well in over 3 months. Now, on the FNO side, the premiums on the 125 put option have gone up by 550% today, the most active option on the stock. 3 crore shares have been traded today on IEX. The 20-day average is around 45 lakh shares, and half of those are marked for delivery. And the stock has now broken below its 100-day moving average, and the next important level is 124, which is the 50 DMA on the downside. And from its 52-week highs of around 215 odd levels, the stock is down 40%.
All right, thanks very much for that, Hormuz. IEX in focus. Rahul Veera is Fund Manager, Equity Investments, Nippon India AIF. Rahul, good to have you with us here. Thanks for joining in. Very near term, and maybe this is a little tricky in that sense. We had Sandeep Tandon of Quant in the morning who was saying that next 7-10 days, perhaps sideways to down. Do you think there is perhaps, I don't know how large a leg down, perhaps, if you agree with that? Any way to think about it? Or you think broadly constructive?
Broadly, we will remain constructive. See, a couple of things that right now the market is a little bit more event-driven, Twitter-driven. So what could happen in the near term? We are a little bit staying away from too much of noise around it. We are just tracking back to the fundamentals where medium-term view is much more important than the short-term impact.
Okay, so what have you been doing, Rahul? Give us a flavor.
Sure. So we did this one very interesting exercise. What we did is we dissected the data from 2011 to 2019, like pre-COVID era. And what are the sectors that are trading below those kind of 10-year valuation? So out of 800 stocks, like NSE 500 plus some newly listed companies and all the other data points, we saw the 3 sectors, IT, FMCG and banking were the only sectors which were trading below their 2011 to 2019 valuations, 10-year average valuations. Now within that, IT, understandable disruption around that. FMCG, given the volume growth is somewhere hitting the peak across most of the larger names. Banking seems to be a very, very interesting sector at this point of time. Your credit growth are coming back. Your overall names, your NPA cycle is much better than the previous cycles. So private banks is one of the key themes for us as of now.
And how overweight are you on private sector banks, and how diversified? Are you looking at a concentrated holding of individual stocks, or it's just spread across?
It's actually spread across a couple of large cap private banks. And on the others, within the BFS space, some of the AMCs we are playing, and also some of the NBFCs are there.
So if someone has to bet on one sectoral fund from mutual fund point of view to make an investment, you would say it should be banks right now?
Banking and power sector seems to be the most lucrative risk reward at this point of time.
And how are the power valuations compared to long-term averages?
So some of the names are still expensive, but there are, if you see the earnings growth, the kind of cycle that we are in today, for example, 240 gigawatt of demand supply, peak power demand is there. If you see next 2 years, even 6% GDP growth could lead to some kind of a mismatch. So peak power demand, all the solar themes, all your peak demand themes in terms of summer, everything is going to work well over the next 6 to 12 months. Valuation-wise, slightly expensive, but given the visibility of earnings, it will remain so.
Hi, Rahul. Good to see you, Ben. Rahul, I'm looking at your sheet, and it seems BSE finds a place, in terms of the stocks that you all have exposure to. What a beautiful run, right? Valuation-wise, not cheap. And, it seems to be gaining market share from the NSE on the option side. Do you think it's getting excessive, or do you think you'll want to hold on?
We'll continue to hold on. Our view is exchanges are here to stay. A classic duopoly is going to take some time away. If all the valuations, if consider, we believe a hold will be a great call at this point of time.
So you will not add fresh?
No, we will not add.
Okay,
We'll
all right.
continue to maintain the weight in the portfolio.
All right. What is your view on the pharma pack? I'm just observing, I think Oro Pharma is another stock that you'll have, in the list. Your weight with regard to pharma, and sometimes some of our Indian pharma companies are getting very adventurous. It could be a longer term benefit, but in the near term, it seems the street just slammed them down. So your view on the pack and the top pick, Oro.
Right. So from a generic perspective, large global generics will continue to do well in this kind of a volatile environment. Plus your rupee at 90 to 93 definitely helps the larger exporters at this point of time. Now, in terms of some companies being adventurous, see, there is an alternate theory to this. Promoters are going to think a 10, 15-year view, whereas the investment or the capital market is going to look at a 2 to 3 year view. So there is always going to be that disconnect. But some of the portfolio addition by some of these large cap names can be a great addition from a 10-year perspective.
We were also chatting with Sandeep Tandon, and he said, his big bold call is small caps will actually do better than the broader market, small caps and nano caps. Would you have a strong view on how small caps are likely to perform from here on?
So our view is also on the similar side. Mid caps and small caps will outperform the large caps over the next 1 to 2 years. We believe the kind of valuations that small caps are trading at, for example, if you consider NSE small cap 100, which was trading at close to 35 times, has come down to almost 24 times as of now. Now, within that 24 times, if you just dissect the data of small cap indices itself, companies like Misho, they all have been included. Delivery, all of them have been included in the index at this point of time. So actually, the 24 PE that the small cap index 100 is showing is actually slightly inflated, given the kind of changes that we're seeing. So net, it's trading at 20 times, and at a 20% earnings growth, it's trading at 1 time PEG. So we believe large cap at 18 times versus small cap at 20 with a better PEG ratio, small caps will outperform the large caps over the next 1 to 2 years.
Got that. We were discussing power extensively around the beginning of the show, Rahul. So lots to choose from in that sense. But where would you look to? Actually, power / energy. I mean, that entire space.
Right. So we like one of the key hot boxes producer, which is directly linked to the global OEM manufacturer. Also, we like one of the names on the T&D side, which continues to trade expensive. Another is the genset operator. So multiple names in the overall overweight that we have.
Which is the first one? Sorry, what you said? A boxman. The first stock.
So the company is into actually hot boxes manufacturing, and it's one of the key clients is based out of US.
I see. Okay, got that. We'll leave it there, Rahul. Thank you very much for joining us. Good speaking with you, and appreciate your time here on CNBC TV 18. Well, F&O, what's happening there in terms of positioning, what's moving? Nigel, take it away.
Well, it's a good-looking screen, right? If the Nifty is going to be going on with some gains today, it's good. Just one word of caution, the India VIX hasn't cooled off that much. I would have liked to see it in the red. It started off higher. In fact, it's holding on to these gains. Currently, it's up close to around 8%. Normally, the Nifty moving up with the VIX moving in the upward direction. Well, it sometimes seems that, need to be a little bit cautious just in the near term. So just keep an eye out on that front. We're in different times, and volatility in all probability is cooling off. But for today's session, Nifty up, VIX up, need to take note of that. The other factor is the PCR. The PCR, you like it, somewhere in the middle, 1, sub 1. It's moved up around 1.2. It's still a distance away from the higher levels of around 1.6, but that as well has moved up. And sometimes the put writing is getting too easy. But first, let's talk about the calls. There appears there is a writing at around the 24,400 call. Why do I say that? You've got the direction correct, right? The Nifty is up close to around 60 points. But the premium out there has come down to around 125 from around 133 rupees odd. So if you bought that call, you're not making any money. Telling you the writers are waiting out there. On the downside, though, you're seeing some writing. 24,400 put, the premium is down to around 140 from 180. The 24,300 put as well. The premium out there has come to around $100 from around 130 odd. So there's writing on both sides. But if you have to look at a level, then the 50 DMA, which comes in at around 24,450, that's the mark that there is some resistance at. We're almost out there. We're very close to the 50 DMA. I think that 24,500 mark, that's the first level of resistance. If you can get past the 24,500, 24,550, then you're looking at the 200 DMA, which is closer on 600 points away from current levels. On the Nifty Bank as well, it's at a very crucial juncture. So the Nifty is facing resistance at 24,500. The Nifty Bank is almost going very close to around the 200 DMA. Earlier today, in fact, it made a bit of a charge out there. But that's telling you that the bears, they want to come in there and they want to fight, against this particular mark. So keep an eye out on that. Individual stocks, BHEL, the stock that's been seeing fresh buying, the stock is up, open interest up as well. A good amount of open interest built up because on yesterday's base, it's up by close to around 5%. That's the open interest built up. IEX, fresh shots being seen out there. The stock is down. Continuous open interest addition on that particular name, more than 10% open interest uptick. While we are seeing a bit of a short covering bounce being seen on a stock like REC, but the stock bouncing up and the open interest going down. So short squeeze is what we're seeing out there. Well, time to slip into a short break. When you come back, Nimish is waiting for us. He'll tell you what's going on in daily growths. Stay tuned. Welcome back. Keep an eye out on a couple of stocks now. We had put out this piece in Editor's Roundtable on Friday about these textile stocks. Some of them, they could have a few of those tailwinds. I think Welspun Living has suddenly moved to the high point of the race. Just keep an eye out on that stock. It was trading in the red for majority of the trading session. But Welspun Living has spiked up, so I think we should get that up. And Bank of Maharashtra, that's the other name that you're looking at. Big move is what we're seeing. Initial reaction, it seems that the street likes it. Stock is up 5%. NII is going up by close to 19%. I think there was a profit number as well was up close to around 15%. Waiting by for the asset quality number. But it seems the initial reaction is something that the street likes because asset quality has been maintained as well. Net NPAs have come down marginally to around 0.13% from around 0.15%. So a good set of numbers is what we're seeing from a smaller bank, Bank of Maharashtra. But let's hop across to Nimesh. He's joining to tell us what is he picking up in terms of D-Street chatter. Nimesh?
Hi, Nigel. It looks like a day of consolidation after the recent up move. A bit of profit booking as well is my sense. Technically, Nifty is heading towards that big resistance of 24,300, 24,350. It's trading above those levels. but that's the level to watch out for in terms of a bit of a technical resistance. So maybe a bit of pullback can come in the next couple of days. So that's the overall sense. The good part is that the broader markets continue to outperform, and that's backed by institutional buying. The sense is that even in today's market, the buy flows are more tilted towards the mid-cap names, and that's the reason why there is an outperformance there. The breadth is quite strong. It's positive as well. And in general, the mid-cap and small caps have relatively outperformed even in today's market. The big theme seems to be playing out is the power names. We put out the story on Friday as well, and that's the theme which is playing out, right? The power index is up another 1.7%, and most of the large gainers seems to be part of the power name. So that as a theme has played out, and there is a bit of institutional interest as well, even at current levels. I guess all eyes will be on the Iran-US truce. That news on either ways can have a bit of an impact on the market. But in general, my sense is that even if it's a positive news, you might see some bit of profit booking after the recent pullback. So the flows are strong. It's positive in the mid-caps. But from a very near tactical point of view, you might see some profit booking, even if there is good news as far as the Iran-US truce is concerned.
Ramesh, in terms of specific names, what's on the list?
So the first name is Balrampur Chini. That's been a surprise move in today's market, up 4-5%, and in large volumes as well. My sense is that company is likely to announce fundraise via preferential issue very soon. Potentially a couple of domestic mutual funds as well as the promoter themselves are likely to participate in the fundraise via preferential issue. So that's the buzz in Balrampur Chini. The second name is Radico Khaitan. The entire alcohol beverage space has done well today, but Radico stands out and has actually outperformed the other names as well, largely on back of delivery-based buying. So the FI interest is quite high in this particular name, and that's the reason why you've seen a big up move in that stock. Plus there was a Avendus Spark, ICE as well, and all those names today. The third couple of names which have actually outperformed from the recent lows, which is PN Gadgil as well as HFCL. Both are buzzing off late. But in both these names, the sense is that maybe you'll hear fundraising post the Q4 earnings. So that's the trigger there. And the last is APL Apollo Tubes. For second running, the sense is there is delivery-based buying from larger FIs. So again, the interest is back in this kind of names, and this is backed by institutional buying and hence outperformance of late.
Nimesh, I think you'd put out Z as part of your chatter, right? Sometime back.
It was a couple of days back. Then the sense was that a couple of large HNIs have bought into the name, and hence and actually in general you've seen a lot of the beaten down small and mid cap names have seen a strong pullback. So maybe it's a part of a small pullback that we're seeing in Z as well. But no incremental corporate development that I'm aware of. But at least from a flow perspective, some larger HNI interest seems to be back in names like Z.
It's a big move today, 9%. And I mean, for those who are interested chartically, if you look at it from a slightly multi-month point of view, it's kind of sort of breaking out a little bit as well. So we'll see if it sustains or not. Nimesh, thanks very much for that. 40 points on the Nifty, so we're off the highs of the day, and we're back to about 24,000, just under 24,400 at this point in time. Well, I think we can just get the BDSC trades out of the way. Mitesh is back with us. Mitesh, what do you have?
And the Max Health is a VTST with a stop at 1,005 for targets of 1,030. And it's obviously driven by news, but the setup is quite negative. It may see some more declines. So IX is a STVT with a stop at 127 for targets of 120.
Okay, all right. I think there are some... thanks very much, Mitesh, for that. We will... okay, I think what we'll do is we'll... look at some...
I think HPCL, there is some unfortunate news about a fire being reported at the company's Rajasthan facility. We'll just hope and wait that there isn't any casualty. This was supposed to be inaugurated by Prime Minister Modi just tomorrow. Those are visuals. It's engulfed in a cloud of smoke. I think is that you can see the fire? No, it's just I think yellow, but just some smoke right now over there.
But I think this was the refinery where this is the new one, and Prime Minister Modi had said a few, I think about 10 days back, not even 10 days back maybe, that they are essentially looking at expanding the scope of the refinery, and it was, I mean, I remember him talking about energy security and how this is going to be much larger in size and scope compared to what it was envisioned to be earlier. So this is news which is coming through on HPCL. I think let's just look at the other space, which of course was it was perhaps the single biggest day for it yesterday. I'm talking about jewelry, gold, right? Akshaya Tritiya. So Manisha is here with a quick roundup of the feedback that she's got in terms of how sales were. Manisha, take it away.
Thank you for that, Prashant. Well, yes, the sales have actually been quite tremendous. You wouldn't believe because the prices have surged just so much. If you bought gold last Akshaya Tritiya, you already are sitting on a profit of 50 to 60% in sense of gold prices. And silver has gained up by 145% from the kind of prices we saw in the last year. That table should come in on your screens on what the gold prices have been on Akshaya Tritiyas in the past some years. So today, the Akshaya Tritiya prices have been at 1,57,000. Last year, gold was trading at 95,000. Year before at 72, and then before that at about 59,000 rupees. So that's the kind of run-up that we've seen in case of gold prices. Silver clearly has been more dramatic if you look at year-on-year gains herein. Last Akshaya Tritiya prices were at 95,000. We are trading at 2,58,000 right now. So this is a huge gain or a run-up that we've seen in case of silver prices. So just by the virtue of price rise, the earlier feelers were that you perhaps wouldn't see a very strong buying come in because the price has been so high. But the kind of numbers that we are getting in from the market, last year on Akshaya Tritiya day, there was a sale of 14 tons of gold. Now this Akshaya Tritiya, it is 25 tons, so almost double of what we've seen in the last year. These are of course initial numbers right now, but I've been seeing pictures and videos of people lining up, queuing outside for coins and bars and jewelry as well. So those are the numbers that we have in hand right now. For silver, though, there's a bit of a decline. Last year was 400 tons that was bought in sense of silver. This year, it comes to around 300 tons. So there is more gold buying than silver buying this Akshaya Tritiya. Those are the immediate trends that are coming in sense of buying.
Well, I mean, can't keep them, can't keep gold enthusiasts away. Manisha, any sense on how much gold, that number is 25 tons, right?
That's right.
So annually, how much gold gets, I mean, any sense or how much we import or how much is sold? I mean, just as a proportion, how much is this one day?
Oh, well, absolutely. So on a yearly basis, we import anything like 800 to 850 tons. Last year was 760 tons, slightly lower because the gold prices were surging so high. But then the recycle demand has been quite strong, Prashant. So right now, when you go out to buy gold, most people are carrying their old gold, converting it into new, adding some more money into that. So 45% of the market that we've heard in last 2 or 3 quarters has been recycled gold as well coming into the space. The good point has been that people are not getting their gold to sell for cash. They're getting old gold to buy new gold. So gold is saying that economy continues to be there, but 800 tons of an annual import of gold is what India does for last many years. And much of that buying actually happens during Dhanteras and Akshaya Tritiya. These are gold buying festivals. And then apart from that, of course, you see that in bridal and jewelry wedding buying as well. But these 2 days actually tell you on the kind of symbolic buying that India does. So the kind of buying that we've seen at even these elevated prices clearly tells you that this is where much of that money is flowing.
Incredible. And even if you recycle the gold, because that value, you end up topping up a lot more. Even if I've sold, say, worth, 1 lakh rupees, when I purchase something new, it ends up being a 1.5 lakhs. So you're always adding on to that gold kitty, but absolutely incredible. Thank you, Manisha, for joining in. In fact, we asked Senco Gold's MD and CEO, Suvankar Sen, on the impact of the recent festivities on sales. We even asked him particularly on Akshaya Tritiya and how the growth looked like. Listen in.
It's a very positive sign that we are seeing good traction, a lot of footfalls at the stores. In terms of numbers, till now, we are looking at a growth of 25% upwards as far as the sales that we have been seeing this month compared to last year's April, Akshaya Tritiya and Poila Boishakh. So I think that consumers are looking at these current prices as attractive prices for buying either for the upcoming weddings or for their personal savings. Yes, in terms of volume, the prices almost is double or close to double from last year's April. So if you look at in terms of volumes, there is a degrowth of about 12 to 15%. But in terms of value, we're looking 25 to 30% growth compared to last year. So that's a good sign that we are seeing. We've been giving a guidance that we are looking at an EBITDA of about 7.5 to 7.8%. So you need to just wait till the end of May for the margins expectation. And I would say that, see, in terms of the volumes that got impacted, so even though there is a value growth of 46% for the whole year, we have seen a volume degrowth of about 12 to 15% in the last year as well. So that's the kind of trend and momentum that is going on, that yes, people are buying less with the high gold price. And there's a lot of old gold exchange happening, which is helping the overall sales also. It's almost 45 to 48% that people are exchanging their old jewelry and buying the new one.
Well, let's go across to Vinny. She's joining to tell us a quick insight in terms of all the stocks and the news today. Vinny?
Hi, so first up we have Sterling and Wilson. They've won a domestic order. Actually, this is coming for 3,500 crores approximately. They've been the lowest bidder for a turnkey EPC project from Coal India for 875 megawatt of grid-connected solar project. And after that, we've seen the stock really run up in the trading session today. BHEL, now over the weekend, they did report or give us an update in terms of the FY26 numbers. When you look at it for FY26, the turnover is at around 32,300 crores. That's a revenue growth of 15%. Bit of an improvement in terms of the growth rate that we've seen from FY25 to FY26, but total order inflow, that's seen a decline of 19%. What Access Capital is highlighting that yes, the execution seems like it's improved in Q4, but that's already priced in. Despite that, what they're saying for FY27, they expect inflows to be in the range of around 80,000 crores, which will still be below the peak of what one saw coming in FY25, but still, we're seeing the stock buzzing in trade given the up move that we're seeing coming in for all the capital good players. Asian Paints, now Namura has written a note where they highlighted also that Asian Paints has announced a second round of price hikes of 3 to 5% with effect from 5th of May. This is overall, that means the total price hike that they've taken would be in the range of 6 to 8%. And because of that, they're saying that as of now, they're not expecting any impact in terms of volumes. Improved realization will support the growth of the company. So Asian Paints is another one that's buzzing in trade. And lastly, Z Entertainment seeing uptick of almost 8-9%. They had approved a strategic investment of around 116 crores in Phantom Digital Effects, which is a VFX company, which is aimed at improving the content creation capabilities of the company across platforms. And that is why this one also buzzing in trade.
Got it. All right. Thanks a lot for that, Vinny. Well, let's hop across to Amrish Baliga, independent market expert who joins in. Amrish, I'm going to get to your pick for the day, but any view on Z? The stock has done a quick fire, 75 to 85. Need to note, though, that it's one of the biggest underperformers in the last many years. What's your view at around 85, 86 rupees?
It's been a major underperformer, and for the right reasons. Although they're sitting on decent amount of cash, there's not much of action happening. Now that they're investing in this new platform, possibly because of this, we could see some sort of a bounce back, but I really don't see it getting back on track. Could go to levels of about 120, 125, but that would be more of a trading bet.
Okay, all right. Then give us your fundamental call of the day. Normally get, I think this time around you're looking at the milk space.
Absolutely. Dodla Dairy, that's an integrated dairy company that collects, processes and sells milk and milk-based products. The business essentially covers the entire dairy value chain, right from sourcing raw milk to selling finished products across different regions. 8,000 plus collection centers, 1.4 lakh farmer associations, 16 plants, 2.4 million litre per day capacity, about 2,000 plus distributors and 800 plus retail parlors. The company is steadily widening its milk sourcing and distribution network across India, moving beyond its southern base into new states and regions. The entry into eastern markets through an acquisition of Osam, which is a premium dairy brand, and the ongoing expansion in Maharashtra are improving the supply, access and market coverage. So they are gradually increasing their focus on value-added products like curd, ghee, lassi, ice cream, which offer better realizations and a longer shelf life. And they're also into cattle feed, which is synergistic with their business. Operations in Kenya and Uganda provide that additional growth engine with the low competition and strong demand for processed milk. In fact, these markets still have a very low per capita consumption, so there's a decent upside. Capital expenditure of about 69 crores has already been deployed in India. Further investments are planned in Africa. Uganda expansion should be done by FY28. Margins are affected in Q3 due to increase of procurement cost, but normally, they normalize over a period of time within a quarter or so. So I think your Q4 and Q1 should be better. Expected EPS for FY28 is about 54, and with this, my target price is 1296.
Amrish, if someone gotten into Ola at lower prices, the low on Ola Electric was about 22 rupees sometime in March. And now they've already made a quick, 40-50% from that level, perhaps even more. Would you recommend exiting, or do you think because renewable is such a theme now and it's getting traction, Ola has more legs to go?
I think the bird in hand is better than two in the bush. So if you're bought at 22 or 24, at least book some profits. At least book 50% profit with these levels.
And would you bet on Ather at this level?
Ather would be more of an investment bet, whereas Ola is more of a risky trading bet, which has worked out well.
But Ether's had quite a run. This month itself, Ether Energy is up nearly 20%. Amrish, hold that thought. We'll come back and continue chatting with you. For the markets, we've come off. We're now down about 24 points on the Nifty. When we started trade, we were up. And there's been a sudden fall. From the day's high, it's about 150 points lower. Welcome back. Now absolutely flat now on the Nifty. We've come off from the session highs quite considerably. Stocks which are under pressure include Jio Financial, where the company is making a lot of investments. They're growing the top line, but the bottom line has been impacted. L&T is down 1.5%. Many of these IT names are under pressure, whether it's Wipro, Infosys. They're selling off close to about 1%. Kotak Mahindra Bank is dragging its feet, and that's down 1.2%, while HDFC Bank has also been trading, has been dragging. That's down nearly about 0.5%. Amrish, any other stock that you'd like to highlight which catches your fancy?
In fact, I'm looking at the hotel space also. Something like a Sami Hotel, which has 11 global brands, 4,900 plus rooms. They are in about 11 key markets. And now, again, expecting tourism to pick up post this war clouds. So expecting an EPS of about 12.5 for FY28 with a target price of 225. Since the stock has corrected decently well, I think it's a great time to buy this right now.
Okay. All right. Any view, Amrish, on some of these textile plays? on Editors Roundtable, we're highlighting that the rupee is in favor. Bangladesh is having some power issues as well. And hopefully India gets a better deal with the United States. Put all this together, it appears that the textile space is at an inflection point. And if you look at the cotton yard spread as well, that's moved up by 25%. Any stock you like out from here? One of the stocks that's catching your attention is Wellspun Living. That is spiked to the high point of the day. There are many other plays, though. I think the other one which one should look at is Himmat Singh Ka Seede, where again they are into the higher end as compared to Wellspun, where the margins are higher. So I would surely suggest Himmat Singh Ka at these levels. Okay, got that. Thanks a lot, Amrish, for giving us your view on a lot of those names. Well, for the markets, it was a reasonably good day, barring the last 25 minutes of trade, when the Nifty went down and went down hard. But we end mildly in the red in today's trading session. The Nifty Bank, well, that came off close to around 500 points from the highs of the day. A few stocks that were outperforming, they underperformed today. So let's run you through that list first. Hindalco, that was down close to around 2.5%. Tata Motors was down close to 2%, and L&T as well was down 1.5%. On the flip side, Trent, a relative underperformer in the last 18 months or so. That's popped up in style. They're going to be going in for corporate actions. That's why the street likes that. JSW Steel ended up with a gain of 2.5%. SBI was up more than 2%. And Asian Paints, they are pushing through the price hikes. And the larger players in a volatile environment normally do much better. From the broader markets, IEX got slammed back. That was down close to around 8%. SBI Card was down close to 4%. And PI Industries as well down close to around 3%. The other stocks that did do well, though, were Tube Investments up 3%. Your Torrent Power that was up 2.5% in trade. Hitachi Energy continues to run along. We interviewed the management at around 3,500 rupees. That's just around 2.5 years or so ago. Today, the stock is close to around 30,000 rupees. So Hitachi Energy should come up for you on the screen. And Bharat Wire Ropes, we had explained the fundamentals to you on Friday with regard to the massive volumes and fundamentally how the stock looks. Post-market hours, we understood that Lloyd Group has gone ahead and bought 5% stake in the company. So following up the 20% gain on Bharat Wire Ropes, the stock put on 5% even in today's trading session, though it came off from the highs of the day. Net, an okay trading session, given the kind of backdrop that we have. All eyes are going to be on the talks between US as well as Iran and whether or not it will take place. But for today's trade, it seems it was a day of consolidation. We'll wrap up on this edition of Closing Bell. You stay with us. The team of Markets Forward comes up next.
A volatile session saw markets end flat. Nifty ended above 24,350 but off 24,500. The mid-caps fall. The Nifty Bank outperforms.
ICICI Bank delivers a strong show, beating estimates on income and profit growth, while HDFC Bank sees muted growth in income even as profits rise on lower OPEX and credit costs. The street also awaits clarity on its new chair.
CERC issues a draft on market coupling rules, naming Grid India as the operator for determining the market clearing price for key market segments. On that news, the stock of IEX slumps as this long-opposed move by this power exchange.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all of the key data points to gear you up for the next trading day. I'm Ekta Batra and with me is Mangalam Malu. Well, Mangalam, it turned out to be a session where we thought that, we've got this. The markets were steady. We had the Bank Nifty, which was up around 0.8%, but all of it unraveled in the second half of the trading session. We had the Bank Nifty, for example, which gave up around 500 points from the day's high to end absolutely flat, with the mid-cap index ending in the red today.
Take that point, Ekta. Bulls thought that maybe at lows we would see some sort of demand coming in for the market. That's what took place as well. But there were signs in the F&O space which were telling you that maybe this may not extend. And there were two major reasons for that. One, we had the India VIX, which was higher even as the markets were higher. And by the end of trade, India VIX actually saw a double-digit spike. The second part was that the put-call ratio at some point moved to 1.3, which was telling you that maybe signs are a little overheated on the way up after a stellar week that we saw in the previous week of trading session. And that meant that at high levels, Monday, the frontline indices saw some supply. The Nifty saw a sell-off from its 50-day moving average, and the Nifty Bank as well was moving into the congestion zone of 50 and 200-day moving average. So let's see where it goes from here. We had more stocks decline than the number of stocks which are advancing. After consolidation, do we look at another day where lows will be bought into? A lineup of what we have in store for you today. Top movers and shakers of the day with Hormaz. Alongside that, we have the fourth quarter numbers breakdown of ICICI Bank, HDFC Bank and Grow. We tell you why IEX fell in trade today, and last but not least, key market events that you need to watch out for in tomorrow's trading session. And with that, let's go across to Hormaz Vatakia, who joins in from the big wall with all the movers and shakers.
It was a very choppy day indeed, and there were plenty of newsmakers, and unsurprisingly so, considering all the developments that have transpired. And the IEX was, of course, the big underperformer of the day, 8% lower on the stock, and the stock ending at 125. Zee Entertainment, of course, the big mover on the upside, 8% higher on the stock after the news of its investments in one of its units. Trent, of course, on the issue of its bonus shares and ahead of its results, and Asian Paints too doing well despite the rebound seen in crude oil prices. The earnings reactions today, few but important ones at that. Grow's numbers were decent, but the stock ended off the highs of the day, especially considering the run-up that it had seen before its results. Bank of Maharashtra did well, ended 4% higher after what has been a very decent quarter, and ICICI Bank too. Healthy results, but the stock had run up as well, so the stock at least contributed to the Nifty recovery, if not more, and outperforming HDFC Bank in today's session. Power stocks, of course, were the ones that did well today. They have done well all through the month of April. CESC ending 5% higher, BHEL and ending with gains of 3%. Siemens Energy India was the stock that I wanted to mention. That stock ended 3% higher, as did Hitachi Energy. That too saw gains of around 2.5%. Two stocks that reacted to order wins. Sterling and Wilson's order win value was almost 70% of its market cap. EMS2 ending 8% higher. Both of them at one point were up double digits, but did fairly well in an otherwise volatile market. And lastly, stocks that ended at a 52-week high in today's session. Quality Power was one of them. Bharat Wire Ropes moving higher after the 20% circuit last week, and Graphite India and Apex Frozen Foods 4% gain today, ending at a 52-week high as well.
Okay, all right, Hormuz, thanks very much for that. So those are all of the top movers in today's trading session. But let's focus on the entire banking space. ICICI Bank reported what was a strong showing in Q4, while HDFC Bank came out with a muted Q4, with near-term sentiment remaining watchful amid the governance overhang. Ananya Singh is here with more details on this. Ananya, over to you.
Now, over the weekend, we saw key banking results giving good overview on the sector's health. Now, coming to HDFC Bank, they delivered a stable quarter with some mixed underlying trends. Now, net interest income grew around 3% YOY, but came in below expectations. Profit after tax was up about 9% YOY. Now, advances grew 12%, but was below industry pace. Now, while deposit was stronger at 14%. Now, on the positive side, asset quality improved with GNPA around 1.15% and NPA at 0.38%, with capital adequacy remaining strong at 19.7%. Now, management also acknowledged the leadership-related development with no recommendation for chairman's name still made to the RBI, and they also mentioned that the legal review for the chairman's exit is still ongoing with no clear timeline. And on the Dubai issue, they mentioned that the regulator's order clearly stated that the customers were not uninformed. Now, in contrast with this, ICICI Bank delivered a healthy quarter. Now, NII grew 8.4% YOY and profit after tax rose 8.5% with steady operating performance. Now, loan growth was healthy at 15.8% and deposits grew 11.4%. Now, the standout was asset quality. GNPA improved to 1.4% and NNPA to 0.33% with provisions dropping sharply below 100 crores. Now, management remained confident about growth and said that the credit cost will remain below at 50 basis point. Now, strong liquidity with LCR above 125% is expected and continued momentum across segments. So, overall, HDFC Bank delivered a stable quarter, but development around leadership and the ongoing review will keep the sentiments watchful. And for ICICI Bank, it was a very healthy quarter.
All right, a healthy quarter for ICICI Bank. Let's go across to our guests now. We do have Amrish Balika, independent market expert, along with Jay Thakkar from ICICI Securities joining in. Amrish, what do you make of the numbers that came in from the financials, HDFC Bank and ICICI Bank? And post them having reported their numbers, is there an investment call or a trading call that you have in the stock?
When you look at the numbers, it's been healthy loan growth for the banks, and we have seen the deposit growth also has been quite decent. So overall, looking at the numbers, I would still be bullish on both HDFC Bank as well as ICICI Bank. But HDFC Bank, particularly because we have seen a huge price correction for whatever controversy was there, and I think that will be behind us sooner than later. So at these levels, it makes sense to buy HDFC Bank as compared to ICICI Bank.
Okay, all right. Well, we do have Jay Thakkar joining in from ICICI Securities as well. Jay, what's your thought, considering that the Bank Nifty couldn't sustain its gains in today's trading session and in terms of key constituents such as ICICI Bank and HDFC Bank?
Hi, very good afternoon to you, Ekta. And well, I would say Mangalam as well. So I would say that Nifty Bank closed quite flat. It did see a selling pressure coming from those levels of 57,000, wherein you have now the highest call base for this series. On the flip side, I would also say that 55,000 now has a good put base. So Bank Nifty might consolidate within this range of 57,000 to 55,000 now. In this second half of the last few days of this expiry. As far as the Bank Nifty constituents are concerned, and I would say that the Nifty PSU banking stocks now look positive. We have seen a good long build-up now that has started to begin in these stocks. We had a few shorts which got covered in the initial phase of this recovery. But then, stocks like Bank of India, Union Bank, Canara Bank, Bank of Baroda and SBI, all of these are relatively looking quite better. So I would be, looking out for an opportunity out here from the longs perspective. But for the short term, I would say that until unless we don't see a meaningful close beyond the levels of 57,000 on Bank Nifty, at least for the month of April series, although it's just 1%, but then still, until we don't see those levels coming in on a closing basis, there might be some profit booking seen from these levels, wherein Bank Nifty could test the levels of 55,000 as well. So buy on dip should be the strategy, and one can focus on the PSU names.
Okay, all right. Well, Amrish, Yes Bank also released its numbers, and we do have Axis, which is releasing numbers later on in the week. What is your sense in terms of these corporate lenders, even post what Yes Bank has said, as well as what Axis might reveal in its numbers?
Yes Bank, anyway, numbers were quite decent. But I think the issue with Yes Bank is the decision on the bonds. And I think that's what will decide, at least in the near future, the course which it takes. So for the time being, Yes Bank, I'll just have a hold. But something like Axis Bank, yes, I think, I would surely wait for the earnings, but at least partially can be bought now.
All right, take that point. And let's go across to Devyani now, who joins in for another set of numbers that came in today. Fintech platform Grow reported a strong set. Fourth quarter numbers, profit rose over 120%. Revenue as well was up 80% over a year-on-year basis. But the markets were weak and the stock had already seen a rally. So as a result of it, saw about 1.5% correction post its results were reported. The internals, Devyani joins in with the highlights and the details.
Well, yes, Grow has just come out with the strongest quarter yet. Revenue came in at 1,505 crores, up 24% sequentially. EBITDA was up 31% this time around, with margins expanding to 62%. Now, net profit grew 25%. That's slightly softer, and that's as a result of the higher tax that the company had to pay this time around. Now, on the trading side, it's the futures and options premium turnover that's jumped 44% on a quarter-on-quarter perspective. That's been the engine that's driven this particular quarter. Now, F&O now accounts for roughly about 55% of the total revenues. The margin trading funding book has also seen an uptick of 22% on a quarter-on-quarter perspective. Now, there's one small red flag though. The full year revenue came in at 4,645 crores, which was up 19% on a year-on-year perspective. Now, the management had guided for 25 to 30% top-line growth, so that's still a miss on that particular guidance. That said, the stock is up roughly around 30% in this particular month alone, so the strong results seem to be already priced in. Nonetheless, it's been a strong set of results for the company this time around.
Okay, all right, Devyani, thanks very much for that. So that's Grow, which did well. In fact, Amrish, it's interesting because a lot of these capital market plays have done well this month, up anywhere between 16 to even close to 40% for some of them. Do you like anything within this entire space? We've now got 3 numbers out. We've got Grow, we've got Anand Rathi Wealth, Anand Rathi Shares, as well as the likes of Angel One, which reported a good, decent set of numbers.
That's true, but the way Grow has moved up in the last couple of weeks, I would say it's more or less fully priced at this point of time, despite the good earnings. At this point, I'll not really go and buy fresh, but something like a Nuama can still be bought from a longer term perspective. Angel also should be bought.
All right. Amrish, thanks a lot for that. We'll go across to Jay for a bit, in just a bit, for another stock and the view on the market. But the stock that fell today and demanded a lot of our attention was IEX, among the top losers today. And the CERC released draft notifications on market coupling norms. Remember, market coupling is most likely to impact their market share in the power segment. Vivek joins in with the details. Vivek, down 8% for IEX.
Well, that's right, down 8% today, a bit of a negative setback coming in over the weekend. CERC released draft norms on the power market regulations, including a formal framework as far as the implementation of market coupling is concerned. They've gone ahead and invited stakeholders as well as public feedback, and it's expected to be received by May 16, 2026. Detailed procedures on market coupling will be issued most likely for implementation within the next 6 months. What does the draft say? And the key point being that now the market coupling operator will be Grid India. Remember, earlier power exchanges were collating all of the bids, they were collecting the bids, and they were the ones that were going ahead and establishing a clearing price as far as buy and sell transactions were concerned. Now that particular work will be done by the Grid Controller of India. Now, this takes away one of the key modes that IEX was enjoying, given the fact that it is the market leader with close to 90% market share as far as the spot market is concerned. And on the back of that, analysts are concerned that valuation multiples will see quite a bit of a negative rating. Along with that, they expect significant market share loss. Now, the other big concern is that earlier analysts were anticipating that market coupling will only be implemented in the DAM segment, which is the day ahead market segment. However, in the latest notification that's been put out by CERC, they've also mentioned RTM, which is as well as other segments, the real-time market as well as other segments is something that they're actually mentioning could be brought under the ambit of market coupling. Another concern, which is a bit of a headwind as far as IEX is concerned, is the fact that there could be a bit of a cap as far as broking charges that they levy on customers are concerned. From the current 2 paisa, there are talks that it could be brought down to 1.5 paisa, and Access Capital has written that that is another potential headwind. All of these prove to be a perfect storm. Stock ended lower by 8% today.
Right, Vivek. Thanks a lot for that. So that was about IEX. Jay, chartically, how does IEX look before we go to Ambrish for his fundamental view?
Sure, within this Nifty Capital Market Index, Mangalam, I would say this is the only stock wherein you would see the huge shorts position still, there. I mean, otherwise, if you see then, BSE had shorts, but then it got covered, and slowly we've seen it making lifetime highs, moving higher. M6 is moving higher. In fact, the stocks like K Fintech and the market players like CDSL and NSDL also, or CAM.
Right, seem to have snapped that connection. Let's go back to Ambrish. Ambrish, we got Jay's point that in the entire, exchanges sort of index that he has, IEX is an underperformer with a lot of short positions being added. So that's the trade setup for IEX. Fundamentally, how much do you think this news can further damage this stock, which has already seen a lot of damage?
See, I mean, whenever there's been news on this coupling, whenever there's been a discussion on coupling, IEX has cracked. And now with this draft regulation out, which clearly shows that there would be a lid on IEX's prospects going ahead, including the possible potential revenues and transaction fees also would be much lower. I think we are moving close to a finalization of this. So I think even at these levels, one should not really look to buy IEX even for a bounce back. It's quite risky at this point of time. So I would, give it a pass. And in case someone has possibly utilized any sort of bounce backs doing this.
All right. Jay, what do you make of Z? An 8% up move is what we saw in that stock?
Well, generally, we don't see this kind of move coming in this stock. It's been clearly an underperforming stock, I would say, Mangalam. So I would still wait and watch for this stock to actually, surpass its previous weekly swing high of 100. Only beyond those levels, we would see this stock really bouncing thereafter to the levels of, say, 130, 150 as well. But till 100 levels are not broken clearly, I would still wait and watch and like to avoid this today's move.
Okay, got that. Jay, have you looked at Trent coming out with its numbers this week, also going to contemplate a bonus issue? What's your sense on that stock?
Sure, there was huge amount of shorts out there. We saw good short covering happening on Trent, and now it has broken out from a falling trend line as well. So Trent has good room to go up till the levels of say 4,600 to 4,700 on an immediate basis, and till 4,000 levels are held. I think that the overall trend in the short term still looks positive. We can see some further retracement of the overall fall because the stock has corrected quite a lot, and after a long time, I would say that it has actually come out of this falling range. So after having come out of this falling range, with good short covering numbers, clearly indicate that there will be further strength going forward. Critical level on the downside would be 4,000.
Okay, all right. And Ambrish, what about you? We're looking at a couple of FMCG/consumer plays which are coming out with its numbers. We do have Nestle also, which will be releasing its numbers this week. We do have Dabur in a couple of days as well. Overall, what's your thought? Trent, Nestle, couple of others?
In fact, if you're talking of the players like Dabur or Imami or Nestle, here I see volume growth getting better, and possibly we could see better margins going ahead. So I would be more bullish on these plays as compared to something like a Trent, because there I think the concern would be the same store growth, and looks like the bonus issue could actually cushion the possible earning disappointment this time. So I think that's something we watch out for.
All right, take that point. Thanks a lot, Ambrish and Jay, for joining in and giving our viewers a whole host of expertise on the markets, levels, individual stocks, investment ideas as well. What we'll do is take a short break on this edition of Markets Forward, come back, get you all the corporate voices along with the key market events to watch out for in trade tomorrow. Welcome back. You're watching us here on Markets Forward. It was a volatile day of trade. The market still ended marginally higher, though off highs. The mid-caps lower as well. But time to take stock of the big corporate voices that joined us on the channel today. The management of Mastek, that stock was lower by about 4-5% today after its numbers. The margins were impacted by a recent wage hike, a drag of about 1.5%. The management said they actually lowered their EBITDA margin guidance from 17% to a range of 16-16.5%. on account of increased competition due to AI, on which the management emphasized as well that effective adoption of AI will be critical in shaping business performances going forward.
Bajaj Consumer is targeting stronger growth by expanding distribution and building its non-almond oil business. Speaking to CNBC TV 18, the company's management said it was targeting 500 crores from its non-almond oil business over the next 3 years, while also strengthening its wholesale network and stepping up ad spends on its core hair oil portfolio. The management further added that new age channels, which contribute around 30% of sales, will be used to drive premium products.
And finally, the management of Senco Gold joined us on account of Akshay Tritiya. Poila Boshak said that a robust 25-30% is the growth that they saw during this festive season. Higher gold prices have impacted consumer buying behavior, with volumes declining about 12-15% so far this year. They're guiding for an EBITDA margin of 7.5 to 7.8% with a 25% revenue growth in FY27. They expect to benefit from rising gold prices through inventory gains, with about 50 to 50% of its inventory currently hedged, leaving the others unhedged.
All right, and before we wrap, let's bring you some key market events to watch out for. We have Ria joining in to tell us all of the events we need to focus on for tomorrow's trading session. Ria, over to you.
Well, yes, a whole host of companies reporting their Q4 numbers, including Nestle, HCL Tech, Tata Elxsi, Tata Investment Corporation, 360 OneWAM Persistent Systems, Suntech Realty, as well as Cyient, DLM. And apart from the results, the key thing to watch will be the US-India bilateral trade agreement talks, and the Indian team visiting the US between April 20th to 22nd will be taking the negotiations forward. And lastly, also one more event to watch out for: Defence Minister Rajnath Singh will undertake a 3-day visit to Germany beginning on Thursday.
All right, Ria, thanks a lot for that. So those were all the top events that you need to watch out for ahead of trade tomorrow. But with that, we're out of time on this edition of Markets Forward. You don't go anywhere. Stay tuned to CNBC TV 18. All the market updates and all the news continues.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Iran says no plans for another round of negotiations with the United States and closes the Strait of Hormuz. This after US Navy seizes an Iranian cargo ship just hours after President Trump announced he's sending a team to Islamabad for talks. The 2-week ceasefire expires in 2 days. Crude oil prices flare up and stocks decline across the world after the fresh escalation in tensions at the Strait of Hormuz. Brent crude prices moved towards $100 a barrel. Sensex and Nifty end with marginal gains after a volatile session. Midcaps underperformed the blue chips. Rupee weakens against the dollar to breach the 93 mark once again. India's Foreign Secretary summons Iran's ambassador and expresses deep concern after 2 Indian ships were fired in the Strait of Hormuz. The ships have reached India and no casualties have been reported. India and the US scheduled to hold trade negotiations in Washington, D.C. starting today for the next 3 days. Commerce Ministry says India stands by the deal despite US Supreme Court striking down President Trump's so-called reciprocal tariffs. HDFC Bank's board will seek the reappointment of Shashithar Jagdishan as CEO only after it gets a clearance from external law firms. Sources say a report from the law firms on the sudden resignation of the bank's chairman citing ethical concerns is expected by the end of this month. Sir Ratan Tata Trust faces a legal notice over alleged violation of Maharashtra Public Trust Act over its board composition. The board of Bhai Hirabhai Trust also moves an amendment to remove restrictive clauses that allowed only Zoroastrians to be trustees. With less than 72 hours to go for voting, the fate of 27 lakh voters in West Bengal hangs in the balance. Petitioners claim 19 appellate tribunals that were supposed to hear cases of those disenfranchised by the controversial electoral roll revision are not functioning. Supreme Court seeks a report from the Chief Justice of Calcutta High Court. Manipur is on edge once again after fresh violence grips the state. 5 people, including 2 children, have been killed in the last 2 weeks. At least 21 people have been arrested for alleged involvement in violence during a protest march. Police in Gurugram claim to have busted a racket selling fake weight loss injections under the branding of Eli Lilly's Monjaro. Police say they acted on a secret tip-off and seized counterfeit drugs worth 56 lakh rupees. US National Security Agency is reportedly using Anthropic's new model called Mythos. The company has given restricted access of the new model to a handful of firms citing cybersecurity risks. Anthropic CEO Dario Amodei meets White House Chief of Staff and Treasury Secretary Scott Bessent despite being blacklisted by the Pentagon. All right, the top story this evening, tensions flare between the US and Iran with 2 days left for the 2-week ceasefire to expire. This as the US Navy attacked and seized an Iranian-flagged ship in the Strait of Hormuz hours after Trump announced that he's sending a team to Islamabad for talks. The US accused the vessel of trying to evade its naval blockade. In a social media post, US President Donald Trump said that the US Navy had warned the ship to stop and then, I quote, stop them right in their tracks by blowing a hole in the engine room, end of quote. The US CENTCOM also claimed that repeated warnings were issued to the ship over a 6-hour period. Iran initially contradicted the claim, saying US forces were forced to retreat. However, Iran's military later confirmed the seizure and warned it would respond and retaliate to what it called an act of armed piracy. The IRGC said the ship had been traveling from China. This comes as Iran's president told Pakistan's Prime Minister Shehbaz Sharif that Tehran suspects the US will repeat what he called unreasonable behavior and bullying. All of this comes as Iran casts doubt on a second round of talks taking place in Pakistan's capital, Islamabad. Tehran has said it has no plans for another round of negotiations with the US. The spokesperson of Iran's foreign ministry, Ismail Baghai, told he also said that there are no plans for a second round of negotiations with the US as of now. He also accused the US of violating the ceasefire since it began. The fresh escalations have pushed crude closer to the $100 mark. Traffic in the Strait of Hormuz has returned to a standstill after Iran closed the waterway over the weekend. However, Kepler data shows over 20 ships passed through the strait on the 18th of April. This is the highest number of vessels that have crossed the waterway since 1st of March. Meanwhile, in Lebanon, Israel has continued to demolish homes and other buildings, including educational institutions in villages in southern Lebanon. This comes even as a 10-day ceasefire remains in effect between Lebanon and Israel. The Israeli military has said its forces remain deployed in the area to tackle continued activity of militant group Hezbollah. AP has reported that nearly 5,000 people have died across West Asia since the conflict began. At least 3,000 people have been killed in Iran, over 2,300 people have died in Lebanon, and more than a dozen have been killed in the Gulf states. The war has wiped out more than $50 billion worth of crude oil production from global markets. Over 500 million barrels of crude and condensate have been lost since the conflict began. Manisha Gupta has more on crude prices and the monetary impact of the war on the sector. Manisha.
Well, it continues to be very, very volatile for the crude oil prices after that 10 to 11% of a decline on Friday to almost 6 to 7% of gains in the Asian markets right now. This is as we have had the geopolitical tensions between US and Iran flare up yet again, with the US Navy freezing and seizing Iran-flagged vessel in Gulf of Oman. And Iran also has targeted ships reasserting control of Strait of Hormuz. So we are back again at the same level therein, with expectation that the second round of peace talks, which are expected to happen today in Islamabad, perhaps can get a more permanent resolution therein. Having said that, it is about the crude and products that already have been lost, with markets believing that even if the war was to stop tomorrow, with Strait of Hormuz opening as well, it would take anywhere between 4 to 8 months for these crude supplies to come back. You have 500 million barrels of crude and condensate out of the market right now. 80 oil and gas facilities have been damaged within West Asia there. And it also is about the Gulf Arab countries, which are losing to the tune of around nearly 8 million barrels per day of crude every single day. Now, when you look at jet fuel exports from Middle East, which is Saudi Arabia, Qatar, Kuwait, Bahrain, Oman, UAE, etc. In the month of Feb, the jet fuel export was 19.8 million barrels per day, which in March and April has come down to just about 4 million barrels per day therein. So the US is looking to renew sanctions on sanction waivers rather on Russian oil at sea, and that perhaps could lead to 200 million barrels being taken off or consumed by Asian countries. A bit of a support coming in there. But until the time you see a resolution to this whole thing in West Asia, the markets do believe that one, the crude prices will continue to be volatile, and two, $85 a barrel continues to be a strong support as well.
All right, thank you, Manisha, for that. A massive fire broke out at an HPCL unit in Rajasthan. This has come a day before Prime Minister Narendra Modi was scheduled to inaugurate the unit. The official cause of the fire has not been confirmed yet. According to initial reports, the blaze erupted in the crude distillation unit section of the refinery. No immediate reports of casualties have been reported. All right, on to the day's market action. Markets ended flat after a volatile session. Nifty held on to levels above the 24,350 mark. Midcap index underperformed, while Sensex rose 27 points. Nifty PSU Bank emerged as the top sectoral index, while IT stocks continue to remain under pressure. The Indian rupee has breached the 93 mark against the US dollar. Once again, a stronger dollar, elevated crude oil prices and persistent outflows by foreign investors are contributing to the Indian currency's weakness. The two Indian-flagged tankers that were fired at in the Strait of Hormuz have reached India. The vessels were not damaged and no casualties have been reported. The ships were transporting crude oil to India when they were targeted by Iranian Revolutionary Guard gunboats off the coast of Oman. India's Foreign Secretary summoned Iran's ambassador after the incident. The secretary expressed deep concern and issued a stern warning against any threat to Indian commercial shipping. India has also firmly rejected reports of any toll being imposed on vessels passing through the crucial waterway.
Motor tanker Sanmar Herald, Sepa Navy, you gave me clearance to go. Sepa Navy, this is Motor tanker Sanmar Herald, you gave me clearance to go. My name second on your list. You gave me clearance to go. You are firing now. Let me turn back.
as tensions continue to rise at the Strait of Hormuz, the Union government has cleared a 13,000 crore rupees sovereign maritime fund to insure India-linked vessels. Yash Jain is here to explain how this fund will work. Yash, please take us through the new scheme and the response from insurers.
Well, as you said, amid the tensions around passage of shipments from the Strait of Hormuz and the general large war risk, the Indian government has announced the launch of a 12,980 crore sovereign maritime fund. The purpose of this fund would be to insure India-linked vessels. Now, before we speak about the fund and how will it function, let's just understand what kind of risks would policies, the insurance policies under this fund cover. Marine, hull, machinery, cargo, war risk of any of the shipments will be covered in the insurance policies under this particular fund. Now, what's the purpose of this fund? Large global insurance companies are very active in terms of issuing insurance policies, the marine policies or the war risk policies for shipments passing through the Strait of Hormuz. Indian insurance companies were reluctant to issue these policies simply because of the large claims risk that could possibly arise if there were any potential damages which were done. With the government coming out and saying that there is a backing of a large fund worth 13,000 crore rupees to take care of the claims, Indian government wants to encourage Indian insurance companies to issue or underwrite marine insurance policies for the shipments passing through Strait of Hormuz. Now, how exactly would this fund of 13,000 crore work? Essentially, Indian insurance companies will be asked to form their internal fund of about 1,000 crore rupees and any claims arising out of any potential damage on shipments passing through Strait of Hormuz or the associated areas, if the claims remain under 1,000 crore rupees, then the damages would be paid from that internal fund of insurance companies. If the damages of claims extend beyond 1,000 crore rupees, then the government would step in with its 13,000 crore fund to honor the claims of the damages which have been done. Essentially, how will this help? It will essentially help to retain the premiums paid by Indian entities towards insurance of these marine policies to remain within the boundaries of India. Also, it will give a great certainty in terms of claims management if any potential damages do occur of shipments passing through the Strait of Hormuz and the affected areas.
All right. Thank you, Yash, for that update. Shifting focus now, a fresh legal notice has been sent to the Sir Ratan Tata Trust, raising concerns over its board composition. Now, the notice alleges that one of the key trusts that control Tata Sons violated the Maharashtra Public Trusts Act of 1950. The letter says the trust presently has 6 trustees, out of which 3 function as lifetime trustees. This constitutes 50% of the board, which is in direct contravention of the statutory mandate. The legal notice has called on the Charity Commissioner to convene an urgent board meeting and ensure the trust complies with the statutory limit. This as the Hirabai Trust moved to amend a deed that restricted non-Zoroastrians from becoming trustees. Now, the board of HDFC Bank will seek the reappointment of Shashithar Jagdishan as CEO only after it gets a clearance from external law firms. Sources say a report from the law firms on the sudden resignation of bank's chairman, citing ethical concerns, is expected by the end of this month. Furqan Morkan brings us more details.
So what we learn is that the HDFC Bank will be sending the name of its CEO Shashithar Jagdishan for reappointment only after the clearance from the law firms. The bank had appointed Vadya Gandhi, Trilegal and a top US-based firm to review the resignation of its former chairman, Atanu Chakraborty, who left unexpectedly, citing ethical differences. Sources tell CNBC TV 18 that the bank's board was of the opinion that the bank should go for Jagdishan's reappointment only after 2 things. 1, an unqualified opinion from the independent auditor, and 2, a clean chit from the law firms. With auditors giving unqualified opinion in the Q4 results, one part is covered. We have been told that the report from the law firms is expected by the end of this month. It's important to note that Jagdishan's current term at the helm of HDFC Bank is set to end by October 2026. As per RBI guidelines, the bank should select a fresh candidate or reappoint the existing CEO 6 months before the incumbent's term expires. So ideally, by the end of the May, the bank should have moved for the reappointment of the CEO. We reached out to the bank for the official response. We are still awaiting their response back to you.
Right, thank you, Furkan. Private lenders, ICICI Bank and HDFC Bank, both have reported stable set of numbers in the fourth quarter, beating estimates on most parameters on an annual basis. ICICI Bank's net profit rose over 8%, while HDFC Bank's profit jumped more than 9%. Net interest income for ICICI Bank rose over 8%, while HDFC Bank's increased to more than 3%. Asset quality for both banks improved on a sequential basis. India and the US are scheduled to hold trade negotiations in Washington, D.C. starting today for the next 3 days. Commerce Ministry says India stands by the deal despite US Supreme Court striking down President Trump's so-called reciprocal tariffs.
An Indian delegation is in the United States for trade talks with the American side from 20th to the 22nd of April. Now, several issues would be discussed, not just the chief negotiator, but also the deputy chief negotiator and several track leads have gone to the United States. Now, post-issuance of a joint statement for finalization of a BTA between both the sides, several developments have transpired. The Commerce Ministry indicated that several developments have taken place post the finalization, which included the Supreme Court order in the United States, the removal of reciprocal tariffs, the removal of IPA tariffs, and subsequently the levy of 10% tariffs by the United States. So these issues, of course, would be discussed, and both the sides would be sitting across the table to discuss all pending issues. Both the sides are also going to discuss how the structure of tariffs is going to be like post these developments, and all pending issues would be taken up. India has also objected to the trade investigations which have been initiated by the United States on several countries, including India, and has indicated that there is no violation from India's side either on labor issues or on excess capacity, and has sought that these issues better be solved bilaterally.
Right, thank you, Abhimanyu, for that. Shifting focus now, Prime Minister Narendra Modi met South Korean President in the national capital today. The President is on a 3-day state visit to India from the 19th to the 21st of April. This is the first Korean presidential visit to India in over 8 years. Both nations are aiming to double bilateral trade to $50 billion by 2030. The nations also aim to strengthen strategic ties in semiconductors, shipbuilding, AI and defense. All right, time for a short break. Coming up next, police in Gurugram claim to have busted a racket selling fake weight loss injections under the branding of Eli Lilly's Bonjaro. More details when we return. Welcome back. The death toll in the Vedanta power plant blast in Chhattisgarh's Sakti district has risen to 24. A preliminary probe has found that the blast occurred as the accumulation of excessive fuel inside the boiler furnace led to a pressure buildup. Police officials said that the initial probe points to lapses in maintenance and negligent operation. Chairman Anil Agarwal has been named in an FIR filed in connection with the blast. Industrialist and Member of Parliament Naveen Jindal said the tragedy was deeply painful but questioned naming Agarwal before the investigation. At least 23 people have died in a massive blast at a firecracker factory in Tamil Nadu. The blast also injured 6 people. Officials said the friction of the chemicals likely triggered the explosion. Villagers reported hearing the blast several kilometers away, and witnesses said they saw plumes of white fumes rising over 50 feet. Officials also added that the license of the firecracker unit may be cancelled. Manipur is on edge once again after fresh violence gripped the state. 5 people, including 2 children, have been killed in the last 2 weeks. At least 21 people have been arrested for alleged involvement in violence during a protest march. The Gurugram unit of the Drugs Control Department has busted an alleged syndicate involved in the sale of spurious anti-diabetes injections belonging to pharma major Eli Lilly. The department has seized stock worth over 56 lakh and arrested 2 individuals in a late-night operation over the weekend. Timsy Jaipuria joins us now with more. Timsy, what was uncovered?
Well, yes, that's what officials are saying, and that's what we've learned from our sources, that acting on a specific tip-off, officials were alerted to the illegal sale of suspected counterfeit versions of Mounjaro's quick pen injection, which is an anti-diabetic diabetes drug in multiple strengths ranging from 2.5 mg to 15 mg. Now, this was a joint effort between the state drug controller, that is the state drug inspector, and police of Gurugram, who actually caught hold of this syndicate by seizing a car which was carrying these injections which were worth over 56 lakh rupees, and these injections were being seized from Supermart 1 in DLF Phase 4 at around 7:25 in the evening on 18th April, and this entire exercise continued till early hours of 19th April. Now, 2 people have been allegedly also arrested. Mujammil Khan, who claimed to be a medical representative, and Avi Sharma, to whom this consignment was getting delivered. But when he was asked by the officers to show a proper sales license, he could not produce so, and thus these 2 are allegedly now under arrest under various provisions of the Drugs and Cosmetics Act. Now, both Avi Sharma and Mujammil are being they are being arrested under the charges that are related to spurious drugs and sales without license. Also, investigators are now probing the wider network, if at all exists in Gurugram or nearby areas. Also, they say that these drugs that have been seized have a lot of discrepancies. They were not stored under the proper medical conditions, that is, but in cold conditions. Also, these drugs were found to be having several discrepancies on the labels, including font mismatch, punctuation marks, etc., which clearly shows that these were spurious drugs. Further investigations are underway. Let's see whether this is a larger syndicate or just a small one working. Back to you.
Right, thank you, Timsy, for that. Meanwhile, Eli Lilly has responded to the fake drug racket in Gurugram, saying that the company takes patient safety extremely seriously and welcomes regulatory authorities' action against illicit medicines. The pharma giant added that it will continue to work with authorities to protect patients from the risk of counterfeit products. Now, campaigning in West Bengal and Tamil Nadu has hit fever pitch with less than 72 hours to go for voting. The fate of 27 lakh voters in West Bengal hangs in the balance. Sante Gora brings us all the details.
The first phase of voting in West Bengal will take place in 72 hours, and the fate of lakhs of voters whose applications are pending at appellate tribunals is still up in the air. Last week, the Supreme Court ordered that voters whose appeals are allowed by the tribunals by 21st and 27th April will be allowed to vote in these elections. Around 34 lakh applications are currently pending at tribunals. Advocate Devdatta Kamath informed the court on Monday that tribunals are accepting only online applications, leaving many other voters without representation. The Supreme Court has sought a report from the Kolkata High Court, but the next hearing is on 24th April, but the voting for the first phase is on 23rd April. So for now, the fate of these voters remains uncertain. Narendra Modi, in back-to-back rallies on Sunday, attacked the Trinamool Congress for not supporting the Women's Reservation Bill. The bill, however, was passed in 2023. The special parliament session was called for a constitutional amendment that linked the implementation of the Women's Reservation Bill to the delimitation exercise using the 2011 census instead of the ongoing census, which is what the 2023 bill had proposed. Despite this, the Prime Minister accused TMC of being anti-women and called the party Ma Virodhi. Mamata Banerjee, in her rebuttal, said that TMC's women representation in the Lok Sabha is 37% and in the Rajya Sabha is 46%. She also alleged that the Bharatiya Janata Party has poor women's representation and tends to allot tickets to women in seats with low winning probability. Moving on, campaigning in Tamil Nadu and West Bengal is at its peak. In an unusual development, Andhra Pradesh CM Chandrababu Naidu will campaign in Tamil Nadu for the NDA today and on Tuesday, focusing on Telugu voters. Rahul Gandhi has also begun campaigning in Tamil Nadu amid a reported rift between Congress and the DMK. Mamata Banerjee continues her campaign relentlessly in West Bengal. And Union Defence Minister Rajnath Singh, BJP President Nitin Nabin and CM Yogi Adityanath are also addressing rallies to win over voters in Bengal. As campaigning peaks, high-profile transfers continue. Tamil Nadu's IG Intelligence is the latest high-profile transfer, joining the list of officials, including the Chief Secretary and Home Secretary of the state. In West Bengal, action in the alleged money laundering case involving IPAC continues. The director of IPAC has been summoned by the ED for questioning on Monday, and Mamata Banerjee has said that IPAC employees will be hired by TMC if they are forced out.
All right, thank you, Santhe, for that update on elections. Let's also talk about the other development that we are tracking before we wrap. The Reserve Bank of India has rolled back some stringent forex measures announced on the 1st of April. RBI had disallowed corporates from rebooking cancelled contracts. That has now been rolled back. Banks were also not allowed to offer overseas hedges to corporates. That has also been rolled back. So this is the big development that we are tracking. Anindya Banerjee of Kotak Securities joins us now. Mr. Banerjee, thank you for making time. Is this a significant rollback of the RBI's 1st April circular?
Very good evening, and thank you for having me. It's actually not a rollback. First of all, I would like to clarify. See, the RBI has $100 million NOP limit for each bank state. It's just that RBI had a second condition. It says that you cannot even enter into a trade with your related party entities with the offsetting trade, which was a typical way the arbitrage used to happen onshore and offshore. RBI now has clarified if you have that on your books, you have the option to either roll it to maturity or cancel and exit. And secondly, if it's a genuine back-to-back hedge, then only it can be continued. So that is the clarification I think the RBI has done. It has not been a rollback.
That's an important detail there. And as a follow-up, I want to understand from you, so 10th of April was the deadline to square off excess positions greater than $100 million. Should we assume, given the circular today, that not all banks would have squared off their positions?
See, this $100 million NOP limit was the first condition. So they had to comply with that. Within the 100 million, if they have any positions, it had to meet the second condition, which the second circular which came out after a couple of days. So now the RBI has given some exemption on the second condition. The 100 million limit stays as it is. There is no change in that. They are not saying anything whether if you are still holding what to do with it. They're simply saying as far as related party transactions are concerned, this is a clarification.
All right. One final question. The door for currency speculators remains firmly shut, right? There's no change in mind as far as that fundamental point goes?
Absolutely right. The RBI's overarching theme is clear that they are snuffing out all forms of speculation from the USD market.
All right, great. Mr. Anindya Banerjee, thank you so much for all these clarifications and for joining us on CNBC TV 18. With that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV 18.
Hello and welcome to CNBC TV 18. Have markets turned the corner is the big question. The Iran-US war and the spike in energy costs has been this latest in a series of events which have really taken a bite out of market returns. Before, of course, late February when the war broke out, it was the AI trade in the US which was puncturing and putting question marks on terminal value for a lot of businesses. In 2025, for a long time, it was Trump tariffs, which really dangled a sword over market returns. So that's the question that everybody is asking. Look at the price action over the last few days, and perhaps the answer is in the affirmative that yes, maybe the worst is in the price. We put that question to one of the most veteran fund managers in India, Prashant Jain. He's founder and chief investment officer at 3P Investment Managers. And I began this conversation by asking him exactly that. Has the market turned the corner? Is he now constructive and confident that it's going to be a lot better from here on? Listen in.
I think I'm quite optimistic about the resilience of India, about the ability of India's economy to handle the spike in crude prices, some disruptions. India is far better positioned this time around because our current account deficits are structurally lower, and the impact on the economy there should be commensurately moderate. And even our capital markets, while foreigners are selling, there is no supply or very little supply from the primary markets. And the domestic flows, I think, should not just hold, but they should grow over time. And therefore, the ability of markets to absorb this FII selling is quite good. And over time, I think investments made around this time should yield above average returns.
Yeah. You know, Prashant, you must have seen, right, a lot of sort of hullabaloo on social media and elsewhere around the question of why foreign investors are selling. And recently, right? And Akash Prakash wrote a piece recently, and he outlined a list which is, global. Some of the global Asian peers are more attractive. Here in India, earnings growth has slowed down. None of the it's not new. Nothing is new. ROEs, he mentioned, perhaps have come off as well. You know, in your opinion, have some things changed in terms of things which were always structurally positive for India, which is higher rates of growth and better earnings profile, return ratios? Has that suffered a little bit in any way whatsoever, Prashant?
On the contrary, I mean, India's growth is accelerating, right? You are growing at 7%, back-to-back second or third year. So when have we done that in the past? India's bank balance sheets, corporate balance sheets are in the pink of health. Your current account deficit is near 1%. Your fiscal deficit is quite reasonable. I think India is quite well positioned. The fact remains that 2 years back, India's premium over EMs had gone up to much above average levels. And also, I think the earnings were overestimated. And I mean, we have been of the view that for last 2 years, that earnings growth will converge with the nominal GDP growth of the country, maybe slightly higher than that. Because in most sectors, we do not see any margins improving. And from the COVID lows, the margins normalized, they improved. And therefore, it was wrong to extrapolate that earnings growth. I think there could have been some earnings disappointments, but that's more to do with probably slightly aggressive estimates. The selling of last year, I think, also had the shift towards AI, the popularity of AI. I think clearly that was not in favor of India because India does not have, or it lacks, meaningful AI plays. In fact, IT is looked upon by some, I don't agree with that, as an anti-AI play. So, and finally, last month, I think this spike in oil, the fear of even higher oil prices, and the fear of sharply lower currency, which would hurt foreign investors a lot more. I think that has led to this last round of selling. So we have had 3 back-to-back, one slightly longer term, one last year and one this. I think whenever the situation stabilizes, the foreign outflows should stop. I must also add that it matters little now at how foreign flows are for the markets, because the bigger source of supply in these markets was the primary markets. Investors have lost money in 2 out of 3 issuances. So I think those excesses are behind us. That supply should be sharply lower, and therefore the ability of markets to absorb any FII selling is quite strong. See, foreign selling can delay returns, but I don't think it can deny you the returns. The returns will eventually come.
So you're saying 3 things. One was earnings being systematically overestimated, basically projected that the COVID boom and coming. I mean, that basically will go on forever, which was wrong. AI related. Lack of AI plays perhaps attributed to some of the selling, and this oil shock, right? Is this one. And you said, well, although foreign flows in that sense for longer term returns matters little, you said that will also change once the situation stabilizes. Prashant, you for the last, I think, 15, 20 years, we've spoken, always mentioned oil on the top of the list as worries for India, as one of the most important macro factors for India and the markets. It's around $90, $95. I mean, how do you assess that situation? If it stays here, as many say, it may.
I think India's vulnerability to oil has considerably moderated, because oil exports as percentage of GDP have fallen from 5% maybe 10 years back to about 3%. And to that extent, you have a lot more room to absorb higher oil prices. India's current account deficit also has fallen from between 2 to 3% in the past to around 1%. So your ability to absorb higher oil prices is therefore much higher. See, please remember that 10 years back, India used to fund its current account deficit at times from portfolio flows. Today, you have lost more than $10 billion in a single month, $40 billion in maybe 16 or 18 months, and still your economy is growing. Markets are holding up reasonably well. And the correction in the markets is, as much due to excessive valuations, as much as it is due to the excessive fundraising, and foreigners have also played a part. But the flow of local capital is much larger in size than the inflow or outflow potentially of foreign capital. It is true that foreigners still have a reasonable amount of stock of India, but on a flow basis, it is the local capital which is much larger and far more sustainable.
Prashant, hi, Rima here. So one of the guests we were speaking to earlier said that this is a themeless market, which basically means that we're going to have winners and losers in every sector. There is not going to be 1 or 2 sectors where everything does well, a rising tide lifting all boats kind of a scenario. Would you agree with that? And if you do believe that there are structural themes where one can bet on, which ones would they be?
Rima, good morning. See, my view is that what we have observed in this market over the last 5 years, that excesses at both the ends have moderated. So you go back 5 years or 4 years, some consumer names were trading at 60, 70, 80, 100 P multiples. They have since moderated to maybe between mostly around 40 multiples. Similarly, on the other hand, there were stocks in few banks, utilities, etc., which were trading at maybe 4, 5, 3, 7 P multiples, and they have defense names for around 5, 8, 10 multiples. They have re-rated upwards to anywhere between 10, 12 for banking to maybe 20, 30, 40 for the other names. So I think I would agree with that comment in a way that the excessive valuations are not there in this market. And most sectors are trading around longer term average multiples. So it would be tougher to call out specific sectors in this market. And therefore, we have been writing in our commentaries also that a more diversified approach to investing makes more sense in this market than a sharply focused approach on few sectors.
Okay, hi Prashant, good morning and good to see you in. This is Nigel on this side. You're sounding reasonably optimistic post the correction. But the space that got hit harder actually was the broader markets, the small and the mid caps. We talk about the index not giving any returns. People are sitting on portfolios where they're down 15, 20, 25% as well, depending on, which stocks you bought. At current juncture, what would your preference be between the large as well as the small caps? Because yes, they've seen a sharp correction. The froth has cleared out a little bit, but still valuation-wise, not very cheap.
So Nigel, I would agree with that view. And we have for almost 2 years been suggesting that small mid caps have run much ahead of fundamentals. It is, in my opinion, an incorrect notion to say that as a category, small mid caps grow faster in businesses than the large caps. I don't think data suggests that. Even today, if you look at the share of small and mid caps in terms of profits of corporate India, it's about 25%. But the market cap share is much higher. So I would not be optimistic on this category. Of course, they have fallen so much. 1 in 3 stocks is down more than 50%, I think, from the peaks. So there can be a sharp bounce. But as a category, I would feel that large cap should outperform. At the same time, since the stock has seen sharp corrections and the number of companies in this space is very large, I think it should be possible for someone to pick 1 in 10, 1 in 20 stocks. I think it could be a stock picker's market, but not across the board. One will have to be extremely selective and careful.
Got it. All right, Prashant, so you're saying large over small caps, but within the broader markets, you'll still find select winners. So you need to keep an eye out for that. Prashant, you've spoken about the fuel price inflation and how India is reasonably in a better space, say, in comparison to, say, 15, 20 years ago or so, because of the expansion of the base of the GDP. But what about the food inflation worry? There is talk that maybe, in fact, after many, many years, this monsoon may not be that good. Is the market ignoring that risk?
See, there is a difference between inflation in food and energy and inflation in other categories. Food and energy inflation is not due to excessive demand conditions. These are, either because of natural factors or global commodity price changes. So I think the RBI will not set the monetary policy based on food or energy inflation. RBI worries about inflation when it is more demand-led or when demand is more than supply. So I would focus on the core inflation, which continues to remain extremely benign. It's ruling around 3%. So I think it's a very healthy state of inflation in India.
Prashant, talking about, and just to complete that earlier point about mid and small caps, right? I guess it's a bit more, if I can use the word, for the lack of a better one, more exciting, and people, mid cap, which is the small cap, which can become the mid cap. Mid cap is a much more tougher area as well to operate in. So you're just to summarize your view, as a category, you're saying perhaps large caps have got more room to grow earnings, and mid and small caps, while prices have fallen, there may be opportunities here and there, but as a category, you're more constructive on large caps from here. Prashant, is that correct?
I think, Prashant, that is correct. And the gap that is opened up between valuations in large and small mid caps as a category, in my opinion, it is not sustainable. And that gap should be bridged over time. Yes.
Okay. Got that. Just to address another point, Prashant, which is supply from local investors, right? And something that you've addressed earlier as well. And you kind of sort of, went back and gave examples from the 90s and early 2000s and said how this is not going to last. And we're already seeing that it's not working out all that well. I mean, on the private side, huge amounts of investments have happened. A bit of a chase, a FOMO feeling, etc. Generally, are those excesses also coming to an end? Have they already come to an end? What is your sense?
No, Prashant, you're referring to the unlisted markets.
Unlisted, and of course, I mean, you throw in some of the higher priced IPOs, etc. as well. Prashant.
I think that's fairly clear. See, 2 out of 3 shoe answers in the last couple of quarters are underwater. People have lost a lot of money. this is not the first time. I mean, we saw this in early 90s, we saw that in 2000, we saw it in 2007, and we saw it yet again. I don't think this is surprising. It happens every now and then. I think for now, the markets would be far more cautious on pricing and on what they are buying. So I think primary markets are essential for an economy to grow. You need to give capital to entrepreneurs. And it also keeps secondary market prices in check. But if that capital is raised at sensible valuations, it creates a win-win. Otherwise, it gets disrupted. I think it will normalize over time, but I don't see those excessive times coming back anytime soon.
We'll slip into a quick commercial break here, but don't go anywhere. Up next, we'll get you excerpts of our other big conversation that we had earlier today. That is Ramesh Damani, member of the Bombay Stock Exchange, as he weighs in on the market and the outlook going forward. Welcome back. You're watching CNBC TV 18, and as promised in our series of market conversations, here is Ramesh Damani, another veteran who's seen many cycles out there, who identifies themes really which work and which are new and emerging as well. He's, of course, member at the Bombay Stock Exchange. We began by asking him where he thought the Indian market was positioned at and whether the worst was behind us. This is what he told us.
I think the worst years of the war are behind us now, so that is a good sign. I think the markets will tend to favor some of the things that seem to be blossoming this morning, which is perhaps defense, localized supply chain, infrastructure building. So I think we can look forward to a period of gains in the next quarter or 6 months, as opposed to the very, very sharp volatility that we experienced for the last 3 months there.
And those are the three areas you've sort of been positive for a while. I think our last conversation, you defense on your mind, you had some of the mineral resources, right? And some of the infrastructure companies. These are the three areas, themes that you still like, Mr. Damani?
Yeah, that's pretty much summarized my view. I think critical minerals, plus I think the importance of localizing supply chain, whether it's, basic raw materials. I think no country can now afford to rely on a supply chain extending, say, to the Middle East, or extending to Japan, extending to China. They need to localize and develop the raw materials themselves. So other than critical minerals, also the basic raw materials, copper, aluminum, things like that. The local producers will play a more important role, I think.
These are themes which kind of emerged because of the changing world order we've seen, and we've seen it turn before our eyes. What the Iran war has shown us, of course, is energy dependence as well. You think that perhaps there aren't that many themes here? I've heard ONGC mentioned by some investors. over the last couple of the stocks pricing oil is about $60, $65. I don't know. Is that something that you've thought about as well as a theme?
I think what the overriding lesson I've learned from the Iranian conflict is, while you're right, energy independence is, quite important, but that has been known for the last, since the OPEC crisis of 73. We've always emphasized that India has always been, very prone to shocks from what happens in West Asia. And I think we've worked a good job towards reducing our dependence on fossil fuels. But I think strikes me as most important, Prashant, is the need for asymmetrical warfare. A regional power like Iran has basically held the United States to quagmire by using cheap $4,000, $5,000, $20,000 Shahed drones, where they risk depleting their very costly and very expensive cruise missiles, patriotic missiles in America. So I think the nature of warfare has changed completely. I think planners in Delhi or planners in Washington are taking note of this fact. And I think the Indian Army budget that might be skewed towards a lot of heavy armaments might have to be rethought in terms of a lighter, more asymmetrical warfare. Because I think increasingly precision missiles and guided drones will be taken over by across the world. So it will no longer be a matter of who has the best gold-plated military, but who has more emphasis on, lighter, flexible, asymmetrical warfare. So I think the nature of warfare has changed. I think it behooves us to pay attention to those matters.
Yeah. And Mr. Damani, if you would allow me, you've been bullish on names like, BEL has been a long-time favorite, and you own a bunch of others, Garden Reach, for example, and have you added anything new in that space to kind of bet on what you call asymmetrical warfare, cheaper drones and those things?
Yeah, I have. I think sometimes in the unlisted space, we bet on drone manufacturing companies. There are some companies now in the private sector that are more valuable than, say, companies in the public sector. I have exposure to both. I have sold some of the public sector, booked some profits, I would say, in that. But increasingly, I think it's a theme that will continue to propel the market higher for the next few years. I think whether it's in the missile area, whether it's in the drone area, whether it's in the laser fighting area. So in the private space and in the unlisted space, we have made significant bets in these companies.
Significant bets in these companies. And just to sort of wrap up your earlier view, I mean, you're always invested, right? I mean, you're, of course, looking to invest as well, but largely invested both on the private and the public side as well. As you look ahead, Mr. Damani, this is a more steadier kind of pace we would be on, trajectory we would be on, or you think it'll be very zigzag? You've of course, you warned us it's going to be pretty volatile when President Trump took over, and it's kind of sort of played out. You think it continues to be a tricky place in that sense, or steadier from here? What's your sense?
I think, except for the last 4 years, we had a pretty smooth ride post-COVID. The index went up without really too much trouble. Markets have been, the hallmark of all markets I know have been volatility. And I think they will continue. I mean, it will be great to see the index double without too much churn, but that's very, very unlikely to happen. But I think most of us who've been investing in India for the last 30, 40 years very firmly believe is that you have to ride out the volatility. You have to make that your friend, buy on the dips, hold for the long term. I think that tends to have better outcomes and more richer money, because I think people who remain invested and not been, say, blown out by COVID or blown out by the Gulf War, I've seen a lot of the returns evaporate where the market kind of turns around sometimes on a dime. So the best strategy I can tell for young Indians is to remain invested, remain doing their SIP, remaining doing their direct investing in Indian markets. I think we're in a good place, good time. And the volatility that you went through was blood-churning. I'm not denying that. But we have learned over many 30, 40 years that that's just part of the beast.
With that, it's a wrap on this special program, Investing in Times of War. Stay tuned. More coming up as far as news and coverage only on CNBC TV 18.
Hello and welcome to our special broadcast on West Asia tensions. I am Ashmit Kumar. Now, oil prices continue to swing after the US seized an Iran-flagged cargo ship in the Arabian Sea, saying that the vessel was attempting to evade a naval blockade. Now, President Donald Trump has claimed that the US forces blew a hole in the engine room before boarding the vessel Tuska. Now, while Iran condemned the move as an act of piracy in violation of international law amid escalating tensions, Trump has maintained that negotiations are still expected. But Iran's foreign ministry spokesperson has said that there are no plans for a new round of talks with the US following the vessel incident. Meanwhile, confusion persists over the US delegation traveling to Pakistan. Initial reports suggested that J.D. Vance would lead the team, which Trump denied, only for the White House to later confirm his role. The situation has grown more complex since the vessel incident, and Iran says that no to talks at the moment. The timing, however, is critical as the ceasefire is set to lapse on Wednesday, and Trump has warned of severe consequences if no agreement is reached. Over the weekend, 2 Indian-flagged ships near the Strait of Hormuz were forced to turn back after firing from the Iranian side, prompting India's foreign secretary to summon Iran's ambassador and express deep concern. No casualties were reported. Meanwhile, tensions between Israel and Hezbollah continue to escalate, with Hezbollah claiming strikes on Israel and Israel continuing operations north of the Yellow Line it has established in southern Lebanon. This despite the 10-day ceasefire. Well, to help us understand some of the complexities of this situation and what the road ahead perhaps may look like, well, we're now joined by geosecurity expert Ms. Anju Gupta and energy consultant Ali Al-Riyami and former ambassador Mr. KP Fabian. Gentlemen, thank you so much for joining us, as well as Ms. Gupta. Thank you to all of our panelists. Mr. Fabian, let me come to you first. The situation that we have on our hands, again, double speak here from the US, first saying that J.D. Vance may not lead, then the White House confirming that J.D. Vance will be leading. A delegation appears to be traveling from Washington to Islamabad, but it will all be for naught because Tehran, at least so far, is saying we're not sending one, or at least not confirming that they will be partaking in this dialogue.
Thank you for the question. Good afternoon. Let us put all this into some context. Let's go back to Thursday. Today is Monday. 11 p.m. Indian Standard Time. Lebanon's Iran ceasefire is announced. Friday, Iranian foreign minister announces that Hormuz is open. President Trump welcomes it, but then he announces that the blockade will continue. That is, there will be blockade against Iran only. Other countries can send their ships, but not Iran. Well, then we come to Saturday. IRGC this time responds, saying that Hormuz, well, it's open, but you have to take permission, you have to pay the fee, and you have to obey the regulations. And what does the United States do? Well, it captures a ship that was returning from China. So the best thing we can say about it is President Trump, on the one hand, seeks negotiations, but there again we have to be careful.
Let me take that across to Ms. Gupta. Ms. Gupta, the situation that we have on our hands, Mr. Fabian saying that they have to be
he makes the situation more difficult.
So not to make the situation more difficult, Mr. Fabian sharing with us there. But again, the way things have piled up over the weekend, especially after this latest incident of a capture of an Iranian vessel by US troops, we've seen dramatic visuals on our television screens. There's a helicopter traveling towards that Iranian ship. We've seen Marines rappel down that helicopter, enter into the compound, enter into that vessel, and then subsequent conduct operations there. Dramatic visuals, embarrassing for Tehran. Does this now change the dynamic? Iran, we're hearing from unofficial sources, is like contemplating some form of retaliation to a takeover of their vessel.
Good evening, Ashmit, and good evening to all the co-panelists. Thanks for having me on the show. Yes, the dynamic, I think, has changed overnight, but which was kind of expected. It always changes between Friday and Monday. If you look at last couple of weekends, that's how it was happening. And the change has already come about because one, Iran has refused to start the second round of negotiations, saying that this has no meaning because US continues with their blockade while we lifted our blockade in anticipation of second round of negotiation. So that's one. Secondly, Iran has retaliated in some measure, I believe. That's what they're saying, with drone attacks on US vessels close to the Gulf of Oman. And then they have also threatened that we will go ahead with it. But most importantly, Iran has indicated that I think in a way the ceasefire has ended, which again has 2 or 3 more days to go. So that changes the dynamics, which means now the Iran and Israel can start exchanging drones. And that would also have an effect on the ceasefire, which is much more fragile between Lebanon and Israel. So we might see resurgence of violence, all of a sudden.
In the midst of possible conversations and the US sending a delegation to Islamabad, do you believe Tehran will contemplate some form of strike against one of the military assets of the US in the region? They have deployed a large number of their naval vessels in the region. There are US air bases as well. Do you contemplate that there may be that Tehran, given the show of public support that they've received in the last couple of days, will be compelled to do some form of retaliatory measure against this takeover of their vessel?
Definitely. And if you look at what's happening in the Middle East right now, one, that Iran has already said that ceasefire is in a way ended. US has issued a very strong advisory to US citizens across GCC and also in Iraq and Jordan, asking them to leave those countries, also giving them the routes from which they can actually take way back home or to safer places. The voices within GCC, these are not non-state voices within GCC, have been heard over the last 24 hours, asking for a rethink vis-a-vis some kind of a cooperation with the US, which could be their desperate attempt to get US to go back from the brink so as to not become the target of the second round of Iranian attacks if US and Iran break, if the ceasefire ends between the two.
Speaking of retaliation, Mr. Al-Riyami, if I can have your perspective in on this subject. Again, Iran saying that they will retaliate. In fact, we've heard, again, it's all speculation at this point, but from what we're picking up from publicly available sources, we're hearing that Iran is saying that they could possibly look at a possible attack on blocking the Red Sea traffic via the Bab al-Mandeb, which would stop all traffic, not just from Hormuz, but also from Red Sea. They've also talked about how the Yanbu pipeline, which is meant to bypass the Strait of Hormuz, could also be a fair target. We've also heard how perhaps the Fujairah facility, which again was intended for bypassing the Strait of Hormuz, could also again be fair target. Is there now a growing apprehension that Iran may perhaps be under pressure for some retaliatory attack to the developments that we've seen in the last 48 hours?
Thank you for having me. Yes, I think Iran have proven every time that they have the capability of retaliation and also targeting some facilities in the GCC, especially in Abu Dhabi and Qatar and Al Fujairah and could be to Yanbu. But you're absolutely right. Iran, they have already threatened to allow the Al-Houthi in Yemen to close Bab al-Mandab. Al-Houthi, we have experience with Al-Houthi. They have managed to do so last, a few months ago. and they have shown that they can also be difficult to negotiate and also to allow ships to pass through Bab el Mandab. So that could be another consequences of this war. I don't think that Iran will need to target the so-called east-west line of Saudi Arabia, because once you close the Bab el-Mandab, then this Yanbu terminal will be useless, because there will not be able to transfer the crude to the Asian market. The only way it could go is through Suez Canal and to Europe and to America. So I think what we are hoping not to happen in the future is that to escalate the situation and to start the war again like it was 2 weeks ago. So the targets this time will be massive from both sides. The Americans also, they have already threatened Iran that they are going to destroy all the infrastructure, the oil infrastructure, the electricity, and so on and so on. And also the Iranians say that either we all allowed to produce oil and export oil, or all of us will be in the same
Mr. Al-Riyami, let me just get in on the economic cost of this. I just want to get a little perspective. The Strait of Hormuz controls about 20% of the world's oil supply. The Red Sea route via Bab al-Mandeb was seen as the alternative, as perhaps to the Strait of Hormuz. If both the straits are blocked, Bab al-Mandeb as well as the Strait of Hormuz, what is the kind of impact that we're looking at in terms of energy supply?
Well, I think what we know that the Saudi Arabia using Bab el-Mandeb now to export about 4 to 5 million barrels per day. So to stop that moving east, east to Asia, then it will be a big consequences on oil supply, and that will definitely increase the prices up to 110 or 120, and we've seen that happens before. So it is not something that we could stop. It is going to happen if the Iranians are really being affected by this blockade, the American blockade, and it won't take time to affect the Iranian economy itself. So I think it is an extra blockade, which not necessarily going to hit Iran only, but the logistics of applying this blockade, it is going to affect all the GCC countries, including Oman, because what will happen is that you have to check every single ship passing through Omani seas. You don't know which ship has the Iranians goods and materials or oil. So you need to do a lot of logistics in the area to know exactly which ones are Irani ships and what Irani goods are on those ships. So it is going to be really a nightmare for Americans to control that. And it is not really like something that 35 or miles or 40. It is hard, it is bigger and more wider, and it is going to be difficult. And that's why we have seen already some ships from Iran manage to get out or to get in, because to control that area, you need a lot of logistics, a lot of ships to allow to do so.
Sure, Mr. Al-Riyami. So perhaps maybe not as easy to close Bab al-Mandeb, but nonetheless, that is what Iran is threatening. That is what we've heard from the Houthis as well out of Yemen. I'd request all of our panelists to stay on with us. We're slipping into a very short break. We'll continue this conversation on the other side. Welcome back. We continue to remain with the geosecurity expert, Ms. Anju Gupta. Also with us, energy consultant, Mr. Ali Al-Riyami, and former ambassador, Mr. KP Fabian. Mr. Fabian, coming to you first. Again, I just want to take off from where we began this entire conversation. Again, Donald Trump, when he talked about a delegation visiting Islamabad, he didn't mention J.D. Vance. He mentioned Witkoff, he mentioned Kushner, not J.D. Vance. It later required a clarification and explanation from the White House press secretary to clarify that J.D. Vance will also be a part of those negotiations. I just want to get your thoughts on that. Are there cracks within the U.S. leadership itself on the position to be taken? Bear in mind that J.D. Vance was there for round one, but he had to make as many as 12 calls to Donald Trump in the midst of those negotiations.
Well, I do not know, but I doubt whether there is any crack, because we know that J.D. Vance had advised President Trump not to start all this. But at the same time, J.D. Vance has his own presidential ambitions, so he will not break with President Trump, because that can put an end to his political ambitions. But what we hear from Washington is that, you see, Witkoff and Jared Kushner have left. As regards J.D. Vance's leaving, well, the White House will confirm later. Now, but a more basic question is, if President Trump believes that by having an American delegation in situ, in place, in Islamabad, he can coerce Iran into sending their delegation, well, I do not know, but President Trump may be getting it wrong. Iran still has two options. Either it may not send any delegation, or it may send a delegation and make it clear that talks will begin only after certain preconditions are met. But let me add one more. What is the time now? It is going to be 5:30 here, so it is going to be 8 o'clock Washington. President Trump is waking up. He will start his tweets. So we have to wait. Now, he has the option to stop the blockade, and that will make it possible for Iranian delegation to come to Islamabad. And President Trump is capable of taking such action. But one more question. You see, in this matter, two individuals matter. That is President Trump and Prime Minister Netanyahu. President Trump, to an extent, can assert himself, but perhaps beyond a point, he does not want to, or maybe he's not able to assert against Prime Minister Netanyahu. So I do not know whether I said it, but let me repeat. President Trump is desperate to have a settlement, and Netanyahu is desperate not to have it. And Iran is keen, but not desperate.
That's an interesting perspective that you give to us, how Donald Trump perhaps may be the most desperate of all the three parties to seek some form of resolution. His actions, however, seem to suggest anything but, especially the blockade, and then doubling down on the blockade by even posting about the takeover of the Iranian vessel. Ms. Gupta, let me come to you again. Like what Ambassador Mr. Fabian was suggesting, is this perhaps a strategy being deployed by Washington to send a delegation with Kushner, with Witkoff, to perhaps pressure Tehran into entering these negotiations, into sending a delegation? And will Iran oblige?
There is an input which was floating, which we must keep in mind. And this was said by one of the very important part of the delegation. I do not know whether he was part of the delegation that, that talked to the American side, but he was part of the delegation in Islamabad. He said it on record that we had apprehensions, or they received inputs that they could be targeted while coming to Pakistan. So it appeared to me that Iran will probably not now accept, sending their at least high-level delegation to Islamabad or to any other place, not under these circumstances. That is something that I think we should be mindful of. And secondly, I think if we look at the way something that the ambassador was just referring to about the morning tweet, if we look at the trajectory of the threat and reconciliation, talk about the threat and the reconciliation bombing and talking I think if we look at that, it really fits into that as to why the US delegation is coming to Islamabad, because it weaves into that story that, yes, we are threatening Iran and we are giving them chance to strike a deal. If they don't strike a deal, we are not to be blamed. That is one aspect. Secondly, I would like to say it upfront because you're also the business channel. I think that the messages which are coming from the US are having a direct impact on the market, on oil prices, energy markets, on stocks. And you can see a direct correlation. So when there is a tweet about, a message about, upping the ante, the markets crash. The oil prices go up. And when there is a talk about, when there is a talk about the talks, then it goes the other way around. So that is the correlation we are also seeing. Plus, I think it's the strategy that US has taken to talk in two voices. Stick and carrot, you would like to call it, but I think that's a simplification. So my sense is that the delegation, if it is on the way, will arrive in Islamabad, and there may be some indirect exchanges, but I do not think that Iran would rely on Pakistan to convey what they want to convey to the US, even indirectly at this stage.
Speaking of Pakistan, the Ministry of Interior in Pakistan is already putting out a message saying that preparations for the second phase of talks in Islamabad have been completed. Foolproof security arrangements have been made for foreign delegations. So again, the impression that is sought to be given is that everything is on track for a negotiation, but for one of the two negotiating sides. No clarity from Tehran whether or not this will proceed. But assuming it does, assuming there is some degree of conversation towards reconciliation, towards resolution, Mr. Al-Riyami, let me get your thought on one pressing issue. The Strait of Hormuz, the opening up of the Strait of Hormuz has been one key issue. As far as tankers leaving the ports of the Gulf region, is there some form of consensus? Is there an agreement that there is a willingness to pay that $2 million fee that Tehran appears to be seeking? Is this something that at least the Gulf states are on board with?
No, I think most of the Gulf states, they are not really ready to accept the idea of paying fees by moving or passing through the Strait of Hormuz. And I think what will happen if that is being agreed is that not to pay the fees for tanks to be allowed to pass through, but there is payments should be for the facilities that these two countries, Iran and Oman, that provide while the ship moves around, and also to keep the Strait of Hormuz open. So it is not to allow the ships to go through, but it is for the services that normally these two countries provide to Strait of Hormuz. That could be discussed. That
Mr. Al-Riyami, if I can just interject. If I may just interject, is that more semantics at this stage? You may call it by a different name, but effectively it will be payment flowing towards Iran, which wasn't there before this conflict began.
Indeed. I mean, this is something going to be something new, but it can be agreed on because it is legally you can do that. To allow the ships to pass, that is not acceptable because it's a free waters and also is international waters. But for Oman and also for Iran to be able to provide, maritime services, any other services that required for the Strait of Hormuz to be safe place.
The appropriate legal framework.
Yes, that is
subject to the appropriate legal framework. There is an agreement that perhaps some form of fee may need to be paid to Tehran. Another pressing issue, Mr. Fabian, if I can get you, has been, of course, what to do with the enriched uranium. That's about 400 kgs that we're looking at. Do you see at all any willingness in Tehran to let go of that uranium or to even agree to the 20-year suspension of enrichment that Donald Trump has been asking for? Do you see that as a red line for Iran? Do you see some flexibility that Tehran may have, or will Donald Trump perhaps have to blink first?
Well, there is some flexibility that Iran might agree that the enriched uranium might go to, say, Russia. But there is no question of Iran's agreeing to the uranium, enriched uranium, going to the United States.
And the question, another key issue, Mr. Fabian, had been the suspension of enrichment. Iran was sticking to 5 years. Donald Trump said 20 years. Do you see a middle ground being reached between the two sides at all? Is there, again, flexibility that Iran may have, or perhaps Donald Trump may have to concede, may have to show?
February at the Omani embassy in Geneva. According to the Omani foreign minister, who was the mediator, who was present, according to his address to the Face the Nation in the United States, Iran had agreed to 4 things. 1, zero enrichment. 2, zero stockpiling. 3, downblending of the enriched uranium. 4, never ever to seek a nuclear weapon. Now, if Trump could have accepted it, he could have revoked the sanctions, and his family business could have done roaring business with sanction-free Iran. Now, my question to you is, why didn't he do that? He could have declared himself as a master of the deal, an infinitely better deal than Obama's. Well, I have an explanation. He was under the spell of Netanyahu, who didn't permit him. So now, I don't think he can revive that, but Iran might some concessions. Don't forget, Iranians play chess very well. We all know that checkmate comes from Shama.
Right, Mr. Fabian, that's an interesting insight we'd like to end the show on. I'd like to thank all of our panelists, Ms. Gupta, Mr. Al-Riyami, Mr. Fabian, for joining us. Again, what many analysts have been saying is that given that how the JCPOA, the Joint Comprehensive Plan of Action, which was torn up by Donald Trump himself, Donald Trump will now have to aim for something more, because anything less than the JCPOA will mean that that will be seen, construed as a defeat back home, and especially with the midterm around the elections around the corner. That is a strong, strong cue for Donald Trump for pushing harder. But can he afford to? Well, that's the question that many of us have been asking. With that, it's a wrap on this show on West Asia tensions. More news and updates will continue right here.
Been asked 122 times in my life by a bureaucrat, who allowed you to do this? You know, the notion that innovation will require permission is holding India back. Socialism is capitalism without competition and bankruptcy. Basically, if you remove bankruptcy and you remove competition, socialism and capitalism are the same thing, right? See, IPL has made cricket more meritocratic in ways that the Ranji Trophy never did. I think private equity has made Indian business more meritocratic in ways that nationalized banks never did. In 1970, out of the 10 top pharma companies in India, there was only one Indian company. Today, there's only one multinational in the top 10, right? And that is because Indian pharma companies became meritocratic, right? Indian pharma exists because entrepreneurs danced with the government. I mean, the most embarrassing number about India 35 years after 1991 is that 45% of our labor force still works on farms.
What's the bravest thing you've done so far?
Oh, it's having children, getting married. All of them are going to be non-professional.
India's manufacturing story is one that evokes sharp reactions. It's a story of triumphs, but equally a story of missteps and failed ambitions. While we lament about regulatory cholesterol, stymieing dreams and scale, we also must credit the stroke of pen action that birthed many industries in independent India. The Indian pharma sector is one such example. From zero domestic pharma companies 4 decades ago to now being recognized as the pharmacy of the world. India's pharma sector has quietly but undeniably changed the rules of the game, making drugs affordable and accessible to millions of people around the world. In telling the story of Lupin, one of India's manufacturing miracles, Manish Sabharwal explains why Indian pharma took off, but more importantly also shines the light on the magic of entrepreneurship. How is that some can see a future that others can't? What drives them to push the boundaries of what is possible even when the odds are stacked against them? What gave the late Deshbandhu Gupta the courage to start up with a seed capital of 5,000 rupees courtesy his wife and create one of India's top 10 pharma companies that today commands a market cap of over 100,000 crore rupees with $1 billion in sales in the US market? Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. My guest today has spent his entrepreneurial journey on solving India's most fundamental challenge, not just creating jobs, but making them better. As a co-founder of Team Lease Services, he's helped shape one of India's largest human capital engines, connecting millions to employment across factories, offices, and campuses. From building India's apprenticeship ecosystem to influencing policy at the highest levels, his work sits at the intersection of labor, education, and reform. And now, in his book, Made in India, he makes a compelling case for why the country's future will be defined not by unicorns, but by the quality of its jobs, wages, workforce productivity. Blunt, data-driven, and unapologetically contrarian. Joining me today is Manish Sabharwal. Manish, it's great to have you join us on Young Turks Reloaded. Thanks very much for being here.
Thank you.
Let's address the issue of the Indian pharma story, which is what you've tried to talk about in your book. In telling the Lupin story, you've essentially told the story of the Indian pharma sector. And as I pointed out at the start, while we lament, and you have certainly lamented over the last several decades about regulatory cholesterol killing entrepreneurship, here was policy that actually provided the booster shot, the steroid almost, to create the Indian pharmaceutical industry and make it what it is today.
Well, this industry should not exist in India. I think the Indian pharma industry, our Indian pharma companies, and particularly DBG, defy the notion of destiny, right? Because no economist would predict that a country 128th in the world in per capita would be making 60% of the world's medicines, having more than 40% of the world's US FDA plants, and sell medicines in 200 countries. Now, where did that industry come from? It is really two governments on two opposite sides of the planet. The Indian government in 1970, which is 1970 Patents Act, which replaced product patents with process patents for 35 years only. It went away in 2005. And the 1984 Hatch-Waxman Act, which Ronald Reagan put in the US, where he said that, because before that, even when drugs went off patent, there was no pathway for companies to launch the generic version of those drugs. So absolutely, I think that regulatory cholesterol has held India back, but I must acknowledge that good policy can really create wonders. And the Indian pharma industry is also very different from its intellectual cousin, the software industry, because software exports 90% of their product. Its pharma industry sells 50% in India and 50% globally. So I think that companies like Lupin and Cipla are more important to India and the world than their revenues, because I don't think AIDS would have been eradicated in the world without Cipla, and TB would have been eradicated in the world without Lupin, right? Both of them are the world's largest producer of those medicines even today. And in particular, I hung it on DBG because, my father was in the police. I didn't have any money to start my company. I am a child of liberalization, private equity, venture capital was available when I started. I graduated the year liberalization started. But this pharma industry entrepreneurs, most of them grew up in the licensed Raj, which was hostile to entrepreneurship. There was no concept of venture capital. If you didn't have connections or you didn't have capital, you couldn't be an entrepreneur, right? My father, who was in the police, and my mother broke out when I said I wanted to be an entrepreneur because we said we don't have money. Only people with money can be entrepreneurs.
As did DBG's father when he said that he wanted to turn entrepreneur.
Yes, because entrepreneurs is a complex debate about whether entrepreneurs are born or made. And I'm not sure entrepreneurs are born. They have some good instincts, which all leaders have. So I think the industry should not exist. It exists because of the government, and the Indian pharma exists because entrepreneurs danced with the government rather than this stupid metaphor we have of tug of war between the government and entrepreneurs, right? Where one wins when the other loses. I think the Indian pharma industry shows that tug of war is a very dated metaphor for the relationship between business and government.
So in telling this story and the many lessons that you articulate in the book, how do we replicate the manufacturing miracle that we saw with the Indian pharma sector? How do we replicate that success across other sectors? And where do you feel most confident of being able to do that?
First of all, we have to stop giving up on manufacturing. General Niazi surrendered with 90,000 troops in Bangladesh. And it feels sometimes like all our economists keep saying that India should give up on manufacturing and just focus on services. Raghuram Rajan makes the case. Many other people make the case. I think that's a mistake. It's a defeatism which is self-fulfilling, right? Technology has automated many processes. It's much less labor-intensive than it used to be. But 11% of our labor force working in manufacturing is absolutely the wrong number. It is the same as post-industrial United States. So clearly there was something wrong in India's manufacturing ecosystem where China, starting at the same time as us, became the factory to the world. While we became the pharmacy to the world, we became the software capital of the world, but we didn't become the factory to the world, even though we have 45% of our labor force still working on farms. I mean, the most embarrassing number about India 35 years after 1991 is that 45% of our labor force still works on farms. And we were, at least I also 20 years had started believing that China's farm to non-farm transition is happening to factories, India's farm to non-farm will happen to services. Customer sales, logistics, and but sales, customer service, and logistics are the three fastest growing segments of India's job market. But I think that was an incomplete and a wrong view to the world. So I think improving the infrastructure, which we already have done quite substantially, I think taking on the labor laws, which the labor courts have done to some extent. But there's still an unfinished job of reducing the regulatory cholesterol, whether it is the amount of criminal provisions. Chand Vishwas is some progress last week, which the 12,500 ways to go to jail were removed by a single bill. But I still think that the mentality of prohibited till permitted, I have been asked 122 times in my life by a bureaucrat, who allowed you to do this? Now, from a theory
122 times.
I have kept a list specifically of different things that I've tried and launched, and they said, because it's a profound question, right? All innovation has to be permissionless, right? The notion that innovation will require permission is holding India back. I think the interrogation of the administrative state also has not happened. So regulatory cholesterol, I need to move beyond the slogan of regulatory cholesterol to make it specific. What is regulatory cholesterol? It is the thousands of ways that go to jail. But it is also the multiplicity of administrative instruments. The Constitution only allows acts and rules. Now, as a country, say we will have acts and rules. You don't have a single source of truth in India for where you can go and say, is this act or rule applicable? Is it live? So I think there's a huge amount of unleashing of entrepreneurial energy. And, the challenge is everybody, when I talk about regulatory cholesterol, thinks I'm talking about big companies. Big companies have sorted this problem out. For them, regulatory cholesterol...
They have means of taking on the regulatory cholesterol.
For them, it's a thorn in the flesh. It's not a dagger in the heart. Even Teamlease, the company I founded and now I've stepped down from, has 160 guys in regulatory affairs. these guys are dharti pe boj, they are cost center. They are cost center. But it doesn't bother me if I have 700 court cases against me in labor laws, right? Because I believe that...
Do you actually have 700 court cases against you?
Yes, because labor laws were written in a way that I don't think you could comply with 100% of India's labor laws without violating 10% of them. So I think now there is a huge move on ease of doing business, deregulation, decriminalization, but we are far from the horizon. You know, we cannot compare ourselves to where we were. India and China had the same per capita GDP in 19. They are not smarter than us. They are not more hardworking than us. But now they are 5 times more than us because entrepreneurship was unleashed.
So how do we then take on China? There is not a sector today where China is not at least competing with the US and in some cases perhaps even leading the US. What will it take for us to be able to unleash the entrepreneurial spirit, the entrepreneurial power, but also the innovation quotient, which is the big sort of, constraint that seems to be holding us back as well?
Yes, I mean, I think at its heart, it's going to be human capital, right? The repair, prepare, and upgrade of our citizens, the school system, the skill system, and the college system. But if you wanted to take it right to the end, because finally you can't repair people who didn't receive prepare. We can't teach people in 3 months or 6 months what they should have gotten in 12 years. But we also need to...
Is there any political capital or will to want to do that?
Oh, I think the biggest problem in that is how do you get something done when after everybody who matters agrees with you, right? Nobody disagrees with my case that if we don't fix government schools, India will always struggle because at the exit gate of the K-12 system, it's kind of late. You can teach somebody to be a barbender, mason, coder, but you can't teach them to be curious, confident, risk taker, team player, and innovative thinker. So I think school system fixing is a clear, and this is not that hard, right? So I think fixing government schools is a whole project by itself, but in the long run, we have to do that. I think there's some repair we can do. India only has 7 lakh apprentices. Germany has 2.7% of its labor force in apprentices. If we had the same number, we would have 15 million apprentices, right? And this is not a new idea. The 20th point in Indira Gandhi's 20-point program in 1975 was fixing the Apprenticeship Act of India.
And more recently, in the last few budgets, we've seen an attempt to do exactly that.
Exactly that. So
why is it still not taken up?
Well, I think it is the power of the administrative state, right? And the capability of the administrative. See, I hesitate to link ease of doing business with civil service reform because that then makes it undoable, right? And I'm not talking about the 6,700 IAS officers. I'm talking about the 25 million civil servants who really make the life of our employers visible. So moving from the bird's eye view, which is fiscal and monetary policy, to the daily life of a factory, right? If you want to fix the daily life of a university and the daily life of a factory, you cannot live in fiscal and monetary policy. Fiscal deficits could make countries rich. Why would a country bother being poor? And after a few years on the RBI board, I haven't made up my mind whether monetary policy is a placebo or a painkiller or a steroid. It's definitely not a medicine, right? We should allow our universities because we will never move from volume to value in pharma or move to products from services and software or create a new industry as China has created if we don't get the human capital right in our university ecosystem. So I think to be the factory to the world, to be the research and innovation hub to the world, we have to reduce the regulatory cholesterol for entrepreneurs.
I want to go back to the statement that you made about the RBI and the monetary policy, and you're not quite sure whether it's a painkiller, a steroid, or a placebo. Why do you say that?
Fed balance sheet in 2000 was 1 trillion. In 2008 was 3 trillion. It'll never go back to those numbers. It's sitting at 8-9 trillion. Quantitative easing was not very different from fiscal deficits in financings. Like in the US now, when you look back to 20 years ago, 30 years ago, fund managers were not keeping as close track of the Fed as they do today. Because the Fed balance sheet of 9 trillion has distorted capital markets, right? So I would say that we gave unelected power. Central bank independence is very important, and central banks are important for macroeconomic stability. I think bringing down the cost of capital structurally by competition in financial services. Net interest margin for Indian banks are much higher than they should be. They should come down. But I don't think you'll bring net interest margins by changing your quarterly interest rate. When you think about the US Fed, I don't think the US Fed, the last two governors, handed it over in better condition than they received it. Now, they can talk about, the patient is in the ICU, don't talk about quitting smoking. But if the patient is in the ICU for 10 years, you have to talk about quitting smoking, losing weight, or what leads to health, right? So my case for structural reform over monetary and fiscal reform, while monetary and fiscal policy is maybe easier to do, it may be delivering more short-term results. But I don't think China got to 5 times our per capita GDP with monetary and fiscal policy. I think it got there with the structural reform, which moved people from farm to non-farm, from rural to urban, from subsistence self-employment to wage employment, from informal to formal, and from school to work. So those are really the 5 transitions that they did.
And that's an interesting point that I want to talk to you about. So while we keep lamenting about regulatory cholesterol, what the government should have done, what the government hasn't done, what the government needs to do, let's also focus on the Indian entrepreneur. I mean, if you take a look at the latest Forbes listings or whatever, you've got 200 plus Indian billionaires on that list in the pecking order. But yet, we don't have Indian brands that actually compete globally. But what do you believe is truly holding back the aspiration and the ambition of the Indian entrepreneur?
I think at $2,500 per income, you would be surprised by the number of billionaires we have, right? Many of those billionaires outside pharma and IT have really come from what I call regulatory arbitrage industries, right? Where the government really matters, whether it is real estate, whether it is minerals. And that's fine. You can't run a country without real estate or mining or stuff like that. So my sense is counterintuitively, regulatory cholesterol actually helps incumbents. See, basically, what is socialism? Socialism is capitalism without competition and bankruptcy. Basically, if you remove bankruptcy and you remove competition, socialism and capitalism are the same thing, right? So I think that the regulatory cholesterol is not a case for big business. India's 63 million enterprises, 12 million don't have an office, 12 million work from home, only 1 million pay social security, only 30,000 companies have a paid-up capital of more than 10 crores. So don't get deluded by our 3-4 trillion GDP. Recognize this is only 30,000 companies with a paid-up capital of more than $1 million, $1.5 million. So I think Indian entrepreneurs do not deserve a cultural explanation for our failure. I think the unleashing of the Indian entrepreneur, in true sense of competition, of bankruptcy, your people must fail. It must go out of business. They must not be bailed out. Of competition, there must be 10 people competing for. Companies should have clients, not hostages, right? In some of our businesses, that is true. So I would be careful with saying ambition. I think we should step back and look at the structural reasons why a first-generation entrepreneur like me broke ahead after reforms, and why many more people like me who don't have no... See, IPL has made cricket more meritocratic in ways that the Ranji Trophy never did. I think private equity has made Indian business more meritocratic in ways that nationalized banks never did. I think Bollywood is versus OTT is more meritocratic because streaming doesn't care about your surname and stuff like that. So I think India has become more meritocratic.
So are we any closer to the IPL moment for Indian entrepreneurship?
Well, I think meritocracy, see, multinationals in pharma, in 1970, out of the 10 top pharma companies in India, there was only one Indian company. Today, there's only one multinational. in the top 10, right? And that is because Indian pharma companies became meritocratic, right? Many of the new generation companies, PhonePe didn't get to being 20% of the world's digital payments by being run as if it's, a traditional Indian company which didn't value talent, right? Because finally, in new generation companies, your equity takes the elevator and goes home every day. Your equity doesn't sit on your balance sheet, right? And I think most newer Indian companies, entrepreneurs also, and I think one key difference is that newer entrepreneurs distinguish between their shareholder role, board member role, and their executive role very differently, right? They're not concurrent, they're not guaranteed. Your shareholder role is yours, nobody can take it away, but your board member role depends on your ability to reconcile the next quarter and quarter century. And your executive role depends on delivering the quarter.
Do you feel confident that we are in the age of the Indian entrepreneur?
Well, one would be the beauty contest view. Life is...
What is the beauty contest view?
Well, you don't have to look like Milind Somen or Aishwarya Rai. You just have to be less ugly than your competitors. That's, to win a beauty contest.
That's a pretty high bar.
But if you look at Japan, 15% of them will die in the next 9 years. If you look at China, its debt to GDP is 350%. If you look at Europe, they are 50% of social spending with only 7% of the world's population. That's unsustainable. If you look at America, at least in my mind, the genius of America was stealing the best people in the world, public investment in science, and globalization of their companies' supply and demand chains. I think they now have a president who doesn't believe in either of the three. I think America is a unique country. It's given us all the technology of the last 20 years, but nothing stays special forever. So
Do you believe that this is the end of the American exceptionalism that we've come to recognize?
I think it is a huge, huge blow to that. That country has an ability to shoot the wounded and be self-healing in ways that many other countries didn't. So we can't ever write off America's ability to heal itself. But obviously, this does feel like a body blow.
In this current environment where there's uncertainty, not just about what this new world order is going to look like, what shape it will take, but there's also the uncertainty on technology, on AI. Do you believe that AI is going to transform the world as we know it, or do you believe that the claims being made today are exaggerated?
We are very good at predicting which jobs are destroyed by technology, but we're not good at predicting which jobs are created by technology. That the belief that today's circumstances are so special or so unique that no generation has ever faced it before. Historian Brodel used to say, be careful with fireflies and froth, right? And so obviously it is a technology which is something like we have never seen before, but we hadn't seen electricity, we hadn't seen planes, we hadn't seen many things. So my sense is, of course, it will change the world. I don't think it will destroy the world. This is not COVID. I mean, this is not COVID for the labor market. I mean, it's not even climate change. I think it's passing shower for the world to adjust to what kind of jobs can be done better by a machine and what kind of jobs can be done better by people. So I would say it's too early to tell. It has magnificent labor market effects of empowering people and increasing productivity. It has some devastating effects on replacement of people. So the net calculation is still, anybody who's doing that either knows everything about the world or nothing about the world, and those two extremes are not.
Is it a passing shower for India's IT services sector?
I think it is a process of adjustment. I have not adjusted my long-term target and model of 5 million people working in software going to 10 million.
By when?
It was originally, I thought it would be 3 years, but now it'll probably be pushed out to 5 to 6 years. Primarily,
2030.
Yeah, primarily because they are system integrators, right? It's very hard to implement AI in a company, in a government, in a society. You can have these whiz-big, inch-wide deep, mile-deep products. Nobody wants a mile-wide, inch-deep product. And so we're looking at these integration of all these AI tools by companies. And it is going to require system integrators. It is going to require people who are able to make sense of this. So we are underestimating the ability or the hugeness of code writing in software implementation. in technology, in digitization. Software code writing is an important part of it, but the harder parts come before you write the software and after you write the software. So I would be careful with this presentism. I think the Indian software industry will go from 5 million to 10 million because it has innovated, just like China innovated in infrastructure and their goods supply chain. Indian IT has innovated in their people's supply chain. So I would say this is one more sort of reinvention. Will the same companies succeed? Will the same people succeed? I don't think is really matters to society. So I think in software, we have a bunch of companies, we have a bunch of entrepreneurs, we have a bunch of coders, we have a bunch of project managers. I don't think this technology cluster is in as much danger as people think.
What's the bravest thing you've done so far?
Oh, it's having children, getting married. All of them are going to be non-professional.
Well, Manish, it's been an absolute pleasure. Thank you so much for speaking to us here on Young Turks Reloaded. Appreciate your time, and we do hope that we get rid of whatever is left of the regulatory cholesterol, and may we see many, many flowers bloom and many dreams unleashed. Thanks very much for your time here on Young Turks Reloaded. We are going to take a break here, but do remember to send us your feedback. We always like to hear from you. Till next week with another conversation. From all of us here on the team, goodbye. Thanks very much for watching.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Iran says no plans for another round of negotiations with the United States and closes the Strait of Hormuz. This after US Navy seizes an Iranian cargo ship just hours after President Trump announced he's sending a team to Islamabad for talks. The 2-week ceasefire expires in 2 days. Crude oil prices flare up and stocks decline across the world after the fresh escalation in tensions at the Strait of Hormuz. Brent crude prices move towards $100 a barrel. Sensex and Nifty end with marginal gains after a volatile session. Midcaps underperformed the blue chips. Rupee weakens against the dollar to breach the 93 mark once again. India's Foreign Secretary summons Iran's ambassador and expresses deep concern after 2 Indian ships were fired in the Strait of Hormuz. The ships have reached India and no casualties have been reported. India and the US scheduled to hold trade negotiations in Washington, D.C. starting today for the next 3 days. Commerce Ministry says India stands by the deal despite US Supreme Court striking down President Trump's so-called reciprocal tariffs. HDFC Bank's board will seek the reappointment of Shashithar Jagdishan as CEO only after it gets a clearance from external law firms. Sources say a report from the law firms on the sudden resignation of the bank's chairman citing ethical concerns is expected by the end of this month. Sir Ratan Tata Trust faces a legal notice of alleged violation of Maharashtra Public Trust Act over its board composition. The board of Bhai Hirabhai Trust also moves an amendment to remove restrictive clauses that allowed only Zoroastrians to be trustees. With less than 72 hours to go for voting, the fate of 27 lakh voters in West Bengal hangs in the balance. Petitioners claim 19 appellate tribunals that were supposed to hear cases of those disenfranchised by the controversial electoral roll revision are not functioning. Supreme Court seeks a report from the Chief Justice of Calcutta High Court. Manipur is on edge once again after fresh violence grips the state. 5 people, including 2 children, have been killed in the last 2 weeks. At least 21 people have been arrested for alleged involvement in violence during a protest march. Police in Gurugram claim to have busted a racket selling fake weight loss injections under the branding of Eli Lilly's Monjaro. Police say they acted on a secret tip-off and seized counterfeit drugs worth 56 lakh rupees. All right, the top story this evening, tensions flare between the US and Iran with 2 days left for the 2-week ceasefire to expire. This as the US Navy attacked and seized an Iranian-flagged ship in the Strait of Hormuz hours after Trump announced that he's sending a team to Islamabad for talks. The US accused the vessel of trying to evade its naval blockade. In a social media post, US President Donald Trump said that the US Navy had warned the ship to stop and then, I quote, stop them right in their tracks by blowing a hole in the engine room, end of quote. The US CENTCOM also claimed that repeated warnings were issued to the ship over a 6-hour period. Iran initially contradicted the claim, saying US forces were forced to retreat. However, Iran's military later confirmed the seizure and warned it would respond and retaliate to what it called an act of armed piracy. The IRGC said the ship had been traveling from China. This comes as Iran's president told Pakistan's Prime Minister Shehbaz Sharif that Tehran suspects the US will repeat what he called unreasonable behavior and bullying. All of this comes as Iran casts doubt on a second round of talks taking place in Pakistan's capital, Islamabad. Tehran has said it has no plans for another round of negotiations with the US. The spokesperson of Iran's foreign ministry, Ismail Baghai, told he also said that there are no plans for a second round of negotiations with the US as of now. He also accused the US of violating the ceasefire since it began. The fresh escalations have pushed crude closer to the $100 mark. Traffic in the Strait of Hormuz has returned to a standstill after Iran closed the waterway over the weekend. However, Kepler data shows over 20 ships passed through the strait on the 18th of April. This is the highest number of vessels that have crossed the waterway since 1st of March. Meanwhile, in Lebanon, Israel has continued to demolish homes and other buildings, including educational institutions in villages in southern Lebanon. This comes even as a 10-day ceasefire remains in effect between Lebanon and Israel. The Israeli military has said its forces remain deployed in the area to tackle continued activity of militant group Hezbollah. AP has reported that nearly 5,000 people have died across West Asia since the conflict began. At least 3,000 people have been killed in Iran, over 2,300 people have died in Lebanon, and more than a dozen have been killed in the Gulf states. The war has wiped out more than $50 billion worth of crude oil production from global markets. Over 500 million barrels of crude and condensate have been lost since the conflict began. Manisha Gupta has more on crude prices and the monetary impact of the war on the sector. Manisha.
Well, it continues to be very, very volatile for the crude oil prices after that 10 to 11% of a decline on Friday to almost 6 to 7% of gains in the Asian markets right now. This is as we have had the geopolitical tensions between US and Iran flare up yet again, with the US Navy freezing and seizing Iran-flagged vessel in Gulf of Oman. And Iran also has targeted ships reasserting control of Strait of Hormuz. So we are back again at the same level therein. with expectation that the second round of peace talks, which are expected to happen today in Islamabad, perhaps can get a more permanent resolution therein. Having said that, it is about the crude and products that already have been lost, with markets believing that even if the war was to stop tomorrow with Strait of Hormuz opening as well, it would take anywhere between 4 to 8 months for these crude supplies to come back. You have 500 million barrels of crude and condensate out of the market right now. 80 oil and gas facilities have been damaged within West Asia there. And it also is about the Gulf Arab countries, which are losing to the tune of around nearly 8 million barrels per day of crude every single day. Now, when you look at jet fuel exports from Middle East, which is Saudi Arabia, Qatar, Kuwait, Bahrain, Oman, UAE, etc. In the month of Feb, the jet fuel export was 19.8 million barrels per day, which in March and April has come down to just about 4 million barrels per day therein. So the US is looking to renew sanctions on sanction waivers rather on Russian oil at sea, and that perhaps could lead to 200 million barrels being taken off or consumed by Asian countries. A bit of a support coming in there. But until the time you see a resolution to this whole thing in West Asia, the markets do believe that one, the crude prices will continue to be volatile, and two, $85 a barrel continues to be a strong support as well.
All right, thank you, Manisha, for that. A massive fire broke out at an HPCL unit in Rajasthan. This has come a day before Prime Minister Narendra Modi was scheduled to inaugurate the unit. The official cause of the fire has not been confirmed yet. According to initial reports, the blaze erupted in the crude distillation unit section of the refinery. No immediate reports of casualties have been reported. All right, on to the day's market action. Markets ended flat after a volatile session. Nifty held on to levels above the 24,350 mark. Midcap index underperformed, while Sensex rose 27 points. Nifty PSU Bank emerged as the top sectoral index, while IT stocks continue to remain under pressure. The Indian rupee has breached the 93 mark against the US dollar. Once again, a stronger dollar, elevated crude oil prices and persistent outflows by foreign investors are contributing to the Indian currency's weakness. The two Indian-flagged tankers that were fired at in the Strait of Hormuz have reached India. The vessels were not damaged and no casualties have been reported. The ships were transporting crude oil to India when they were targeted by Iranian Revolutionary Guard gunboats off the coast of Oman. India's Foreign Secretary summoned Iran's ambassador after the incident. The secretary expressed deep concern and issued a stern warning against any threat to Indian commercial shipping. India has also firmly rejected reports of any toll being imposed on vessels passing through the crucial waterway.
Motor tanker Sanmar headers, Sepa Navy, you gave me clearance to go. Sepa Navy, this is motor tanker Sanmar header, you gave me clearance to go. My name second on your list. You gave me clearance to go. You are firing now. Let me turn back.
A fresh legal notice has been sent to the Sir Ratan Tata Trust, raising concerns over its board composition. Now, the notice alleges that one of the key trusts that control Tata Sons violated the Maharashtra Public Trusts Act of 1950. The letter says the trust presently has 6 trustees, out of which 3 function as lifetime trustees. This constitutes 50% of the board, which is in direct contravention of the statutory mandate. The legal notice has called on the Charity Commissioner to convene an urgent board meeting and ensure the trust complies with the statutory limit. This as the Hirabai Trust moved to amend a deed that restricted non-Zoroastrians from becoming trustees. Now, the board of HDFC Bank will seek the reappointment of Shashithar Jagdishan as CEO only after it gets a clearance from external law firms. Sources say a report from the law firms on the sudden resignation of bank's chairman citing ethical concerns is expected by the end of this month. Furkan Morkan brings us more details.
So what we learn is that the HDFC Bank will be sending the name of its CEO Shashithar Jagdishan for reappointment only after the clearance from the law firms. The bank had appointed Vadya Gandhi, Trilegal and a top US-based firm to review the resignation of its former chairman, Atanu Chakraborty, who left unexpectedly citing ethical differences. Sources tell CNBC TV 18 that the bank's board was of the opinion that the bank should go for Jagdishan's reappointment only after two things. One, an unqualified opinion from the independent auditor, and two, a clean chit from the law firms. With auditors giving unqualified opinion in the Q4 results, one part is covered. We have been told that the report from the law firms is expected by the end of this month. It's important to note that Jagdishan's current term at the helm of HDFC Bank is set to end by October 2026. As per RBI guidelines, the bank should select a fresh candidate or reappoint the existing CEO 6 months before the incumbent's term expires. So ideally, by the end of the May, the bank should have moved for the reappointment of the CEO. We reached out to the bank for the official response. We are still awaiting their response back to you.
Right, thank you, Furqan. Private lenders, ICICI Bank and HDFC Bank, both have reported stable set of numbers in the fourth quarter, beating estimates on most parameters on an annual basis. ICICI Bank's net profit rose over 8%, while HDFC Bank's profit jumped more than 9%. Net interest income for ICICI Bank rose over 8%, while HDFC Bank's increased to more than 3%. Asset quality for both banks improved on a sequential basis. India and the US are scheduled to hold trade negotiations in Washington, D.C. starting today for the next 3 days. Commerce Ministry says India stands by the deal despite US Supreme Court striking down President Trump's so-called reciprocal tariffs.
An Indian delegation is in the United States for trade talks with the American side from 20th to the 22nd of April. Now, several issues would be discussed, not just the chief negotiator, but also the deputy chief negotiator and several track leads have gone to the United States. Now, post-issuance of a joint statement for finalization of a BTA between both the sides, several developments have transpired. The Commerce Ministry indicated that several developments have taken place post the finalization, which included the Supreme Court order in the United States, the removal of reciprocal tariffs, the removal of IPA tariffs, and subsequently the levy of 10% tariffs by the United States. So these issues, of course, would be discussed, and both the sides would be sitting across the table to discuss all pending issues. Both the sides are also going to discuss how the structure of tariffs is going to be like post these developments, and all pending issues would be taken up. India has also objected to the trade investigations which have been initiated by the United States on several countries, including India, and has indicated that there is no violation from India's side either on labor issues or on excess capacity, and has sought that these issues better be solved bilaterally.
Right, thank you, Abhimanyu, for that. Shifting focus now, Prime Minister Narendra Modi met South Korean President in the national capital today. The President is on a 3-day state visit to India from the 19th to the 21st of April. This is the first Korean presidential visit to India in over 8 years. Both nations are aiming to double bilateral trade to $50 billion by 2030. The nations also aim to strengthen strategic ties in semiconductors, shipbuilding, AI and defense. All right, time for a short break. Coming up next, police in Gurugram claim to have busted a racket selling fake weight loss injections under the branding of Eli Lilly's Bonjaro. More details when we return. Welcome back. The death toll in the Vedanta power plant blast in Chhattisgarh's Sakti district has risen to 24. A preliminary probe has found that the blast occurred as the accumulation of excessive fuel inside the boiler furnace led to a pressure buildup. Police officials said that the initial probe points to lapses in maintenance and negligent operation. Chairman Anil Agarwal has been named in an FIR filed in connection with the blast. Industrialist and Member of Parliament Naveen Jindal said the tragedy was deeply painful but questioned naming Agarwal before the investigation. At least 23 people have died in a massive blast at a firecracker factory in Tamil Nadu. The blast also injured 6 people. Officials said the friction of the chemicals likely triggered the explosion. Villagers reported hearing the blast several kilometers away, and witnesses said they saw plumes of white fumes rising over 50 feet. Officials also added that the license of the firecracker unit may be cancelled. Manipur is on edge once again after fresh violence gripped the state. 5 people, including 2 children, have been killed in the last 2 weeks. At least 21 people have been arrested for alleged involvement in violence during a protest march. The Gurugram unit of the Drugs Control Department has busted an alleged syndicate involved in the sale of spurious anti-diabetes injections belonging to Pharma major Eli Lilly. The department has seized stock worth over 56 lakh and arrested 2 individuals in a late-night operation over the weekend. Timsy Jaipuria joins us now with more. Timsy, what was uncovered?
Well, yes, that's what officials are saying, and that's what we've learned from our sources, that acting on a specific tip-off, officials were alerted to the illegal sale of suspected counterfeit versions of Mounjaro's quick pen injection, which is an anti-diabetic diabetes drug in multiple strengths ranging from 2.5 mg to 15 mg. Now, this was a joint effort between the state drug controller, that is the state drug inspector, and police of Gurugram, who actually caught hold of this syndicate by seizing a car which was carrying these injections which were worth over 56 lakh rupees, and these injections were being seized from Supermart 1 in DLF Phase 4 at around 7:25 in the evening on 18th April, and this entire exercise continued till early hours of 19th April. Now, 2 people have been allegedly also arrested. Mujammil Khan, who claimed to be a medical representative, and Avi Sharma, to whom this consignment was getting delivered. But when he was asked by the officers to show a proper sales license, he could not produce so, and thus these 2 are allegedly now under arrest under various provisions of the Drugs and Cosmetics Act. Now, both Avi Sharma and Mujammil are being they are being arrested under the charges that are related to spurious drugs and sales without license. Also, investigators are now probing the wider network, if at all exists, in Gurugram or nearby areas. Also, they say that these drugs that have been seized have a lot of discrepancies. They were not stored under the proper medical conditions, that is, but in cold conditions. Also, these drugs were found to be having several discrepancies on the labels, including font mismatch, punctuation marks, etc., which clearly shows that these were spurious drugs. Further investigations are underway. Let's see whether this is a larger syndicate or just a small one working. Back to you.
Right, thank you, Timsy, for that. Meanwhile, Eli Lilly has responded to the fake drug racket in Gurugram, saying that the company takes patient safety extremely seriously and welcomes regulatory authorities' action against illicit medicines. The pharma giant added that it will continue to work with authorities to protect patients from the risk of counterfeit products. Now, campaigning in West Bengal and Tamil Nadu has hit fever pitch with less than 72 hours to go for voting. The fate of 27 lakh voters in West Bengal hangs in the balance. Sante Gora brings us all the details.
The first phase of voting in West Bengal will take place in 72 hours, and the fate of lakhs of voters whose applications are pending at appellate tribunals is still up in the air. Last week, the Supreme Court ordered that voters whose appeals are allowed by the tribunals by 21st and 27th April will be allowed to vote in these elections. Around 34 lakh applications are currently pending at tribunals. Advocate Devdatta Kamath informed the court on Monday that tribunals are accepting only online applications, leaving many other voters without representation. The Supreme Court has sought a report from the Kolkata High Court, but the next hearing is on 24th April, but the voting for the first phase is on 23rd April. So for now, the fate of these voters remains uncertain. Narendra Modi, in back-to-back rallies on Sunday, attacked the Trinamool Congress for not supporting the Women's Reservation Bill. The bill, however, was passed in 2023. The special parliament session was called for a constitutional amendment that linked the implementation of the Women's Reservation Bill to the delimitation exercise using the 2011 census instead of the ongoing census, which is what the 2023 bill had proposed. Despite this, the Prime Minister accused TMC of being anti-women and called the party Ma Virodhi. Mamata Banerjee in her rebuttal said that TMC's women representation in the Lok Sabha is 37% and in the Rajya Sabha is 46%. She also alleged that the Bharatiya Janata Party has poor women's representation and tends to allot tickets to women in seats with low winning probability. Moving on, campaigning in Tamil Nadu and West Bengal is at its peak. In an unusual development, Andhra Pradesh CM Chandrababu Naidu will campaign in Tamil Nadu for the NDA today and on Tuesday, focusing on Telugu voters. Rahul Gandhi has also begun campaigning in Tamil Nadu amid a reported rift between Congress and the DMK. Mamata Banerjee continues her campaign relentlessly in West Bengal. And Union Defence Minister Rajnath Singh, BJP President Nitin Nabin and CM Yogi Adityanath are also addressing rallies to win over voters in Bengal. As campaigning peaks, high-profile transfers continue. Tamil Nadu's IG Intelligence is the latest high-profile transfer, joining the list of officials, including the Chief Secretary and Home Secretary of the state. In West Bengal, action in the alleged money laundering case involving IPAC continues. The director of IPAC has been summoned by the ED for questioning on Monday, and Mamata Banerjee has said that IPAC employees will be hired by TMC if they are forced out.
All right, thank you, Santhe, for that update on elections. Let's also talk about the other development that we are tracking before we wrap. The Reserve Bank of India has rolled back some stringent forex measures announced on the 1st of April. RBI had disallowed corporates from rebooking cancelled contracts. That has now been rolled back. Banks were also not allowed to offer overseas hedges to corporates. That has also been rolled back. So this is the big development that we are tracking. Anindya Banerjee of Kotak Securities joins us now. Mr. Banerjee, thank you for making time. Is this a significant rollback of the RBI's 1st April circular?
Very good evening, and thank you for having me. It's actually not a rollback. First of all, I would like to clarify. See, the RBI has $100 million NOP limit for each bank state. It's just that RBI had a second condition. It says that you cannot even enter into a trade with your related party entities with the offsetting trade, which was a typical way the arbitrage used to happen onshore and offshore. RBI now has clarified if you have that on your books, you have the option to either roll it to maturity or cancel and exit. And secondly, if it's a genuine back-to-back hedge, then only it can be continued. So that is the clarification I think the RBI has done. It has not been a rollback.
That's an important detail there. And as a follow-up, I want to understand from you, so 10th of April was the deadline to square off excess positions greater than $100 million. Should we assume, given the circular today, that not all banks would have squared off their positions?
See, this $100 million NOP limit was the first condition. So they had to comply with that. Within the 100 million, if they have any positions, it had to meet the second condition, which the second circular which came out after a couple of days. So now the RBI has given some exemption on the second condition. The 100 million limit stays as it is. There is no change in that. They are not saying anything whether if you are still holding what to do with it. They're simply saying as far as related party transactions are concerned, this is a clarification.
All right. One final question. The door for currency speculators remains firmly shut, right? There's no change in mind as far as that fundamental point goes?
Absolutely right. The RBI's overarching theme is clear that they are snuffing out all forms of speculation from the USD market.
All right, great. Mr. Arindam Banerjee, thank you so much for all these clarifications and for joining us on CNBC TV 18. With that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV 18.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Razorpay will file confidentiality with SEBI. This comes as PhonePe paused its own IPO plans due to global tensions. It is aiming to raise $600 million to $700 million, but is now targeting a valuation of $5 to $6 billion, quite a bit lower than its previous $7.5 billion mark.
US-based Glade Brook Capital is in discussions to invest $20 to $25 million in Sarvam AI's $320 to $350 million funding round, valuing the AI startup at $1.5 billion as per a report. Strategic investors like NVIDIA, Amazon and HCL Tech, alongside venture capital firms, are also participating in the round.
AI coding startup Cursor is close to securing over $2 billion in new funding. This investment could value the company at $50 billion. Returning investors like Thrive and Andreessen Horowitz are expected to lead the round. NVIDIA may also participate.
Digital investment platform Grow has reported more than double its profit to 686 crore rupees, while at the same time its revenue from operations rose 88% on a yearly basis to cross 1,500 crore rupees. The company's revenue from operations increased to 1,505 crore rupees in Q4 FY26 from 801 crore rupees in the same quarter last year.
U.S. National Security Agency is reportedly using Anthropic's new model called Mythos. The company has given restricted access of the new model to a handful of firms, citing cybersecurity risk. Anthropic CEO Dario Amodei meets White House Chief of Staff and Treasury Secretary Scott Bessent, despite being blacklisted by the Pentagon. Well, those are the headlines we've been tracking for you this evening on What's Brewing Today. Wow Momo FMCG, the packaged foods arm of Wow Momo Foods, has crossed 100 crore rupees in annual recurring revenue, becoming the first QSR-born brand in India to achieve this scale in FMCG, clocking 100% year-on-year growth and building a strong omni-channel presence across quick commerce, modern retail and general trade. The company is rapidly expanding beyond frozen momos into categories like cup noodles, Korean noodles and even frozen desserts. So what does it take to turn a QSR success into a scalable FMCG powerhouse? Joining me now is Sagar Daryani, the co-founder and CEO of Wow Momo Foods. Sagar, welcome back to Startup Street. Crossing 100 crore rupee ARR in FMCG, a first for a QSR-born brand in India. What have been the key levers behind this 100% year-on-year growth, Sagar, in your FMCG business?
Hi, Shruti. Thank you so much for having me here once again, and good to see you again. So basically, Shruti, for us, we've always believed that, we're not an omni-channel business, but a multi-channel business. So, selling online and offline was always omni-channel, but I think getting into the shelves made us multi-channel. And, I've always believed that dining in is an occasion, delivery is an occasion, and having your favorite food at home is an occasion. So we all have grown up eating Maggi. I mean, have been a big fan of Maggi, but what can be the next best replacement to Maggi, where you can have a 2-minute momo, quickly served between your Zoom calls, you fall short of food in your house parties, and how can you just have instant food there? So I think what we did is that, we worked upon our packaging. We ensured that, it's easy to cook within 2 minutes. Don't have to put a lot of effort. It's very easy to eat, convenience. And at the same time, all the best sellers in QSR, we could easily ramp it up into FMCG. So there was no, there was no pilot to understand as to, what customers like, don't like. We already know what customers like, what they don't like. So it was just served to them on a platter. And I think that's led to our success. Okay. And I think our mantra going forward is going to be, converting all the best sellers in the menu to FMCG and make it available in your homes.
All right. Sagar, Wow Momo FMCG is present in 450 plus cities with over 6,000 touch points. So which channel is driving the most growth today? Is it quick commerce, modern trade or general trade?
So as of now, we've only focused on quick commerce and modern trade, and we've built the team accordingly. So 52% of the revenue comes from quick commerce, and roughly about 48 comes from modern trade. Again, modern trade has two parts to it. One is the national modern trade brands like the Reliance, D-Marts, Spencer's, Spars of the world. And then what's really helping us grow is the regional modern trade, players like Ratnadeep, Vijayata in the south, Arambagh in the east, Modern Bazaar in the north. So I think it's a mix of modern trade and quick commerce. We are now entering GT in a very small pilot way. We are doing a pilot in Karnataka, and let's see how that goes. But GT, we will play it one step at a time.
All right. Sagar, you started with frozen momos, but now categories like cup noodles and Korean style noodles are gaining traction. With cup noodles already doing about, 3 crores a month, do you see this becoming your next big growth engine?
Not really, Shruti. I think cup noodles is just a start. So just to give you give you a platform, the entire noodle category in India is about 15,000 to 18,000 crores. Out of that, cup noodles is only 600 crores. So for us, cup noodle was more of a pilot. What I'm betting big on is the packaged noodles, the pouch noodles, which again is the likes of your Maggi and Nissin. And then, you have Yippee, etc. So I think we are betting big on that. I think cup was just a launch and more of a convenience play for us. I think pouch noodles is something which we are betting big on, and betting very, very big on Korean. I mean, the Korean range is growing at a 30 to 40% CAGR across the country. And I think the whole K-pop culture, the K-drama culture has really picked up in a very big way. So, trying to get the same kind of products with the same kind of quality that generally is imported into the country. I mean, we're a very proud Make in India brand. So trying to give Indians a Make in India feel of a similar product, which generally is imported and is more expensive.
Okay. Sagar, you're also entering frozen desserts with kulfi. How do you see it competing with popular FMCG brands? And what else is in store? What can consumers look forward to?
I think for us, we're very clear that we're working on two platforms. One is the frozen, one is the ambient. I think in ambient, it's going to be noodles for us for the next 1.5 years. I think there's a lot to do with the noodle category, with us also entering general trade. When it comes to frozen, I think what we've done is that before we came in, in frozen, you only had French fries as a hero category. So I think, along with us, there's a competition brand called Prasuma. I think both of us have really built the Momo category, and Momo has become a hero product in frozen space. I personally believe that with ice cream, but no one has really thrived on kulfi. And for us, when we defined WOW, I think we've always stood for converting a roadside food to a brand. So Momo was a roadside food. We made it a brand. We packaged it. Same thing goes for kulfi. I think we're experimenting with kulfi. We are coming up with kulfi, which has got the the rich rubbery feeling into it. It's full of malai, and people are going to just eat and crave for more. So I am hoping that kulfi will be a very big category creation for us in times to come. And I'm very, very bullish with the kulfi play, especially with the kind of tropical climate we live in.
Sure. Sagar, let's now talk about the LPG situation. How has WOW Momo Foods adapted to the supply challenges? And is the LPG shortage pushing consumers towards convenience foods? Are you seeing a structural shift in eating habits, or is this just a short-term spike?
So, firstly, for us, all our WOW Momo stores were always on electricity. So none of the stores were shut. For us in WOW China and WOW Chicken, we did have LPG issues. But I think the industry, with the support of the OMCs and support of the government, I think now we have found a way where, LPG shortage is a concern. It's a very important resource for us. But, we are all being able to manage. So in the initial days, it was very scary. We all had limited menus. We had limited operating hours. But today, if you ask me across the country on behalf of NRA, I can say that, not a single restaurant is shut. So I think that's a good sign. However, a lot of movement is happening towards PNG. A lot of shift is happening towards electricity, and electrical load takes time to come. However, we did see a ramp up in the kappa noodle and the packaged noodle category, when the initial crisis had come. And also, from what I hear and I see that commercial induction and residential induction used at home, the sales went up by 5x to 9x, right? So, people are thinking about alternative ways of eating. I personally believe this LPG shortage is a short-term thing. I wouldn't bet big on, the category growing on this. However, people are moving to meals that are more easy to eat, easy to carry, easy to prepare.
Okay. All right. Sagar, you're planning to add, 150 to 200 stores with a sharper focus on Tier 2 and Tier 3 markets by next year. You're also targeting to reach 1,200 crore rupees in revenue by next year. Are you on track to achieve these targets?
So last year, Shruti, we achieved 99% of our AOP numbers. So kudos to the team. I think everyone did a great job. We opened 200 plus stores. I think for this year, we are looking at anything between 150 to 200 stores. We are now in 90 cities. The goal is to get to about 150 cities in the next 2 years. Personally, I've always believed that my role model brand Domino's, if they can sell a 200 rupee pizza in 600 cities and towns, we can definitely sell a 100 rupee momo in 600 cities and towns. So I think the market is huge. It's big. I'm betting big on Tier 2, Tier 3, the real Bharat. That's where the juice is. And the aspiration levels are very, very high.
Sure. Sagar, before I let you go, one final question. You're already exporting to multiple markets like the UK, GCC and Europe. Which geographies are showing the strongest traction for you, and where do you see the next wave of global growth coming from?
GCC was a big traction in FMCG, but unfortunately with this whole war, it's really plummeted. But I'm hoping that the bounce back will happen sooner and stronger. However, I think the European markets like Netherlands, like places like Germany are picking up quite well. North America is something I'm very bullish on, and so is Canada. For us, the initial phase in Canada and North America has just begun. But we had a very successful last year with the GCC, where from 1 container, we moved to 3 containers a month. And, we were available across all Lulu stores, with Lulu being our sole distributor. However, I'm hoping and I'm keeping fingers crossed that the GCC bounces back well. But at the moment, it's a bit dim there on that part of the world.
Okay. All right, with that, Sagar, I'll have to wrap up our conversation. Many thanks for your time, and thank you so much for joining us on Startup Street today.
Thank you, Shruti. Thank you so much.
And moving on, India's backpacker hostel segment is coming of age, and the Hosteller is doubling down on that opportunity. The company has raised 150 crore rupees in a Series B round led by Promaft Partners, marking the largest institutional fundraise in India's hostel space. Founded in 2014, the Hosteller today operates over 75 properties across 13 states and has hosted more than 20 lakh travelers. With strong unit economics and a rapidly expanding footprint, the company is now targeting 25,000 beds over the next 3 years. It's also looking beyond stays, building a full-stack travel platform with its upcoming super app. Joining us now to talk about the growth roadmap is Pranav Dangi, the founder and CEO of the Hosteller. Pranav, thank you so much for taking time out and being here with us on Startup Street. You know, you sort of started the Hosteller back in 2014, which was long before backpacker hostels became sort of mainstream in India, right? So what gave you the conviction that this could become a category-defining business? What made you start it?
Oh, this comes back from my personal experience when I was in Europe as a backpacker traveling for 6 months and with not a big budget on my pocket. I was searching for budget stays, and luckily I landed up at a hostel. And eventually in those 6 months, I traveled to more than 20 countries and stayed in more than 50 brands. When I came back to India, I started traveling. That bug was there, and I wanted to identify if India had any hostels at that point in time. And to my surprise, there were none. Backpackers, foreign travelers at that point in time in India were staying in homestays, guest houses, I would say 1, 2, 3-star category of hotels, but nothing was close to be a backpacker hostel. So there was this white space that existed in the year 2013-14, which is what we tried to fill. And I think with our 75 plus properties today, we have been able to build the category ground up and then hope that in the years to come, we can further take this category to, I would say, being the category with highest number of properties in the country.
Sure. And, you know, investors and even people who go to these hostels, right, they're clearly betting on experience over star ratings, because when you go to a hostel, it's about having that community. It's about having that experience when you're there. What are you sort of seeing on the ground in terms of how Indian travelers are sort of evolving, and how much of this demand is coming from tier 2 and 3 cities?
Oh, absolutely. I think back in 2014, only a handful of us knew what backpacker hostels were. So the first few years of our company went into educating the hostel audience to create a new set of traveling community altogether. And today we can proudly say that out of 10 people who come, 8 are aware of what a backpacker hostel is, how coexisting, co-living happens in a hostel, how hostels are more than just a bed or a private room, but it is more about meeting people, networking with them. And we, at the end of the day, become an enabler for people to come together. We host a lot of events. We do a lot of walks, tours, hikes all around our properties. And that's what brings people together and gives them a memory because of which they come back again and again to Hosteller.
Absolutely. And, you know, you've raised this 150 crore rupees. It's one of the largest in the hostel space. Where do you plan on sort of deploying this capital first? Are you looking at expansion, tech, or sort of building out that travel super app that you've spoken about?
So, yes, we want to do a lot of things with this money, but primarily the funds are going to be invested in expansion. That's where we need most of the money. Today, we are present in more than 50 cities. So the first agenda is to go deeper into these cities. Today, we have 1 or 2 properties in these cities. We want to have at least 4 to 5 properties in these cities, and then further add those destinations where we have not been present. So a lot of expansion is definitely going to come in South India, as well as the eastern part of the country now, where hostels are not as penetrated as it is in the north or maybe west or south. So northeast is definitely one of the key region where we want to expand. Talking about the travel app, I would say that requires a lot of tech capabilities and integrations and partnerships, but not really. It is not really a capital intensive project for us, because now having spent over 10 years, we have great partnerships which we can leverage now and become a one-shop travel platform for people for the need of accommodation, F&B, mobility, experiences, anything that they would like to do during their trip.
Sure. And, your investors have highlighted strong unit economics. Can you sort of break that down for us? What does profitability look like at a per property or per bed level? And how scalable is this model? And if you could take us through what are the kind of revenues you're currently clocking? Where do you hope to end this year?
Sure. So we are currently at an MRR of almost 15 crore. This year, our target is to close anywhere upwards of 200 crores annually. Also, with respect to the unit economics question, we have a very strong unit economics, operational profitability on a property by property level. We clock somewhere close to 30% operational margins once we see that a property has spent 12 plus months and more in the market. Our costs are well distributed. We work on a lean hospitality model, and that gives us an edge over many hotels and different kind of products in hospitality with having such a high operational margin.
And you're targeting 25,000 beds over the next 3 years. What are the key levers that will sort of help you scale at that pace without compromising on experience?
So what we understood that we are a human intensive and human first, I would say, business. So the most strongest, I would say, the lever that we are building on today is our human capital. We, in fact, are coming up with 2 training centers for our human resources where everyone will get trained in, and then they will be hired from hospitality and trained under the SOPs of the brand. So that's where we want to put a lot of focus on, which is our human capital. The other things that we are working on is definitely the real estate side of the business, where our business development team is constantly working across different regions and trying to source the best of the properties for our travelers.
And if we want to talk travel trends, what are the fastest growing destinations on your platform right now? And are there any surprising hotspots emerging beyond the usual, sort of Goa, Manali circuit?
No, so yes, there are many destinations that are now coming up in India. For example, there's a place called Vagaman in Kerala. There's another place in Kerala called Varkala. There is a place called Chakrata in the north. So what I want to, at the end of the day, say that is that people are looking beyond those tier 1, tier 2, Shimla, Manali, Mussoorie sort of locations, and they are escaping to those places which are still not that prominent on the map, but should be there in the next 5 to 7 years. So a lot of interest has now moved from the typical destinations that used to exist in India since, I would say, eternity. But now people are moving towards those lesser known places for leisure, for getting away, for just a detox from their professional life in the city, and probably be in a weather which is more conducive for leisure activities.
Absolutely. So people looking beyond the usual thing. And if you could quickly tell us, how soon will we see your travel app, your travel super app? Are you looking to become the go-to platform for a backpacker's entire journey, or sort of stick to experiences to mobility?
So as I said, we are looking to become a one-shop travel platform, which would cater to the accommodation, food and beverage, mobility and experience side of the spectrum. And as you asked, we probably should launch this within this year, on or before December this year.
All right, on or before December this year. All right, Pranav, many thanks for joining us on the show, and we wish you all the best on this journey.
Thank you. Thank you very much.
Well, with that, it's time for us to head into a short break. But coming up next, Sense AI flags a massive shift in the AI landscape, from faster startup scale-ups to failing costs. Aishwarya Anand speaks to Sense AI's managing partner Rahul Agarwal to decode more. Stay tuned.
Welcome back. You're still with us on Startup Street. Sense AI's latest State of Artificial Intelligence 2026 report points to a rapid shift in how AI is being built and deployed, with startups scaling faster, costs falling, and enterprises accelerating adoption. But even as momentum builds, questions remain around where real value will accrue and how sustainable the cycle is. Aishwarya Anand caught up with Rahul Agarwal of Sense AI for more. Take a look.
You've linked the current AI investment cycle, which is of nearly $800 billion, to gold rush. So what I want to understand is the capital that's being deployed ahead of real value creation, or are we already seeing enough ROI to justify this?
So firstly, it is absolutely a gold rush, right? I mean, we've never seen so much capital and so much talent come into one space so quickly ever before in history. But the reality is we are still building behind demand. GPUs are back ordered even today, right? There is shortage of chips, RAM, power, everything is in shortage. In fact, those are the limitations AI faces today more than anything else.
AI costs have fallen nearly 98% per token, right? But compute spending is also exploding. What exactly would that mean for startups?
Fundamentally, I see this cost of compute keeping on going down, but model building costs also reducing for not for all models, but some models. Impact on startups is very clear. Fundamentally, most startups are going to be using these models to build the applications, to build the things on top which people will actually use, which businesses will solve problems with. As that trend becomes longer and longer, you will see an explosion of really productivity at the top. Real value getting created because suddenly it's so much cheaper to do things which were hard to do earlier.
It's from your report that I've learned a new term, which is two-speed AI economy, where capital is at the model layer and innovation is at the application layer, right? So does that mean that most venture returns will now ultimately come from application layer companies?
We believe so. We believe that the bulk of the returns, bulk of the value creation and compounding that will happen at the application layer. Why? It's because that's what really delivers. So think about what do I tell smart founders? I tell them that don't worry about building intelligence. Think about applying it to solve a problem, right? That's the focus.
So who is a smart AI founder in your view today?
There's a hell of a lot of innovation happening here, right? A huge amount of capital, which means the number of AI startups are going up day by day. But it's not just that there's AI startups. There's also the giants which already exist in the world, tech giants, from software industry to you name it. All those guys are today adopting AI, right? So where is the opportunity actually from a startup perspective? There is opportunity in the spaces, the narrower spaces, where the giants can't fit in. They're too big to get into smaller corners. Secondly, I'd say opportunity is vertical, not horizontal.
So now, AI startups are reaching unicorn status in like 4.7 years compared to 6 to 7 years before. So does this lean model, is it making them more, scalable, or is it making them more vulnerable to disruption?
Speed is a massive advantage. Companies which are building these lean AI unicorns are being built much faster. They're changing the world thus much faster. That the hundreds of millions in revenue that they're generating is actually impact hundreds of companies. And that change is permanent, right? That speed has got embedded not only in the unicorn itself, but in all its customers. It's made all their lives, their businesses faster. And that to me is a massive change.
So then tell me this, you've said that AI is moving from co-pilot to autonomous systems. At what point does this stop becoming productivity tech and start becoming decision-making infrastructure?
I think in certain organizations already moved there.
It's already moved there. Okay.
But I don't think that's a majority, that's a small minority. But that is happening very, very quickly. 2026, you'll see a lot more of it happen. See, today, AI still has constraints in terms of the accuracy levels. All of those pieces have certain constraints. But I mean, we no longer talk about hallucination, by the way. It's not come up in this discussion.
Conversation,
Yeah.
yes.
So when you want autonomy, real autonomy, you need to have that much level of trust and surety, right? I think that is still going to evolve. So you may get to 97, you may get to 98, you may get to 99. Ain't going to happen to 100.
So I will end the conversation by asking you what's happening at Sense. What are some of the new developments?
Before the end of the year, we would have finished investing into new startups from this one. We're going to look at between 16 to 18 startups. So we are almost at 13, another 3, 4, max 5 to go, which will be done by the end of the year. So, and also we obviously have in the fund capital available to double down on our startups.
Existing portfolios.
Yes.
Well, with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
I've been asked 122 times in my life by a bureaucrat, who allowed you to do this? You know, the notion that innovation will require permission is holding India back. Socialism is capitalism without competition and bankruptcy. Basically, if you remove bankruptcy and you remove competition, socialism and capitalism are the same thing, right? See, IPL has made cricket more meritocratic in ways that the Ranji Trophy never did. I think private equity has made Indian business more meritocratic in ways that nationalized banks never did. In 1970, out of the 10 top pharma companies in India, there was only one Indian company. Today, there's only one multinational in the top 10, right? And that is because Indian pharma companies became meritocratic, right? Indian pharma exists because entrepreneurs danced with the government. I mean, the most embarrassing number about India 35 years after 1991 is that 45% of our labor force still works on farms.
What's the bravest thing you've done so far?
Oh, it's having children. Getting married. All of them are going to be non-professional.
India's manufacturing story is one that evokes sharp reactions. It's a story of triumphs, but equally a story of missteps and failed ambitions. While we lament about regulatory cholesterol, stymieing dreams and scale, we also must credit the stroke of pen action that birthed many industries in independent India. The Indian pharma sector is one such example. From zero domestic pharma companies 4 decades ago to now being recognized as the pharmacy of the world. India's pharma sector has quietly but undeniably changed the rules of the game, making drugs affordable and accessible to millions of people around the world. In telling the story of Lupin, one of India's manufacturing miracles, Manish Sabharwal explains why Indian pharma took off, but more importantly, also shines the light on the magic of entrepreneurship. How is that some can see a future that others can't? What drives them to push the boundaries of what is possible, even when the odds are stacked against them? What gave the late Deshbandhu Gupta the courage to start up with a seed capital of 5,000 rupees, courtesy his wife, and create one of India's top 10 pharma companies that today commands a market cap of over 100,000 crore rupees with $1 billion in sales in the US market? Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. My guest today has spent his entrepreneurial journey on solving India's most fundamental challenge, not just creating jobs, but making them better. As a co-founder of Team Lease Services, he's helped shape one of India's largest human capital engines, connecting millions to employment across factories, offices, and campuses. From building India's apprenticeship ecosystem to influencing policy at the highest levels, his work sits at the intersection of labor, education, and reform. And now, in his book, Made in India, he makes a compelling case for why the country's future will be defined not by unicorns, but by the quality of its jobs, wages, workforce productivity. Blunt, data-driven, and unapologetically contrarian. Joining me today is Manish Sabharwal. Manish, it's great to have you join us on Young Turks Reloaded. Thanks very much for being here.
Thank you.
Let's address the issue of the Indian pharma story, which is what you've tried to talk about in your book. In telling the Lupin story, you've essentially told the story of the Indian pharma sector. And as I pointed out at the start, while we lament, and you have certainly lamented over the last several decades about regulatory cholesterol killing entrepreneurship, here was policy that actually provided the booster shot, the steroid almost, to create the Indian pharmaceutical industry and make it what it is today.
Well, this industry should not exist in India. I think the Indian pharma industry, our Indian pharma companies, and particularly DBG, defy the notion of destiny, right? Because no economist would predict that a country 128th in the world in per capita would be making 60% of the world's medicines, having more than 40% of the world's US FDA plants, and sell medicines in 200 countries. Now, where did that industry come from? It is really two governments on two opposite sides of the planet. The Indian government in 1970, which is 1970 Patents Act, which replaced product patents with process patents for 35 years only. It went away in 2005. And the 1984 Hatch-Waxman Act, which Ronald Reagan put in the US, where he said that, because before that, even when drugs went off patent, there was no pathway for companies to launch the generic version of those drugs. So absolutely, I think that regulatory cholesterol has held India back, but I must acknowledge that good policy can really create wonders. And the Indian pharma industry is also very different from its intellectual cousin, the software industry, because software exports 90% of their product. Its pharma industry sells 50% in India and 50% globally. So I think that companies like Lupin and Cipla are more important to India and the world than their revenues, because I don't think AIDS would have been eradicated in the world without Cipla, and TB would have been eradicated in the world without Lupin, right? Both of them are the world's largest producer of those medicines even today. And in particular, I hung it on DBG because, my father was in the police. I didn't have any money to start my company. I am a child of liberalization, private equity, venture capital was available when I started. I graduated the year liberalization started. But this pharma industry entrepreneurs, most of them grew up in the licensed Raj, which was hostile to entrepreneurship. There was no concept of venture capital. If you didn't have connections or you didn't have capital, you couldn't be an entrepreneur, right? My father, who was in the police, and my mother broke out when I said I wanted to be an entrepreneur because we said we don't have money. Only people with money can be entrepreneurs.
As did DBG's father when he said that he wanted to turn entrepreneur.
Yes, because entrepreneurs is a complex debate about whether entrepreneurs are born or made. And I'm not sure entrepreneurs are born. They have some good instincts, which all leaders have. So I think the industry should not exist. It exists because of the government, and the Indian pharma exists because entrepreneurs danced with the government rather than this stupid metaphor we have of tug of war between the government and entrepreneurs, right? Where one wins when the other loses. I think the Indian pharma industry shows that tug of war is a very dated metaphor for the relationship between business and government.
So in telling this story and the many lessons that you articulate in the book, how do we replicate the manufacturing miracle that we saw with the Indian pharma sector? How do we replicate that success across other sectors? And where do you feel most confident of being able to do that?
First of all, we have to stop giving up on manufacturing. General Niazi surrendered with 90,000 troops in Bangladesh. And it feels sometimes like all our economists keep saying that India should give up on manufacturing and just focus on services. Raghuram Rajan makes the case. Many other people make the case. I think that's a mistake. It's a defeatism which is self-fulfilling, right? Technology has automated many processes. It's much less labor-intensive than it used to be. But 11% of our labor force working in manufacturing is absolutely the wrong number. It is the same as post-industrial United States. So clearly there was something wrong in India's manufacturing ecosystem where China, starting at the same time as us, became the factory to the world. While we became the pharmacy to the world, we became the software capital of the world, but we didn't become the factory to the world, even though we have 45% of our labor force still working on farms. I mean, the most embarrassing number about India 35 years after 1991 is that 45% of our labor force still works on farms. And we were, at least I also 20 years had started believing that China's farm to non-farm transition is happening to factories, India's farm to non-farm will happen to services. Customer sales, logistics, and but sales, customer service, and logistics are the three fastest growing segments of India's job market. But I think that was an incomplete and a wrong view to the world. So I think improving the infrastructure, which we already have done quite substantially, I think taking on the labor laws, which the labor codes have done to some extent. But there's still an unfinished job of reducing the regulatory cholesterol, whether it is the amount of criminal provisions. Chand Vishwas is some progress last week, which 12,500 ways to go to jail were removed by a single bill. But I still think that the mentality of prohibited till permitted, I have been asked 122 times in my life by a bureaucrat, who allowed you to do this? Now, from a theory
122 times.
I have kept a list specifically of different things that I've tried and launched, and because it's a profound question, right? All innovation has to be permissionless, right? The notion that innovation will require permission is holding India back. I think the interrogation of the administrative state also has not happened. So regulatory cholesterol, I need to move beyond the slogan of regulatory cholesterol to make it specific. What is regulatory cholesterol? It is the thousands of ways that go to jail. But it is also the multiplicity of administrative instruments. The Constitution only allows acts and rules. Now, as a country, say we will have acts and rules. You don't have a single source of truth in India for where you can go and say, is this act or rule applicable? Is it live? So I think there's a huge amount of unleashing of entrepreneurial energy. And, the challenge is everybody, when I talk about regulatory cholesterol, thinks I'm talking about big companies. Big companies have sorted this problem out. For them, regulatory
cholesterol... They have means of taking on the regulatory cholesterol.
For them, it's a thorn in the flesh. It's not a dagger in the heart. Even Teamlease, the company I founded and now I've stepped down from, has 160 guys in regulatory affairs. These guys are dharti pe boj, they are cost center. But it doesn't bother me if I have 700 court cases against me in labor laws, right? Because I believe that...
Do you actually have 700 court cases against you?
Yes, because labor laws were written in a way that I don't think you could comply with 100% of India's labor laws without violating 10% of them. So I think now there is a huge move on ease of doing business, deregulation, decriminalization, but we are far from the horizon. We cannot compare ourselves to where we were. India and China had the same per capita GDP in 19. They are not smarter than us. They are not more hardworking than us. But now they are 5 times more than us because entrepreneurship was unleashed.
So how do we then take on China? There is not a sector today where China is not at least competing with the US and in some cases perhaps even leading the US. What will it take for us to be able to unleash the entrepreneurial spirit, the entrepreneurial power, but also the innovation quotient, which is the big sort of, constraint that seems to be holding us back as well?
Yes, I mean, I think at its heart, it's going to be human capital, right? The repair, prepare, and upgrade of our citizens, the school system, the skill system, and the college system. But if you wanted to take it right to the end, because finally you can't repair people who didn't receive prepare. We can't teach people in 3 months or 6 months what they should have got in 12 years. But we also need to unleash...
Is there any political capital or will to want to do that?
Oh, I think the biggest problem in that is how do you get something done when after everybody who matters agrees with you, right? Nobody disagrees with my case that if we don't fix government schools, India will always struggle because at the exit gate of the K-12 system, it's kind of late. You can teach somebody to be a barbender, mason, coder, but you can't teach them to be curious, confident, risk-taker, team player, and innovative thinker. So I think school system fixing is a clear, and this is not that hard, right? So I think fixing government schools is a whole project by itself, but in the long run, we have to do that. I think there's some repair we can do. India only has 7 lakh apprentices. Germany has 2.7% of its labor force in apprentices. If we had the same number, we would have 15 million apprentices, right? And this is not a new idea. The 20th point in Indira Gandhi's 20-point program in 1975 was fixing the Apprenticeship Act of India.
And more recently, in the last few budgets, we've seen an attempt to do exactly that.
Exactly that. So
why is it still not taken up?
Well, I think it is the power of the administrative state, right? And the capability of the administrative. See, I hesitate to link ease of doing business with civil service reform because that then makes it undoable, right? And I'm not talking about the 6,700 IAS officers. I'm talking about the 25 million civil servants who really make the life of our employers visible. So moving from the bird's eye view, which is fiscal and monetary policy, to the daily life of a factory, right? If you want to fix the daily life of a university and the daily life of a factory, you cannot live in fiscal and monetary policy. Fiscal deficits could make countries rich. Why would a country bother being poor? And after a few years on the RBI board, I haven't made up my mind whether monetary policy is a placebo or a painkiller or a steroid. It's definitely not a medicine, right? We should allow our universities because we will never move from volume to value in pharma or move to products from services and software or create a new industry as China has created if we don't get the human capital right in our university ecosystem. So I think to be the factory to the world, to be the research and innovation hub to the world, we have to reduce the regulatory cholesterol for entrepreneurs.
I want to go back to the statement that you made about the RBI and the monetary policy, and you're not quite sure whether it's a painkiller, a steroid, or a placebo. Why do you say that?
Fed balance sheet in 2000 was 1 trillion. In 2008 was 3 trillion. It'll never go back to those numbers. It's sitting at 8-9 trillion. Quantitative easing was not very different from fiscal deficits in financings. Like in the US now, when you look back to 20 years ago, 30 years ago, fund managers were not keeping as close track of the Fed as they do today. Because the Fed balance sheet of 9 trillion has distorted capital markets, right? So I would say that we gave unelected power. Central bank independence is very important, and central banks are important for macroeconomic stability. I think bringing down the cost of capital structurally by competition in financial services. Net interest margin for Indian banks are much higher than they should be. They should come down. But I don't think you'll bring net interest margins by changing your quarterly interest rate. When you think about the US Fed, I don't think the US Fed, the last two governors, handed it over in better condition than they received it. Now, they can talk about, the patient is in the ICU, don't talk about quitting smoking. But if the patient is in the ICU for 10 years, you have to talk about quitting smoking, losing weight, or what leads to health, right? So my case for structural reform over monetary and fiscal reform, while monetary and fiscal policy is maybe easier to do, it may be delivering more short-term results. But I don't think China got to 5 times our per capita GDP with monetary and fiscal policy. I think it got there with the structural reform, which moved people from farm to non-farm, from rural to urban, from subsistence self-employment to wage employment, from informal to formal, and from school to work. So those are really the 5 transitions that they did.
And that's an interesting point that I want to talk to you about. So while we keep lamenting about regulatory cholesterol, what the government should have done, what the government hasn't done, what the government needs to do, let's also focus on the Indian entrepreneur. I mean, if you take a look at the latest Forbes listings or whatever, you've got 200 plus Indian billionaires on that list in the pecking order. But yet, we don't have Indian brands that actually compete globally. But what do you believe is truly holding back the aspiration and the ambition of the Indian entrepreneur?
I think at $2,500 per income, you would be surprised by the number of billionaires we have, right? Many of those billionaires outside pharma and IT have really come from what I call regulatory arbitrage industries, right? Where the government really matters, whether it is real estate, whether it is minerals. And that's fine. You can't run a country without real estate or mining or stuff like that. So my sense is counterintuitively, regulatory cholesterol actually helps incumbents. See, basically, what is socialism? Socialism is capitalism without competition and bankruptcy. Basically, if you remove bankruptcy and you remove competition, socialism and capitalism are the same thing, right? So I think that the regulatory cholesterol is not a case for big business. India's 63 million enterprises, 12 million don't have an office, 12 million work from home, only 1 million pay social security, only 30,000 companies have a paid-up capital of more than 10 crores. So don't get deluded by our 3-4 trillion GDP. Recognize this is only 30,000 companies with a paid-up capital of more than $1 million, $1.5 million. So I think Indian entrepreneurs do not deserve a cultural explanation for our failure. I think the unleashing of the Indian entrepreneur, in true sense of competition, of bankruptcy, your people must fail. It must go out of business. They must not be bailed out. Of competition, there must be 10 people competing for. Companies should have clients, not hostages, right? In some of our businesses, that is true. So I would be careful with saying ambition. I think we should step back and look at the structural reasons why a first-generation entrepreneur like me broke ahead after reforms, and why many more people like me who don't have no... See, IPL has made cricket more meritocratic in ways that the Ranji Trophy never did. I think private equity has made Indian business more meritocratic in ways that nationalized banks never did. I think Bollywood is versus OTT is more meritocratic because streaming doesn't care about your surname and stuff like that. So I think India's become more meritocratic.
So are we any closer to the IPL moment for Indian entrepreneurship?
Well, I think meritocracy, see, multinationals in pharma, in 1970, out of the 10 top pharma companies in India, there was only one Indian company. Today, there's only one multinational in the top 10, right? And that is because Indian pharma companies became meritocratic, right? Many of the new generation companies, PhonePe didn't get to being 20% of the world's digital payments by being run as if it's, a traditional Indian company which didn't value talent, right? Because finally, in new generation companies, your equity takes the elevator and goes home every day. Your equity doesn't sit on your balance sheet, right? And I think most newer Indian companies, entrepreneurs also, and I think one key difference is that newer entrepreneurs distinguish between their shareholder role, board member role, and their executive role very differently, right? They're not concurrent, they're not guaranteed. Your shareholder role is yours, nobody can take it away, but your board member role depends on your ability to reconcile the next quarter and quarter century. And your executive role depends on delivering the quota.
Do you feel confident that we are in the age of the Indian entrepreneur?
Well, one would be the beauty contest view.